All right, check, check. We're live, we're live. Early bird gets the worm. Morning, everyone. It is 7:30 a.m. Eastern, nice and on time. Having a nice sunny day here in Sweden. Still about -3 Celsius, so what's that, 26, 27 degrees Fahrenheit, but not too bad. Got the coffee in hand. We're getting ready for CPI. Hopefully we'll get some action today. I would be surprised if we don't get action today. So we're going to do some good preparatory analysis here before the day begins so we can really get a sense of where things stand across the major futures markets and how we want to play them today, because we do have some cross currents and we're going to talk about those. Key to success over the long term, in my opinion, is you've got to trade the hourly chart or whatever day trading chart you're using in the direction of at least the daily chart, if not the daily and the weekly. That will dramatically put the odds on your side, and you'll be able to sustain success over a much longer period of time than other people who are out here gambling. If you gamble, you're going to get lucky sometimes, but it's ultimately going to be a bullet that catches you in the back of the head, and that's not fun. So with that all being said, let's go ahead and switch our attention to the E-mini S&P 500. Let me get a sip of coffee here. All right. Crack the neck. All right, here's the ES here. We are looking at the yearly, the quarterly, and the monthly. We have some time to go over some analysis today because in all likelihood, we will probably not put on a trade at 8 a.m. just because we're awaiting CPI at 8:30. With that said, if I see something fantastic on an odd market like platinum or copper or something else at 8 a.m. that might not be as affected by CPI, we might put it on, but highly unlikely. Most likely waiting until after CPI. Want to see that report, want to see what it does to the markets, and that should set up some great opportunities for the 9 a.m. close, 10 a.m. close, 11 a.m. close. We'll take it from there. So we've got a lot of time to prepare this morning. I wanted to get started at 7:30 a.m. anyways to make sure that we didn't have a rush. So let's get into the yearly chart here for the E-mini S&P 500. What we can see here is that we've got, oh, hey, Steven, how you doing? Good morning. How'd you sleep? Early there? We're going to go over the higher time period analysis here. So we're looking at the E-mini S&P 500, and since we have extra time today, I'm going to go ahead and start by just dissecting the yearly, the quarterly, and the monthly chart before we get into the monthly, weekly, daily. But before that, we got to know, how did Steven sleep? Is he feeling nice and rested, ready to go this morning? And more importantly, were you patient the rest of the day yesterday? I hope so. I was. I didn't even open the computer again. I turned it off and just said, I'm waiting for CPI. Time and experience has taught me it's just not a good idea to be in front of the computer when you know you shouldn't be trading. So I'm hoping that you either were patient, or if you weren't patient, hopefully you took something good and had a good result from it. So let me know, or don't let me know, whatever you prefer. All right. Oh, and I'm putting together the infrastructure for everything, because it's all going to be, there'll be like a password protected area where you can log in at your leisure and go through the lessons and all that kind of stuff. So I have to get that infrastructure in place. It'll probably take me a few more days. I've got some programmers helping me, but I'm doing a lot of it myself because I want it done the way I want it done. And it's just sometimes easier to do things yourself rather than tell people how to do it, and then they do it wrong, and then you got to tell them again. And before you know, it's like 2 weeks later and nobody did anything right. So anyways, that's the way we're going about it. So I'll let you know when that's ready. That'll be cool. And then my next step after that is to look at the indicators on TradingView, which I don't think will be a problem for my guy. So that should go pretty quickly. So nice demo trading. Good. I mean, I think it's just smart not to trade until we get some clear directional cues from CPI. All right, let's go ahead and jump into the announcement. The charts here. I ran out of coffee this morning, so I'm catching up on my coffee intake now. Take a few minutes for the caffeine to hit me. So looking at the yearly chart here, this is ES, right? So what we can see, and this is really important, you have to get an idea, in my view, of where we're headed. It's really important to know where we've been, right? So if we can understand where we've been and where we are now and how we got here, that gives us a much better chance of accurately projecting where we might be likely to go from here. So I know that's a mouthful, but it does make a lot of sense, at least in my mind. So with the yearly here, these are yearly bars right here, yearly bars, right? So going all the way back here to 2019, 2020, 21, so you can see here, 2022, this was the big, so there's your just massive trend run up on the yearly chart for the S&P 500. And remember, this is going to be the same for the NASDAQ, the Russell. So we don't need to go into this kind of detail on all of them. But for the ES, it's important, right? It's the 500 largest publicly traded stocks in the US. So this is kind of the financial economy right here in front of us on a yearly chart. And you can see 2022 was the big move down here. That was nothing more than congestion entrance down, an attempt to enter congestion to the downside here on the yearly. It failed. And so, coming into 2023, it was pretty clear we were going to have this, what we saw, which was a pushback to these highs, which we've got now. So I say all that because it's important to note that, usually when you're in a trend run like this, and this is valid for any time period, right? So if you get an hourly chart, a 4-hourly chart, a 15-minute chart, it doesn't matter what you're looking at. When you will start to see signs of weakness of a trend, this just happens to be a yearly trend, so it's obviously incredibly important. When you start to see signs of the trend weakening, which we have here, you're setting up for congestion entrance most likely, and for congestion action, which is range-bound trading. This is most likely what we're setting up for. Now, could this all just start a new leg higher and go for the next 10 years? Of course, anything can happen. I don't have a crystal ball, but it's going to have to show me it wants to do that before I'm going to believe that it's going to do that. Because right now it's showing signs of wanting to go into congestion as opposed to, kick off a new exciting bull leg of this trend run. So it's really important. So what this means with this yearly resistance up in here is that, I think we've certainly got to go retest 4,600 to 4,400 at least. Even if this is going to continue to head higher, I think it's got to revisit the true average, middle of the moving average envelope, the near low here. It's got to head back to all this stuff first, before it wants to resume higher. And I say that because on a yearly basis, unless you're in a trend run, if you go back and look at this, you'll see that the yearly 9 times out of 10 has to come and at least touch the true average for the year. It didn't do it here because you had a major blow off year in 2021. You see it just closed 2020. That was all the COVID stuff there, just open, and then bang, 2021 was straight up. We didn't touch the true average. That's incredibly rare, right? So at some point this year, we're going to touch this true average. And I would say it's going to be, sooner rather than later. So with all that happening on the yearly chart, what do we expect then? The quarterly, well, you've got a trend run up here on the quarterly. This is the quarterly chart now. But it's also got some signs here that we could see the quarterly, try and enter congestion to the downside as well. So that with this massive resistance here on the yearly and on the quarterly, that influences, how we're looking at the monthly. So the monthly, coming into this month, I was pretty bearish because of what I'm seeing on the quarterly and the yearly. But now that the monthly tried to drop and the way that the weekly has responded here this week, and I lay all this out because we're going through this to really get a sense of what's happening. Believe it or not, this all influences, every single decision that I make for my own trading during the day that we share here together on the live stream. I'm constantly thinking about how all of this is influencing that trade that I might be about to take on the hourly chart. Because when you can stack all these together, it works wonders for not taking trades where you shouldn't. It still doesn't mean that all the trades work, obviously not. It just means that you're doing everything you can to shift that edge into your favor by looking at all the higher time period charts. So when we look at the monthly, the weekly, and the daily here, what we can see, when I came in, this is the weekly here. All right, we got the monthly now there. We got the daily here to the far right as usual. So coming into this week, that big move to the downside, I was looking to see if there was going to be some follow through to the downside. There wasn't. We've exploded out of this support level. So stop number one is, I would say, probably going to get through these highs now and head up to at least that extension is what I'm thinking. And based on yesterday's close here, you see, this is important because today's the first day of the week where I have some clarity in terms of, what I want to do for this week. Because what I do is I come into the week like I did here and I said, okay, I'm bearish on the S&P, but then I wait for signs for the daily to confirm the bearishness. Obviously, the daily didn't confirm the bearishness, so I didn't get any winners on the long side, but I also didn't get caught shorting and taking losses because my charts weren't telling me that the weekly picture was valid, and that's really important. So I use the daily to confirm the weekly to confirm the monthly, and so on and so forth. So I say all that because right now, with the weekly chart blasting up out of that support level, you see that key trend line right there, that yellow dot, right at that broken near high, broken near low from last week, the dot zone here. This was that critical weekly resistance zone at 4,800 that I really needed to know, are we going to hold this or are we going to break this? And now I have that answer. We've firmly and decidedly broken through that resistance level, which means it should now really become support. It really should at 4,800. And yesterday's daily action confirms that. We're in a trend run up now on the daily chart here, and we broke through some critical levels here. These were the levels you'll recall we were watching yesterday to see these trend lines. They're right at the envelope top, the near high. I mean, there was a ton of resistance, and I wanted to see how price reacted up there. I think, I haven't looked at the intraday charts yet, but I think it did get rejected once or twice after we finished yesterday, but ultimately ended up breaking it on close. So we'll see that on the hourly chart in just a minute, but that was a strong close. You've now got all that broken resistance becoming support here. So I'm looking, this is laying the foundation. I'm looking to play the long side now today on CPI. Anything can happen, obviously, especially in these markets. If something weird happens with CPI and we just head straight down, we'll adjust our forecast. But all we can do is have a forecast coming into the day based on current data, and then trade our plan based on our forecast, and then how the live market is unfolding, based on what we thought was going to happen. Right? When those things match up, when the live market's unfolding the way we thought, we forecasted it might unfold, those are the days where you get good trades and you can make some money. And it's good to let all that match up. So what I'm looking for today on the ES is you've got a lot of support now into that true average broken near high, 48.10, 48.12, right in here. That's going to be a really key level down into that trend line, certainly 48.05, just anywhere into this general area. Just call it 4,800 to 48.10. I mean, that's looking like a very, very strong support level for ES today. So I'm excited to see CPI and what happens. It would be great. Today, I'd be looking for some sort of an exhaust to the downside, like a spike down that would suck in shorts that maybe think this rally's over. And then that's an opportunity to get long as it squeezes ever higher. Now I have the confirmation on my charts that I'm comfortable, joining the party to the upside because I've got some really key levels that broke. So does that make sense, Stephen? I know it's a mouthful, and we just spent, a good 10 minutes on one symbol here, but it's an important symbol. And, it really just, when you plan your day like this each day, you can get a lot of confidence coming in, knowing exactly what you're looking for. And, when the trade's set up in accordance with your higher time period analysis, those are the ones, of course, those are the ones you want to take, but those are also the ones where, if and when they lose, because they do, they lose sometimes. And when that happens, at least you did your homework and you put on a good trade, right? So I hope that makes sense. Check the chat if you got any questions about that on the ES while we're here, since I know you like that one. Just taking a breather while I have some coffee. I don't think we have too much latency right now. All right. Well, throw a question in the chat if you've got one, anybody. And that we'll head back to the ES if you guys have any questions about the ES. But we're looking for the long side today for ES. All right, let's go to the NQ. It's going to be relatively similar, so we don't need to go through, you know, the yearly, the quarterly, but just quickly, you know, for all you NASDAQ enthusiasts out there, this is also just looking very dangerous. This is the yearly NASDAQ chart. I mean, looking very, very dangerous up here, but that doesn't mean we won't fish up here higher or further. Right now, in fact, it is looking like that is what we're going to do. So for the immediate term, I'm now bullish because that's what my lowest time period charts, the daily and the weekly, are telling me to be. But I'm very aware of what the yearly, the quarterly, and the monthly charts are suggesting in terms of the higher time period. That's important. Okay, good. I'm glad it makes sense. All right, so the NASDAQ is the same here as the S&P 500, except the exact levels. You can see the NASDAQ's already squeezing up here pre-market. I would suspect that we're, you know, any pullback down here into 16,950 on the NASDAQ. I mean, this whole support area here needs to be, I think, aggressively bought today. I mean, it would be, anything can happen, of course. I have to always say that, not just to you guys, but I say it to myself all the time because, you know, sometimes you got to remind yourself that you can have really good forecasts, and as long as you are consistent in trading them and you've got a good methodology, then yeah, over time you'll make money. But that doesn't mean that, you know, unexpected things don't happen, especially when you're trading. That's what makes it so fun, right? So the NASDAQ, even though I'm bullish, just, you know, anything can happen, but I would be very surprised to see, you know, a move back down here. I just, doesn't look like that's going to happen. It looks like the shorts are getting, you know, pretty darn squeezed this week. So the NASDAQ is bullish. We're looking at a 16,950. Go ahead and look at the Dow. So we're setting the tone for the day. We're bullish stocks right now. You know, as we're watching the data come in, CPI comes in, some crazy thing happens. Yeah, that's why we're standing here, because we make adjustments on the fly as the intraday, you know, data is developing. But coming into the day, definitely bullish stocks here. Very clear picture. The Dow is a little bit less so. This is the Dow, but still NASDAQ, S&P looking so bullish. You know, Dow, you got a lot, I would say a lot of support now down in here to about 37,825, where all this is overlapping here. I don't need to get into details, but Dow should be bullish as well. Let's look at the Russell. You can see the Russell was sort of my pick at the start of the week that I thought would be the weakest of the four, and so far that's you know, turning out to be true. And that's not because I have a crystal ball or I had a lucky guess. It's more so because of the higher time period charts. They just have slightly different structure on the Russell that looks a lot weaker. And then you have the fundamental side, which is that, you know, those 2,000 you know, largest small publicly traded companies that are in the Russell. They're the ones that are going to be, you know, most affected by their inability to refinance all their debt this coming year as the debt's rolling over to these higher rates. So I think we're going to see a lot of bankruptcies in the Russell 2000, those types of companies. So that's why it is, you know, it led lower, and I don't think it's going to rebound, you know, as high. So I think definitely from the long side today, just like when I was looking at the short side, I was more interested in the Russell this week, although we didn't get any valid setups, so no problem. But you can see the Russell's not rallying at all like the S&P or the NASDAQ. Right, and the Dow's kind of in the middle. But so for my point with that for today is that the Russell is not going to be one that I'm going to be looking to play alongside, because it's the weakest of the four. So I want to play the strongest, which is the NASDAQ right now, and the S&P. So those will be our main focus on stocks today from the long side. Steven, remind me of that, please, when I talk about wanting to take a long trade on the Dow later, which, you know, I most certainly probably will forget. No, I'm pretty good about remembering these things, but good to have a community that can help with the reminders. Like yesterday, you helped out with the reminder of the crude oil inventories number. You know, there was a bond number coming out, the 30, I think was it the 10-year or the 30-year auction yesterday at 1 p.m. Eastern? I don't know, one of those. And usually that'll move the market, but I didn't trade it because yesterday I was kind of thinking, and I seemed to be correct about that, was that the market was just going to kind of be waiting for CPI, and that's what it did. No longs on Dow. Got it. Okay, cool. Thanks. Appreciate it. All right, let's go ahead and the Russell as well, but that goes without saying. The Russell's so weak. Let's look at the bonds. You see, and then this is how we just lay the foundation every single day, and it will give you a nice sense of, you know, calmness and tranquility about your trading, because you're putting the structure together, you know, for the broader market, right? So you can really get this bigger picture idea of what's, you know, going on, and that can help out a lot in terms of, you know, staying on the right side of things overall. Now, does that mean we don't have losses? No, that does not mean we don't have losses. Does that mean we don't have drawdowns? No, that doesn't mean we don't have drawdowns. It just means hopefully we have fewer losses, less severe losses, and less severe drawdowns. That's the name of the game, really, for me anyways. All right, so here is the 30-year Treasury bond. And if you, I covered this at some point. I don't think I was really actively posting to the channel at this point when I covered the Treasury bonds last year, but I got a pretty good chunk out of all this here because I was here at the beginning of this year, last year. I could see on my higher time period charts. Do you guys see here? This is the yearly chart for the 30-year Treasury bond. Well, this was just sayonara here the last couple of years as we started to break down and through that 150 level. And then when we broke that yearly low back there from 2000, I think it was 2018. I mean, it was just lights out. Good night. You know, you could just see that bonds were heading lower. The yearly was breaking out to the downside, and that was going to keep rates elevated. That's great. That's in the past. What about now? Well, for now, you can see that bonds, this is really important. Back to one of the questions you asked the other day, Stephen, was that bonds, you know, the yearly chart is not out of the woods yet at all. And we're at a pretty darn critical spot here on the quarterly. So the yearly's a little uncertain right now. Like, are we gonna punch down here? Are we gonna, you know, try and test up first? I don't know. I don't have the crystal ball. But to get that information, we look at the quarterly, because the, you know, whatever the yearly is going to do, the quarterly is going to give us, you know, a heads up on that, right? So, okay, cool. I'm glad you get it and find it helpful. Yeah, that's kind of what I was thinking too when I was, you know, just curious. You know, when I was thinking about coming out to live stream and do all this, because I do this for myself every day, and I was thinking, well, do I want to go out and do it publicly for people? And I looked around on YouTube and saw some people streaming, and I didn't see anybody doing this, so that's why I thought that, you know, why not just get out and do my analysis publicly? And, you know, because I do think it's something that I don't think a lot of people are aware that you can actually prepare like this. And it's pretty eye-opening, you know, when you see the power of using all the higher time period charts every day. I mean, I love it. So that's good to hear. Thanks, Stephen. So here with the quarterly, what you can see is that we're trending down strongly, right? And now we got this big punch up here, but this to me is still looking, I mean, very bearish, you know, like, okay, I always have to remind myself, yeah, okay, yeah, this could, you know, pick up the dot zone and fire up here. It could, but you know, guys, it's not looking likely to me. This looks very bearish on the quarterly 30-year Treasury bond. And I have to stay, I mean, I'm going to be bearish bonds. It doesn't mean we're not going to long bonds, you know, when we day trade. I'm just, you know, this is a quarterly chart, so obviously it takes some time to unfold. But the quarterly overall looks bearish, which means what? This chart is telling us that rates aren't going lower anytime soon. That's what this chart is saying. So if that's the case, that would mean the Fed is going to stick to what they've been saying, which is rates are going to be higher for longer, which means that all this excitement and bullishness, you know, that's basically front running what they think is going to be, you know, the Fed reducing rates starting in March. I don't know where the dot plot is right now, but March, April, you know, that party could come to an end quickly if bonds start accelerating to the downside and there's an upward, you know, pressure on rates. You know, stocks are not going to like that. And a lot of people too, my buddy who works in the mortgage business, he said, well, isn't the Fed gonna lower rates? I was like, well, I don't know. They might lower rates at some point. Probably they will, right? Historically, they do. But they typically wait for something to break until they lower rates. Right now, at least in terms of the stock market, nothing's broken, right? So you're gonna have to see a pretty serious decline for them to want to cut rates, I think, at least by judging at the stock market, the jobs data, all that kind of stuff. But another thing too is important to note, with all this debt we've got, the Fed doesn't control rates. You know, the Fed is only so big. So if foreigners started dumping, you know, debt, rates are going to skyrocket. There's really nothing the Fed can do about it except buy it all up, which would then increase inflation. And that's a whole other, you know, nasty side effect. But so my point with this is that if these charts say down, that means rates up. Doesn't really matter what the Fed does, right? The charts say down, and right now they do say down, which for me is reinforcing that resistance level we're seeing on the yearly S&P NASDAQ chart. Sure, we might fish up there a little bit and, you know, maybe go a little higher, but with the way bonds are looking right now, it's not looking like stocks are just going to go into la-la land on a huge new leg to the upside. If that happens, we'll be ready because we're covering it every day, but that's just not what I think is going to happen right at this moment. So there's the 30-year. So, and the monthly as well for the 30-year, you've got, it looks a lot like the Russell, right? So if you look at the Russell, just cracking my neck here, guys. If you look at the Russell, which we're loading now, see how the Russell, and by the way, the quarterly on the Russell, I mean, this is just a beautiful resistance pattern. The yearly's looking really good resistance pattern, but the monthly here on the Russell, just that 2-bar exhaust funneling into all this resistance. It looks a lot like the 30-year bonds. And the reason for that is because the Russell is, you know, very, very sensitive to what the 30-year is doing. And you can see the 30-year, you know, this monthly chart, you've got a lot of resistance. So the monthly right now is confirming that resistance on the quarterly for the 30-year Treasury bonds. So if we go ahead and look now at the weekly and the daily, right, because we want to know what's going on today. That's the point of all this. So on bonds, I mean, you still see bonds are kind of doing this week what I thought stocks were going to do. You see how you had that big move down on bonds last week, just like you had that big move down on stocks. And this is kind of what I thought stocks would do this week, but bonds are actually doing it. I've been sort of waiting for an opportunity to short bonds, at least on a weekly perspective, up into this, you know, just above 123 here for the 30-year. We'll look at the ultras in a second, but you've got a lot of resistance here, right? So we'll just have to see what CPI does today. But looking at this weekly chart, looking at the monthly chart for bonds, you know, the daily. See, we've got a pretty good support level here today for bonds. So, but we've also got, you know, we've got a lot of resistance. See this, you know, volume profile tapering off up here. This is the composite. So up into these highs up in here, that trend line right there, that's all into that weekly resistance here. So on bonds today, you know, I'd be looking for a range, you know, again, CPI dependent, but basically the low is probably already in for the day. So, you know, barring something crazy with CPI, I could be looking to get long bonds down into this is the 30-year, but, you know, down near the low of the day if it wants to revisit that area, and all other things being equal, it looked good at that moment in time. I'm also not against shorting bonds, you know, up into that weekly resistance zone. So bonds could potentially be played from both sides today. Again, we need to see what CPI is telling us, right? That's very important. All right, let's look at the ultra bond. Same thing for the ultra bond. So now you see how we're starting to put the picture together today, right? So for bonds, we've got a sort of a bullish pattern today for the daily, but you've got some daily support right now, but you've still got that weekly resistance, monthly resistance intact for bonds. So that's why I'm willing to play the long side and the short side. I think stocks are going to go up today. So we're looking to play the NASDAQ, the S&P, probably from the long side. Again, we'll see what happens with CPI. We're looking to play bonds from the long and the short side. If we get near what we perceive to be the lows and the highs of the day, expect sort of a range-bound day. What does that also mean? It means we're not going to go chasing bonds in a trend run. That's important, right? So all these things are important and shape the decisions you make during the day. So let's go ahead and look at gold. And anytime you guys have any questions, just throw them in the chat. Happy to answer whatever I can. All right, and we all learn from each other. So sometimes you guys point things out that I hadn't thought of, or I wasn't aware of, or whatever. So it's good when you guys point things out too. All right, so looking at the gold market, gold's been nasty this week. I'm really happy we haven't traded it, because look at this. It's just been terrible. And I can't stress this enough. And I say all this to you guys because this is all inner dialogue to myself that I'm just putting out here in public for you guys. But it's so important, if you can recognize when a market looks, unproductive, or a lack of opportunities. If you're perceiving a lack of opportunities in the market, if you can know that based on whatever it is you're using to read the charts, that's a huge advantage. It can help you stay away from markets where you're probably more likely to lose because of the current price structure in that market at that time, right? You want to take advantage of markets where you've got clear price structure at that moment in time. It's so important. So for gold here, I continue to see a bit of a mess, and I'm probably not going to do much with gold today. Again, CPI could be some weird, crazy shocker number, and we'll see, right? But right now, gold is kind of continuing to be a no-no. Now, if we want to look at the yearly and the quarterly charts for all the gold bugs, we can do that real quick. We've still got some time. I'm not even going to look at the 8 a.m. hourly close, because I know I'm not going to take anything heading into this CPI. But here you can see gold on the, this is gold. This is the yearly. Yeah, we're trending to the upside here, but I got to tell you guys, this quarterly pattern right here on gold, not looking good for the gold bugs right now. I'm sorry, guys. I like gold too. I like physical silver. I'm a big fan. I'm just looking at the charts, and the quarterly looks like it wants to cycle back down here to these lows. Yearly, no reason why the yearly wouldn't want to revisit, that 1850, 1900 area. So I think gold's going to be under pressure here. The monthly has a pretty clear sign right now anyways that we're going to cycle back down. But gold looks bearish. So, what does that mean? Well, it could mean a number of different things depending on, rates and all that. But if, let's say that rates continue to push higher, and that's not what a lot of people expect, right? If that happens, and the longer term bond charts are suggesting, continued weakness, and stocks, if we see that these key resistance levels that we're heading up to now on stocks, if they start to hold and start to turn lower, then if you have bonds, gold, stocks, what does this tell us? It tells us that we might be, preparing for some kind of a liquidity event. Maybe when, the Fed ends the BTFP, the Bank Term Funding Program, in March, there's all these banks, Silicon Valley Bank, those other banks that failed, and then you have all these other banks when the Fed said, hey, look, we'll take those bonds off your balance sheet, and we'll give you full market value even though they're massively underwater, but we'll only do it for a year. Okay, well, what's going to happen at the end of the year? Well, we don't know, because that year is going to expire now in March. That's when the BTFP come. Now, the Fed might just renew it, no big deal, but they might not renew it, right? Or if the Fed does renew it, maybe the open market is going to, start selling bonds and demanding a higher rate of interest for all this, debt that's sloshing around in the economy. We just don't know. But the charts are pointing toward, weaker gold, weaker bonds, and then we'll see if stocks, run into a good resistance level here in the coming days. So gold, I say all that because what we just saw on the yearly, the quarterly, and the monthly charts, now we're back. I have the monthly on both sets, right? So here you have the monthly, the weekly, the daily. And when we're looking at the yearly, I have the yearly, the quarterly, the monthly. The monthly is kind of like the fulcrum. I have it on both sets of charts, the weekly, daily set and the yearly, quarterly set. So if we think the weekly, the monthly and the quarterly are going down and the yearly for gold, what does that mean? Well, on the weekly chart here, we'd probably expect, some congestion, exit move to the downside at some point. So let's say we were to get a, this is really important for us, right? Because let's say we were to see, a big pop like this in gold today. I'm not saying we're going to see that, but with the way stocks are looking, maybe bonds are looking a little bullish for today. You know, some weaker than expected CPI number comes out. Everybody thinks we're out of the clear with the inflation problems. Fed's going to lower, no big deal. So gold could catch a pop. That could happen, right? And we'll see after the number what happens. But if that happens, that doesn't change the fact that all these higher time periods are still very bearish. So that would be a good opportunity, you know, setting up a good short for the next day if that was to happen today or the next day. So this is how I use these higher time periods to inform, you know, I'm not caught off guard. If gold makes a big move one way or the other, I know generally how I want to play that based on what I'm seeing on the higher time period charts. All right, we'll just take a quick breather before we jump into silver. Let me know if you guys have any questions while we're waiting. So here's silver. I don't need to go into crazy detail on silver. It's looking the same, kind of a mixed bag for now, but the higher time period is bearish. And you know, today is anybody's guess with silver, kind of like gold. Probably going to stay away from silver and gold, and just play alongside, most likely on bonds and stocks. Bonds, I'm more open to range-bound trading. Silver and gold, again, just look at this. Just we've done great by not participating in any of this, right? You know, when silver was firing to the downside, especially, I think I did a video for you guys on this a long time ago when I had like one subscriber or something. But anyways, when silver was just firing to the downside here, I took advantage of this. This was really nice trading for silver because it was so clear, it was getting smashed. And those are the markets you want to participate in, markets that are moving. So that's what I love about my methodology, is that, you know, we have very clear rules for, you know, what type of trading we're in. And the official rule for this type of trading is called shit. I'm just kidding. This is basically just called congestion action, but it's congestion action with no definable support or resistance levels right here. So when we see that, we don't want to trade it. That's why it's important. Let's look at copper. Copper and platinum so far, you know, are the weaker metals. Yeah, exactly. I got to redo that lesson in the course and say, all right, you guys, you see, whenever you see this type of trading, it's just called shit. I laugh every time I say a bad word on YouTube because I feel like I'm going to get in trouble and go to the principal's office. I don't know if I'm allowed to say bad words on YouTube. All right. I mean, otherwise I use bad words all the time. I just don't try not to use them on YouTube. Even though I mark my videos as not suitable for children, you know, their parents could be watching it and there could be a child in the background, and I want to try and be respectful, but I don't want to give the impression that I don't swear in my personal life, because I swear a lot. In fact, I think swearing is kind of fun sometimes. Just because you can express yourself, you know, good with swear words. Okay, that's another tangent. So here's copper. Also, just it's trending down, but now we're entering congestion to the upside on the daily. But I would expect there to be a lot of resistance up in here into 3.86, up in all this weekly stuff up here. So certainly copper, you know, if we got a huge exhaust into resistance at some point, I might be willing to go short copper. We'll see. Certainly not going to go long copper. Let's look at platinum real quick. I got to get platinum on these charts. Insert row. I'm putting this here for platinum. Here's platinum. The platinum, we've got a really nice trend to the downside on the daily. Wait while the weekly and monthly data load. Ugh. This is why I love having a standing desk. I just could never sit here and do all this. It's driving me nuts. Gotta stretch and move and feel limber. Okay, look at platinum here. Beautiful, beautiful monthly structure. Great resistance. Weekly's confirming, reversing. I mean, it's awesome. So, I mean, if platinum, again, depending on this number, whatever, but if we were to get deep into this pocket up in here on platinum, 955, somewhere up there, and the hourly was to confirm it and everything looked good, I could be open to shorting platinum, just like copper up in here. Probably we won't get these opportunities, but it's good just to be prepared. I know I don't want a long platinum, even though we could see a bounce today, for sure. Looks like things are going to bounce, you know, heading into CPI. So we'll see what happens with CPI. I'm basing my trades on the higher time period structure. I want to go with the weekly when I can help it, and the monthly, you know, that's a bonus. So just because the daily is rallying, I don't want to take, you know, that microstructure, the bullish microstructure on the daily, you know, to the long side if I see that the weekly and the monthly are heavily bearish on platinum, which they are. I'd rather just wait for the daily to pull back and look for an opportunity to get short. That's why on Monday, I was bummed that I missed that opportunity on the hourly to get short platinum, why we started streaming a little bit earlier, so we don't miss those 8 a.m. checks. Of course, on days when we don't have CPI, we're not concerned about the 8 a.m. check anyways. But so you see, that's how I structure the trade, Stephen, is I want to trade in the direction of, you know, what I perceive to be the higher time period energy. That's very, very important. So that's how I structure that. Let's look at crude. So yeah, you know, we saw, I think we're doing really well here on crude too. We've talked a lot about this. I don't need to redo it. The yearly and the quarterly, we don't need to look at with crude right now, but they're not super clear, to be honest. But the monthly it has a nice support level down here. The weekly is kind of so far confirming it, but as I mentioned again, I don't need to beat a horse with a dead horse with a stick here. But the fact that crude so far is not rallying more, given what we're seeing in the Middle East and there's ships being attacked in the Red Sea, and you know, trade routes are being closed down, you got to go around you know, the Horn of Africa. I can't believe crude's not just exploding higher on this geopolitical situation. So that tells us something, right? Just like if a stock market is continually rallying on bad news, that tells you something, right? Just like if a market like crude is not able to rally on, you know, news that should make it rally, it tells you something. So with that said, we do have a nice bullish pattern today for crude on the daily. And then coming out of that monthly and that weekly, I will be looking to play the long side of crude today with stocks, especially if we were to, you know, if we were to really start running. You know, you never know when crude's going to run, but we have the structure. So if it decides it wants to start running, we can look to play crude from the long side. Although I'm still not convinced we're breaking out to the upside. So for this exact moment, I would still wait for something on crude down into 72, you know, this general area right here. Should be a pretty good support level for the day. So that's crude. Let's just quickly look at natural gas. Yeah, natural gas is just a little messy with this weekly bar here. You see, it's just, see how weird it looks. It's not an outside bar, but it might as well be. It just has that weird structure. Look at the yearly and the quarterly for natural gas, because I can't picture them in my head right now. So yeah, the yearly chart for natural gas is a mess. I mean, doesn't mean we won't trade it. It's a yearly chart. Let's give it some time to develop. The quarterly chart is also a mess. The monthly, you got some resistance here in this pocket, but I don't, you know, natural gas is kind of a mess right now. I don't know what's going on with natural gas. Doesn't mean we won't trade it. I mean, when you had, you know, I think I told you the other day, right, Stephen? I think I mentioned this, that looked like a pretty good exhaust, meaning reversal back down. So far, that is what's happening. And I think on that day there, whatever, was that Tuesday, I think, I said, if natural gas pops up into this zone, sure, we'll look to go short because it's a really nice daily resistance pattern into the monthly pocket. I don't need to know what's going on in the yearly and the quarterly. It's nice, but today on natural gas, this is very confusing. I don't know what's going on. I'm not going to trade natural gas today. Let's look at the euro. Okay, yeah, now we're starting to get a little bit of a picture here. So you see, it looks now like the euro, the weekly, because I was waiting to see what this weekly wanted to do, and now it kind of looks like we want to head back up here. So if that's going to happen, if the weekly is going to get up there, what does the daily have to do? Well, the daily's got to kind of get going, right? So if that's going to happen, you're going to see a lot of support down here into the true average, broken near high, right? We broke out of this structure right there. So we have enough. We're going to get something today on stocks or bonds or whatever. So I'm not really probably going to trade the euro because I don't really trade the futures on the currencies unless I literally have nothing else and I see something fantastic. But what it is telling us is that a weak dollar today. So what is all this pointing to now that we have 15 minutes left heading into CPI? It's telling us that we're likely to see, I'm guessing, a weak number. You know, let's see. I'm going to go ahead and just check the forecast here. Let me just check the forecast. So the forecast is for 3.8. The previous was 4, so they're forecasting it, you know, the core rate coming down. That's the core rate. Make sure we got continuing jobless claims as well. That'll be pretty important. And then don't forget, tonight at 8:30 we'll be streaming live Chinese inflation. Just kidding, I'm not going to be streaming Chinese inflation, but I just thought that was hilarious and I got to entertain myself while I'm doing this. All right, so core 3.8 is what's expected. Let's see. These charts are kind of saying that we're going to come in at 3.8 or better. So that's because we're seeing now evidence across the board. We're connecting all the charts. Stocks look well supported. You know, bonds look supported for today. Gold and silver are a mess, but if we're going to get a weak CPI number, they could definitely rally today. Although I'm not seeing, you know, super clear evidence on the charts, but the dollar is looking weak. That's for sure. So all that is pointing to a weaker CPI number. Let's see. All right. Let's look at the pound. Yeah, you've got a pretty bullish pattern here now on the weekly. It's kind of confirming. I think the pound wants to head back up to 129 on the monthly. We'll look at the yearly and the, you know, every weekend what I'm going to do, I do it for myself anyways, but I'll start posting it to the channel, as I'll record a full-on, and I really get into the yearly and the quarterly charts on the weekends because, you know, they don't change that much during the week. But we had some time this morning, so I wanted to do it for you guys here on CPI and also just take a look at them myself. But here's the pound. I think we're going to be headed higher, weekly higher. The daily's not that clear, but you got a lot of support down in here. Probably won't be trading the pound because there'll be other opportunities, but it's good to know. And yeah, I'm probably not going to be messing with the agriculturals today because we have some good clarity now on the other markets. But if the other markets are going to rally, then, you know, certainly on lower inflation expectations, then probably the ags should as well. But let's look at Bitcoin. I think, did it get the approval? I think it did, right? Look at Bitcoin. Yeah, so, you know, it's just a strong trend run here for Bitcoin on the monthly. Let's go ahead and quickly just look at Bitcoin on the yearly. I think we covered this the other day, but never hurts to cover it again. So yeah, here's the Bitcoin on the yearly and the quarterly. I mean, Bitcoin's a little harder to read. It's not as liquid, so I don't put as much stock into it because it can be moved around a lot easier by the whales. But still, the chart patterns definitely work. And you know, on Bitcoin, got a similar situation to stocks, but you can see Bitcoin's not near its all-time high, right? So Bitcoin may want to push up higher before reversing, but we also don't know how Bitcoin's going to react if, you know, the economy starts melting down. Maybe it will be a safe haven. I don't know. Still too early to tell. But the yearly right now, you've got a lot of support at last year's close. Certainly the quarterly broke the quarterly is very bullish here. I don't think I've looked at these, and now that's why I see the monthly's bullish. Sorry, as I should have looked at the yearly and the quarterly Bitcoin charts for you last time. Yeah, quarterly looks very bullish. Monthly, that influences now how I'm, you know, seeing. That's why the monthly looks bullish now on Bitcoin, which means the weekly is trying to exit congestion up, which makes sense. Which means the daily is going to be gobbled up on dips, which it is. So probably scooping up and out of here. Probably bullish Bitcoin today too. So I think that's the lay of the land. We did it. We got through all the charts. I'm very proud of ourselves. And Let's see what we got shaking here. This is the hourly, and you can see the this is the we'll go look at ES. Why not? That was the NASDAQ, but we'll load the ES hourly here. So we can see yesterday ES, yeah, it kind of just grinded higher throughout the afternoon, shifted the point of control. Yeah, so I think we'll see what happens. But like I mentioned, you know, that weekly resistance level looks to be broken now. Let's see what CPI does. That'll be exciting. We got about 10 minutes, you guys. And here's the ES. You know, this is kind of like, we got to treat this, it's kind of like a stock market open, right? Which what I like to do is, you know, at the stock market open every day, because it's falling on the half hour, and I make my decisions on the hourly. Well, we can still make some decisions on these critical events at the half hour mark, just like we do at the stock market open at 9:30 a.m. Eastern. So what I ask myself is, okay, do I have a clear picture for the day? Yeah, I do. It's bullish. I'm all of the things being equal, I'm comfortable. You know, if I played the long side today on stocks and took a loss, I'd sleep fine, because all I can do is read the charts. So they do look bullish to me. So heading now into CPI, do we have a bullish pattern on the hourly? Yeah, you do. You see the hourly heading lower here, looking like it wants to round the bend, potentially. Where's our daily support level? I would say a pretty good level is just underneath the current daily lows at the true average, the broken near high. So that's all coming in at 48, you know, 15, call it. So then I look at my hourly chart and I say, well, do I have anything into 48.15 down in here? Yeah, I mean, we've got that extension kind of hanging out down there. Because sometimes what you'll see on the back of these announcements, right, is you'll see the move down and then back up, right? And it can be a dangerous trade, but it can also be a good trade if you're in line with what you think the daily and the weekly energy are doing at that exact moment. Right now, I think they're up. So do I want to bet on that, you know, 48.15 level holding? And, you know, sometimes you can see a move like this, right, where it smashes down, does what it does, takes out, and then it ends up, you know, closing up here, and then off you go, right? And then you look back at this and you go, oh, I wish I would have bought that. Oh, maybe we will. I'm not saying that's going to happen, but this is how I look at things like this. Here's the NASDAQ. You know, similar. I mean, the NASDAQ is, thing is, the NASDAQ's more likely to move, obviously, during the announcement, but the S&P is a lot thicker, so it's a bit safer to do that trade. Just like if I was going to do that type of a trade on a big announcement on bonds, I would do it on the 10-year, you know, as opposed to, let's say, the ultra bond, just because the 10-year is so much thicker. So, but we can only watch one. The NASDAQ got a lot of support here in the 980. Got that extension there. Just get that exact number over here. And basically 950. So it's a lot lower. So I like the number on the S&P better in terms of where the hourly level of support is matching up to that daily level of support. Because remember, the jobs are coming, the initial jobless claims are coming out too. So, you know, we could, charts are pointing up, but we could see, you know, these releases have a little bit different information, which could spike price one way and then reverse it. I'm just going to go with the technicals. So now I need to ask myself, you know, would I be willing to put a trade on the ES if we spike down hard and fast into that 48.15 level? I think I probably would be. I'd have to, it's going to be an in the moment type of situation. I'm certainly not going to just leave an order there, but if I'm going to get my DOM ready for ES. So if ES spikes down and if I decide to take a trade, I will let you guys know. Remember, not financial advice. You can check out educational purposes only, read the risk disclosure, all that good stuff. I'm here to show you guys how Owings market analysis works, and we're all here to have a good time. But any trades you take, just remember you're responsible for whatever happens to your accounts. I shouldn't have to say that, but I do. And yeah, so from time to time, I'll just mention that. All right, so we got 5 minutes, guys. Any questions? Post your questions in the chat. I'm just going to use the restroom quickly, refill my coffee, and I'll be back a couple minutes before CPI and we'll answer any questions. All right, we're back. Check, check. We got good audio. Good visual. I think we're doing it. All right, good. And we've got 1 minute. 1 minute CPI. How's our latency doing, Steven? Right now, I will tell you it is 10 seconds after right now. Boy, somebody got a jump on this number, huh? Yeah, so now if we did spike down to that 48.18 level, I might have to take a shot at it. We'll see. But I'll let you guys know. I mean, may not get down there. It may happen super fast. Who knows? You can see on the volume profile here. Yeah, good rejection area potentially. All right. 10 seconds. Okay, not much. That's good. And there's CPI. I haven't bought anything. I'm watching the level. I'm just watching. Yeah, I'm just keeping an eye on this level. I want to see. I'm not doing anything, but this is the level I'm curious about, just to see how price reacts. Oftentimes this is what they'll do. They'll swing it down there. Take out stops and reverse it. But in this case, don't know if the level's going to hold, or we'll see. So for clarity, I'm just observing. We'll just keep our eye on the ES right now because I don't have time to. This is my key level, 48.15. So just keeping an eye on it. Still a lot of support down here, you know, daily, weekly. Now, if CPI, we'll check the number. If it came out at, 4.2% and 3 point, well, then obviously this market could just tank. You never know. That's why you got to look at the number as well. But the charts are first and foremost. So this is why it's good too when you trade on the hourly charts. You can just wait, let the number settle, see what the 9 a.m. Hourly close is giving you, right? So I haven't taken any trades, and I was just keeping an eye on that 48.15 level. But you can kind of see that, you can see in the price action. So for me, like I said, oh, well, I could potentially buy it down here depending if price, how it reacted. But I would have needed to see, lots of buying step in here and get back above my extension here and then really start holding that 17 level. That's where I would have been willing to maybe, I'm not even saying I would have done so then, but I look for very specific things, even if I'm just going to, jump in between an hourly close. So, but this is really cool because now you can see in real time, you don't have to guess, right? You can, you can, if you have your levels and your direction predefined, just wait for the market to come and tell you if those levels are right or not. We're still in support here, for ES, but let's go ahead and check that number. So it came out at 3.9. Yeah, a little hotter than expected, but nothing crazy. Jobless claims came in at 202, less than 210 forecast. So that's, strong labor market. So that's inflation rate was a little hotter than expected. Okay, so it was, the number came in, certainly doesn't mean we still can't rally. We can, but we have to be aware of the fact that it's not like we're, it's not like it's a great number for the market. Not by any stretch. If anything, it's a pretty bearish number. And maybe this is where the party stops for stocks. We'll have to see. Oh, trying to push higher now. But I'm not going to buy down here on that number. I'm not doing anything. Waiting for the 9 a.m. hourly close. So let's just give the market a chance to digest this number. ES is, there's still a lot of support here for now. So let's just see how price wants to handle that. We're going to look at the NASDAQ now, you guys. Big outside bar. You can just get killed on these numbers. Like I see some people on YouTube gambling on these numbers. Not a good idea, guys. Not a sustainable strategy. Might work for periods here and there, but dangerous to trade around. It's more gambling if you trade around news announcements, in my opinion, because the liquidity dissolves. So whatever edge you think you have heading into a news announcement, good luck. Now you can get a good read on things heading into an announcement. I just don't recommend holding trades into an announcement. Okay, so NASDAQ looking the same as ES. Yeah, see, we can see right now that the market doesn't really know how to digest this number. It was a little bit more, when I say hawkish, you know, I mean more inflation than less. So it's a little bit more hawkish, you know, for rates and inflation than anticipated, but it wasn't crazy, right? And the charts still say we're probably going to continue to rebound. So the market just needs to digest this. Look at the Dow is a mess. 38,020 to 37,820. So just a 100-point mess. Let's look at the Russ. Same thing, a mess. Let's look at bonds. Bonds often give us a better idea of how the market wants to react to this number. So here is the 30-year. Yeah, I mean, kind of what I thought would happen with bonds. You've got just the low, like it went straight to the highs and straight to the lows. So, but just a mess. You know, there's a guy out there, I forget who the famous quote is attributed to, but he says, it's not about the money you make, it's about the money you don't lose. And it's such a good quote. It might be Larry Pesavento, but I don't know if he got it from somebody else, but it's a great quote. So Steven has a question. How long do you typically wait after news to look for? No, I mean, it depends. For news, but yeah, I won't hold a trade ever going into the news, never. But if, you know, if I've got a key level that I like, and some days it's super clear, even at the stock market open, if I've got a really clear level, then I can set an order way outside, because then if I feel there's a chance that the news will go and tag it and go my direction, but I've got to have a lot of confidence in the level, you know, in the higher time period structures. I got to see a lot. I don't do it very often, but I do it. And in that case, I can set an order and just see if it gets filled. Otherwise, if like today, I'm kind of interested in a level and I have a decent read on what I think the direction is, I'll just watch it. And then if it, you know, the timing doesn't really matter. You know, if it's 30 seconds after the news, a minute after the news, it's more about me seeing what's happening. So in this case, you can see right now that ES is rallying out of that support. We're at 48.20. See? So this is the, like, had that number been a little bit better, because the number matters. So had that number been better, this is the area here now where I'd be looking to potentially get long right now, because we cleared out all the stops. We're sucking up. We're now back above my key support levels. You know, this is the area where if I was going to get long, I would try and jump on and try and, you know, catch a piece out of this as it keeps sucking back up. In this case, I'm not going to do it, because you know, the number was weaker than expected, and I want to see how the market digests this. Because, you know, if bonds are going to head down and rates are going to go higher, then, you know, stocks, I mean, it's going to be a fun day regardless. Even though I'm coming into the day with a bullish picture, you know, I still, you know, if stocks were to break out to the downside, I think there'd be a lot of people off sides, and, you know, you could get a good move. So I'm open for whatever the market wants to bring to us. But right now, support is still holding, you know, per what we went over in the pre-market forecast. So you got a lot of support there. And that's what we tested. But I don't know if it's going to hold or break. We'll have to wait until 9 a.m. Right now it's 8:39, so we've got a little bit of time. And Steven, I'll just ask you a question, because I always find this interesting with people. My argument is that this whole discussion around trading psychology, of course, I can understand where trading psychology comes into play, and there is absolutely an element to trading psychology. But how do you feel about trading psychology? Do you think it's just, do people have pure trading psychology issues, or do they have, a lack of a proven system that they actually believe in, or a lack of conviction in whatever they're trading, right? I think that most trading psychology issues stem from a lack of conviction, in whatever methodology someone's using. I think if you really know and trust what you're using, of course you can still have some minor psychological issues. I have some sometimes too, but I'm talking about the major ones, where, you don't pull the trigger, or you're scared or anxious or whatever. I think that's more a result of not having faith in what you're using. Yeah, which quote? The one about it's not about the money you make, it's about the money you don't lose. Is that what you're talking about? I love that quote, because it's so true. Everybody's so focused on all the money that they're going to be making. How about just focus on, trying, like, you don't want to trade like trying not to lose money, obviously, because that's like trading scared, but you do want to be focused on managing your risk, which in a sense is trying not to lose money. And if you take care of the risk side, then assuming you have a system that works, the results will take care of themselves. The winners will come if you just take care of the losses. All right, so NASDAQ looking weak here. Remember, I'm mainly a mean reversion trader, right? I'm looking for reversals unless we're in a trend and then we get a pullback. But in a sense, a pullback in a trend is still a mini reversal that you're looking to jump on board, right? The bigger structure. So I say that because right now, let's say, the NASDAQ and the S&P, if they look like they're going to head lower, am I just going to jump in? No, because, I don't head lower on bars like this, and we're still in support. So I would be, if anything, these are the kind of bars where when they're in the right areas, I like to buy them for the move back the other way. And we'll just have to see where, ES closes. I mean, certainly if ES closes up around 48.20, could potentially be interested in a buy. We'll see. Because then we'd have an hourly exhaust into a weekly and daily support area. But we'd have to have key levels here, hold on close for the hourly to confirm that. And we will see in about 18 minutes. See the NASDAQ. NASDAQ's not buying it yet. Look at the Dow. I mean, it kind of looks like this pattern here. This is what I call scenario analysis, and it's really important. This is silver. Okay, I'm going to take you back to when I had that win on silver last Friday. What was last Friday? Here. Do you guys see this? This is last Friday's price action on silver. This is where I had a win. It's on the channel. You can check it out. But I shorted here at an average of 23.26. I did end up taking profit right there at the low at 23.17, I believe. But that was just because I saw the weekly point of control there wasn't giving way, and I didn't want to be caught short. So I just took my profit and ran. It was, well, some skill and also a little bit of luck because, I booked my profit at the low. But that's not my point for this scenario analysis. My point is, do you see this hourly, how it spiked down there and then sucks all the way back up, and that sets the tone for that? Well, this might be what's happening right now for stocks, where if, ES closes here, then you could see the setup for that push higher. So we'll have to just see. That was silver. And that also was on a news announcement. So that's what happens on those news announcements. So here's silver on the news. Look at silver, 23.40 to 23.08. That's a big move. Yeah, exactly. It's discipline. You got to work. Yeah. It's discipline, confidence. It's all interconnected. 100%. Yeah, it could be the start of a bullish move. It could be, but for me, it would have to really close back above 48.20 to have me interested in it. I'm not saying I mean, it's still in daily support here, but you know, I look at, so far there's a lot of hourly support breaking, right? So if we're in daily support, if that daily support is going to be strong, the hourly support should be holding. It might hold by the time we get to 9 a.m., but right now it's not, you know. Well, we'll just have to see where this bar closes. Here's NASDAQ. Dow. It's still an ugly outside bar. So I also, just because we just had the news, you know, doesn't mean that I have to take a trade. I'll have to see. You know, the NASDAQ is an ugly outside bar. The S&P is also an ugly outside bar. It doesn't mean I won't take it, but generally speaking, I don't trade outside bars because they're less predictable. But let's go ahead and look at, we got lots of markets. These are just the indices. Let's go ahead and look at the 30-year bond. Yeah, so bonds are suggesting weaker stocks, higher rates. Bonds are reacting as if this is hawkish, a hawkish print. Not that I'm going to short bonds here, but if I see bonds pushing down like this, it certainly would negate my long bias on stocks. Yeah, it's true. 4,800 is holding. It's true. But yeah, we'll just have to see. Here is the 30-year. Look, you see here, Stephen, the 30-year is, I mean, that's looking pretty darn bearish, which means rates up, which could weigh on the stock market. That's what you got to be careful of. Let's look at the ultra bonds. Ooh, same thing on the ultras. Let's look at this. If the 10 years are confirming, then that's going to be dangerous for stocks. Ooh, look at the 10-year. That's a monster. We just did the entire week's range on the 10-year in about, you know, that 10 seconds there after the news. That's pretty interesting. So bonds are saying rates higher. Bonds are saying Fed not happy. So we'll see if stocks respond to that. Now, to be clear, I don't have a breakout pattern I'm going to short on bonds or anything. It just, this is how I use all these together. I bet you gold and silver. So gold, interestingly enough, is spiking up. There's still a lot of confusion here. I mean, look, all this did was make our gold chart even uglier on the daily over here. Silver. I mean, this is just, it's just nasty price action this week. I mean, we'll see. Maybe 9 a.m., 10 a.m. we'll have a trade, 11 a.m. But this is just the theme of the week is nasty. And when I look, if I was to actually like look back at these last few days, you know, after the fact, and know to myself, hey, you didn't lose any money during this, I go, great. You know, it's, not good on bonds. Could be bull trap. Yeah, exactly. Could be bull trap. Because you do have, I mean, for now, I mean, bonds are looking like they want to try and break through some key support levels, which means rates up, right? So that could signal bull trap on stocks. I'm not going to engage with them at 9 a.m., but I want to see how it happens. Look at gold. I mean, gold should follow bonds down if indeed rates are going higher today. Silver should also, yeah. Silver should follow down. I don't have a pattern here, but let's look at, oh yeah, copper got smoked. You know, I should have checked copper heading into the news. I didn't even think of it because this is what I'm looking for. I was so focused on ES, but copper here, I mean, that's, remember I said I want to short copper today up into resistance? Well, that was a nice big exhaust into the daily resistance zone. Beautiful extension. I mean, that's nice, but that's okay. There's a lot of markets, you know, especially when the news is moving. So, but copper's heading down. Platinum. I mean, the market doesn't like this. This is saying higher rates. Look at crude. I mean, crude not responding at all. Let's check. Oh, look at this. Huge outside reversal on the euro futures. This is super dollar. So now you see the picture, Steven. You got strong dollar, weak bonds, rising rates, copper's falling, platinum's falling, gold and silver look like they're weak. I mean, doesn't mean stocks can't rally. They can, but they don't have the wind at their back, right? The wind at their back is a good number, is bonds rising, rates dropping. You know, you want to trade a market that's coherent and in agreement. And sometimes that means not trading for a few days when it's kind of working through these little periods. But in my experience, the better trades are when things are in agreement. And I think we're going to have some today. There could be a lot of people caught off sides. I mean, if the dollar starts rallying to the down against the euro here, falling out of bed, and if gold and silver fall and follow copper, if bonds continue to fall, then I would feel very good about shorting stocks into rallies if I saw that. So that's what we're going to just keep an eye on. This is how you just come into each day with your forecast, see how the market reacts to news and other things. And this is why you just constantly aware of what's going on and just waiting for those trades where you've got a sense of what's going on in the overall market. You got a pattern you like, it all comes together. And in that moment, it's just boom, there's no hesitation. You take that trade. And when those come, it's a lot easier to, you know, take those trades and let those trades, you know, play out to their conclusion. Yeah, I think it is looking more bearish, Stephen. Definitely. So the ags we don't have to worry about till the 10 o'clock close, really. All right, let's cycle through again. Here's ES. Yeah, so for example, I mean, if ES, if it's sucked up and closed up here at like 48.32, anything's possible. If it did, I'd be looking for a short because we'd be in resistance up here. And I think that the bulls will be trapped based on what the bond market is showing, gold and silver are showing, and the dollar is showing. But we'll see. It may not head back up there. Let's look at the NASDAQ. See, this is how you just kind of, it's like you come into the day and you got to see how things are moving. You got to get warm. It's like, you know, getting ready for a basketball game or, you know, skiing or whatever. You got to kind of like get your knees all loose as you start going down the slope. When you start to feel good, you start to feel like you're getting into the flow. That's when you start to push it on your skis. It's kind of the same with the market. So, you know, we're seeing the picture come together now. So for me, that's what's great. Like, okay, I looked at all the charts and I said, okay, well, there's a lot of support here. Well, it tells us something very important, right? If there's a lot of support here and it breaks, what does that mean? It means the opposite is happening. If the opposite is happening, that's important information, right? We want to go with that. So that's something important that I learned from my mentor, which is you don't want to look for the obvious. You want to look for the outlier, and oftentimes the opposite of what you thought was going to happen, that is the not obvious, which is the outlier, right? Yeah, this is nice. You get into the flow of the market. This is how I like to trade. It just makes so much more sense to me rather than just coming in and just start scalping. And yeah, I'm glad you like it, Steven. Welcome to my world. All right, so here is the Dow. You see, if we had a friendly number and bonds were buying it and the dollar was buying it and the Dow closed here, I know I said I wouldn't buy the Dow today. I'm not going to buy the Dow, but this is kind of more of what I'd be looking for. I'd like to see, you see how the hourly would be testing that support level. Say, oh, okay, I'm not going to buy this, but I like to get long in support, short in resistance. So right now, I think stocks at this exact moment, if bonds continue to head lower, higher rates, weaker dollar, then I'm just going to be waiting for an opportunity today to short stocks into some type of resistance level that I identify. That's the way I like to go for it. All right, so ES looks like it's, I mean, we've got 5 minutes until the close here. I'm going to see if there are any trades for the 9 o'clock hour. I don't think so, but at least we're getting a very clear picture. May have some good trades at the open at 9:30, certainly. Because, you know, the open, that's what's great about the open, right? Like if bonds here, let's look at the 30-year, right? I mean, this, guys, this is great. This is fantastic. This is the 30-year Treasury bond, daily chart here to the left. You see how all it did was go up, take out some stops behind the highs of the last 5 days, and now it's cleaned out that inventory and down we go. We've got a very bearish weekly bond chart as we covered during, you know, the pre-market forecast, right? We said we wanted to go short bonds. Well, bonds are, so we don't even need to worry about the stock market. I'll still trade it, and if we get a pullback, I'll trade it. But now bonds, I mean, they look like they definitely want to head lower. Question is, are we going to get a pullback to short on bonds? We're breaking through the weekly value area low now, which is beautiful. Let's look at the ultra bond. I'm more interested in bonds right now because, you know, the weekly chart on bonds is very bearish. And now you're getting this huge reversal there. I think bonds are headed a lot lower. Now the question is, sometimes when bonds get going, like this will just pick up a true average and just fly low. These are tough to take the breakout. If I take them sometimes, I'm debating it because this is a pretty serious reversal. We're right at, I got to see too, is that the, we're breaking through the value area low right there. We're breaking through the value area low on the weekly. I might have to turn to a 15-minute chart because sometimes if I love the hourly pattern, if I really like what I'm seeing, right, but I don't want to trade this breakout momentum, but I'm pretty sure it's headed lower based on all the reasons I discovered, then I'll just pull out. So this is the ultra bonds, right? So if we go like this and go chart settings, you know what, let's go like this. We'll go ahead and copy this chart. Duplicate chart, and we will make this a 15-minute chart. We're just going to keep this here for now. So we're going to keep an eye on this 15-minute chart here for bonds because they just look like they're going to be very weak today. And I'm not just going to set a blind order here on the hourly because the zone is so big, right? So just so you understand, normally, if I want to short, I want to shorten resistance. In this case, I'm pretty sure we're not heading back to resistance on the hourly. This is a wide zone on bonds. So look at this, guys. 128.18. The hourly resistance is at 129.19. That's a full handle for ultra bonds. That's $1,000 a contract, right? So do I want to, you know, do I want to take that kind of risk on this? No, I don't. So that's why on a chart like this where I want to go with the momentum, right? Then I'll pull out a 15-minute chart like this. And now what I'm waiting for, this is the 15-minute chart. So this is where we may not get the pullback on the hourly, but the 15-minute might get back up in here and give us a nice pattern into resistance. That's where I could base my short on the 15-minute. Get short into 15-minute resistance, which is confirming hourly resistance. Then I have a much better idea of the type of risk I have on that trade. Then I know how many contracts I want to go. Then I can try and short. So that's what I'm going to be looking for. But we'll see. It may not pull back. I mean, it's a lot of volatility. Does that make sense, Stephen? Yeah, I'm not seeing a lot of analysis like this out there on YouTube. I'm just kind of seeing a lot of people gambling, usually. But this is how I like to do it, to really just connect all the dots. Yeah, it makes sense. Okay, good. And again, you are an MBA, so can we get anybody? We need to get somebody in here that is not an MBA that confirms that they can understand as well. All right. So 9 a.m. just closed. We're looking at the Ultra Bond. And I'm going to go ahead and just move my daily chart over here just for the time being. We don't need it right now. I'm going to put my hourly chart here. I never thought I'd need more than 3 screens, but I actually do now that I'm streaming. Probably have to get a couple more screens. And I've got a pretty big one here. This is, I don't know how, this one's maybe 32 inches maybe. And that one's like 26 something. And my laptop is the third one. But I mean, I run out of real estate here when I do the streaming. All right, so we got the hourly chart now to the left. The 15-minute chart here. I mean, I really don't think at all that this is an hourly exhaust that would cause a reversal. I don't think so. I think this is much more likely to see some follow through like this. And if that's the case, we want to try and jump on board somewhere here, but we need to get some kind of a pullback on the 15 minutes so we know what kind of risk we're taking. Oh yeah, bonds are great. I love bonds. I mean, when they move, they're just fantastic. You don't get the same kind of crazy whipsawing on bonds. Let me just change my DOM. You don't get the same kind of crazy, like stocks. You know, if you're in a position on the NASDAQ or the S&P, you know, you can be, you know, up, down. Even if it's going your way, you know, it'll drive you nuts while it's going your way. Bonds, if you get a good one on bonds, they kind of just, you know, it's a much easier market to pyramid on. If you find yourself in a good trade that you think is going to run the whole day, bonds can be fantastic. So, well, we'll see. Every trade I take, I'm going to tell you guys, and if I pyramid, you're going to know. Step number 1, we got to see if we can even get a good first entry. All right, so Ultra bonds, that's what we're waiting for. We'll go ahead and just quickly hop on over to the 30-year as well. It's the same thing. It's just looking very bearish. We just need a pop. Let me just see if I can. And here you can see on the 30-year, well, I'm going to trade the ultras, but you see all these broken, you see all these pink dots here. These were all very strong support. What happens to support when it's broken? Turns into resistance, right? So if we were to pop up in there, that could be a good spot to try and get short for the move back down. And that would be up into, you know, 129, the mid 129.20s, which on the hourly is up in here, in which case you would see the hourly push higher and then get a move back down like this. We'll just have to see. It's not easy when you have a, in order to peg an entry on, let's say, the bonds, when you've got high here of 130.26, 130.27, and a low here of 128.17. I mean, this is more than 2 handles. This is like 2 1/4 handles. So this is a massive range, you know. The average true range for bonds right now is, I don't have it in front of me, but it's probably, for the ultra bonds, probably max 1.5, maybe 1.5 handles. We just did almost 2.5 handles just on that news, right? So that's why you gotta it can make it a little bit more challenging to find the exact entry, which is why I'll bring the 15-minute chart out of the woodshed when we need it. But I don't use the 15-minute that much because it's dangerous. You know, it's like a very fine scalpel tool. You can use it when you really need it, but when you're not using it, put it away because you cut yourself, because then you can get sucked in. And the lower the time frame your chart, the easier it is to sit here and get mesmerized and start taking trades and over trading. And that's why I tend to avoid anything less than the hourly, unless if I'm trading one market and I've got volume based charts, that's a different story. But in terms of minute based charts, the hourly is why I base my decisions on the hourly, is because it gives us time to really cycle through these markets and plan our trades and get into the flow of what's going on between what's the relationship for that day with stocks, bonds, all this stuff, right? It's super important. Yeah, you'll see. Hopefully we'll get an entry today, Stephen. Certainly looks like might have some opportunities. So in bonds look weaker, and then if you were to ask me, well, why are we looking to maybe use the 15-minute on bonds? Why don't we use the 15-minute to try and short stocks? Well, because stocks are still in their general weekly, daily zone up there. I think that support. You see, stocks are flip-flopping, right? Whereas bonds are much cleaner right now. You can see that on the chart structure. So that's why I'm, in favor of, looking to try and play the short side on bonds right now. See, because they're all correlated, all these markets. So gold, I think it's going to head lower here because they'll follow bonds. But gold is wild. I mean, I won't. I'll trade gold if I see something fantastic that I don't see on anything else. But it's rare because gold it can be whippy. Silver I like a lot better than gold. It's wild, but it's also, yeah. See, you're getting this reversal on silver. Bonds are going to go too. The market doesn't like this number. This is a very hawkish number for rates. Dr. Copper's heading lower. Platinum's heading lower. So shorting gold on the demo, yeah, I don't think that's a bad play. But look, it comes down to risk and return, right? You have to really ask yourself. Yeah, like gold is looking very weak with bonds, but in the real world, the reason I wait for a pullback is, let's say I wanted to short gold here. Well, number one, the bond charts look better. And the reason I'll tell you is, here's the daily chart on gold. You see how gold is still in its messy zone here? Right? Whereas if you contrast that to bonds, look at bonds. We're already breaking all these lows here. So, bonds look like the better short. But I think gold will go down. But in the real world, if you were going to say, okay, I'm going to short gold, the way you'd have to look at that, and the reason I wouldn't short it, I think it's great you short it on your demo, Stephen, because that's how you get experience. But I'm just pointing some things out to you, which is, if you were going to short this here at, 2030, one contract, like, where would your stop go? I mean, it would have to go at least back above 2040, 2041, 2042. That's $1,200 of risk per gold contract. I wouldn't take that kind of risk because there are better trades. But that's how I structure my trades. Some people like to just trade, and that means I miss a lot, right? Because I won't get in this, and then gold will drop. It's like, oh, you didn't get a winner. Yeah, but it didn't fit my risk profile, right? That's why I wouldn't take it. A bond trader, yeah. I mean, bonds are great, but it really just depends on, I would say if you're starting out with a market, like, we're going to trade all the markets here together. I'll just put the daily chart back. But if you're going to just trade one market by yourself, bonds are a great market because they just move a lot more calmly than anything else. They're very liquid. You really have to have patience to trade them, so they'll teach you how to have patience. I mean, the bonds are great. But really, we want to trade all these markets because you see how we're getting the whole picture now, and then we see where we want to trade. So get silver. Oh, gotta get my 15-minute chart. I put my daily there. definitely a, I think this is going to be, bulls are going to be trapped today, I think. So here's silver. See, just kind of heading lower. Probably the bonds are too. This is a 15-minute chart now. But see, the bonds, if we could get a nice pullback, see if I can find a similar situation, show you guys what I'm looking for. And then we'll look at some volume profile information as well, because we haven't really had a chance to talk a lot about volume profile the last couple of days, because I use the volume profile when I'm about to execute a trade. That's when I use it. So what would we be looking for on bonds right now? I'm just kind of looking for a similar example. Something like this. See how the 15-minute chart here is breaking down, heading lower, but then you get that pop. That's what I want to short. And then I can put my stop there. And it doesn't mean I'll be wrong. I could lose on that trade. That'd be fine. But I know that that's where I have the best risk to reward. If it decides to go higher and take me out and I lose, you know, $300 or $400, so be it. But if it runs and it works, you know, you can add to it and really get a nice return for the risk that we're willing to take. So that's kind of what I'm looking for. And if it doesn't happen, I'm okay with that, because I wait for the market to come to where it makes sense for my trading style, my risk tolerance, all that good stuff. Really important. Go back to the current market here. So that's what we're looking for. Let's look. Really, there was nothing. Stock market's going to open. That'll be sweet. So we're going to get some good volatility. Can you guys hear when I clap, or does my mic? I think I have some sort of filter. Let me know. You guys hear that or no? Because I don't want to hurt your ears. Otherwise, sometimes I get pumped. I'll start clapping. Because the market's going to open at 9:30 and get some more volatility. It's looking like it's going to be a fun day. Just when I say fun, I mean just in terms of like actually having some potential opportunities to trade. Some water. You hear it? Okay. I won't clap then. I won't send your guys' eardrums down the tubes. All right. So look, the ES is pulling back. We'll see what happens. But I think that number caught a lot of people off guard. So I think unless something crazy happens, I'm looking short stocks, short bonds, short everything the rest of the day. Unless we get... I wouldn't change my short bias unless we took out those highs on ES at 48.38 and really sustained closes above there. If that doesn't happen, I'm bearish today. Oh, it's not loud. That's good. Okay, cool. Well, have a nice meeting, and yeah, I'm going to be here trading, so I'm going to keep running the stream. And that's cool that you'll be listening. And yeah, bummer you can't trade anything, but that's fine. I will be here every day because I need to trade for myself. And it's a lot of fun sharing it with you guys. All right, so it's 9:13. I'm waiting on stocks until the open, that's for sure. So looking at the 30-year here, we're trying to get a little bit of a bounce. I mean, it would have to bounce more than that for me. Let's look at the ultras. I mean, certainly anywhere around the true average here, 129.6. We've got the weekly value area low that's been firmly broken now, coming in at 129.11. That's a good bet, potentially, of where to short. My child just got home from preschool. She's tired and cranky. Have to go give her a kiss soon. I think she's just tired today. let's see here. It's a good thing she's far away on the other side of the house. The ultra bonds here. So that the weekly value area low could be a good resistance spot at 11. And then I'm looking at the daily. Oh, that's why this is the 15-minute chart. So I'm going to go ahead and just show you guys the hourly here. We can look at the daily volume profile here. You see the daily volume profile here? And what we can see on the daily volume profile is you've also got the daily value area low here at 6. Got a high volume area here right into that weekly value area low at about 11. So that low, this is a good example. If we get a short up here, remember, I have no idea if we're going to get here. If we do get up here, I'm fairly certain I'll take the trade and I'll tell you guys. But this little low volume area here on the daily could be a good rejection area because it's near that 129.11 area, which is right at the weekly value area low, also into that area. So that's kind of my area, 129.11-ish for bonds. So I'm just going to pause the video for a sec. I got to check on my daughter. She's absolutely losing it. But I'm waiting to see if we jump up here to get short 129.11, and I will wait for the 15-minute close as well, just like I wait for hourly closes. This is what I'd be looking for heading into the stock market open in 14 minutes. So I'll be right back, you guys. Post any questions you have. I go ahead and just pause this. I'll mute. All right, we're back. And gonna go in here. So, sorry, I got a little 4-year-old, and you know, it's winter here in Sweden, so she's getting a little sick and she's cranky, and she's a very loud 4-year-old. All right, so that was nice to stretch the legs. Anyways, looking to short the ultra bonds potentially up into right around 129.11. Looks like a good spot. And if we were to jump up there during the US market open, I want to see where that 15-minute bar closes, but that's where I'd love to try and get short. At least we've got clear market structure now for the rest of the day. Everything is looking good for the short side. And now we just wait for the good setups to come to us. That's all we can do. It only takes, you know, I see all these people out there that, you know, you got to take 25 trades a day. I get it. I used to do that too. But really, it only takes a couple of decent trades a week, right? A few decent trades a week. If you wait for those, and even if you only put on one futures contract, you can do great, right? So it doesn't, you're still going to have losses, right? But let's say you take 20 trades a month, right? And let's say on those 20 trades, you just use one contract on each trade. And let's say half of them, you know, end up losing and half of them end up winning. But, you know, on 10 of those, let's say you lost, you know, 500 on all 10 of those that you lost on, right? So you're minus $5 grand right there. But let's say on the other 10 that you won, you made 1,000, right? So boom, right there, you made $5,000 in the month just by waiting for good trades, just by putting on one contract, and you still had 50% losses. I mean, when you really think about it like that, that's how you got to think about it, because all this nonsense that you see out there with people making, you know, $40,000 in 5 minutes and whatever, maybe some of them are, but if they're making that kind of money that fast, they're not showing you how much they're losing as well. And they're probably also making, you know, hundreds of thousands of dollars from endorsements and YouTube channels and stuff like that, that, you know, they're doing that for views and clicks. And I get it. That's a business for them, right? So, but just know that it's not really the best trading practices. It's not going to help you have the best expectations for trading. And it's not going to, it's just not, it's not realistic over the long run to expect those kinds of crazy returns. So that was another motivation for me wanting to start this channel, was I just see so much stuff out there that's not really real. And I think it's more fun to actually show, you know, this is real trading, just waiting, you know, patiently for trades, analyzing the markets, putting it all together. This is what it's all about. So I hope that makes sense to you guys. And for all of you who will hear this later on the replay, I mean, there's so much you can learn here just by understanding the intermarket correlations, and by analyzing everything this way. It can give you a really good edge and a really good sense of, you know, a good idea of what's going on and where you want to place your trades. All right, so it's 9:25 a.m. and we're getting ready here. Got a lot of resistance up here on the, see, and this is why you don't chase, right? So let's say, for example, here on the bonds, you know, let's say you thought this was going lower, so you were determined to get short at 128.14, right? Right when that hourly right there closed. Well, if you did short that, you know, it may end up being an okay trade by the end of the day, but are you happy on one contract? You know, it's a $500 floating loss right now, right? So this is why it's so important to know where you're willing to put on the trade for your entry, and where your out point is, you know, your stop or your mental stop. Because if you don't know the risk that you're willing to take on the trade and where you're willing to enter to take that risk, you know, it's going to make it very difficult. So that's why for me, over the years, I've just developed, I wait for the market to come to my levels. And oftentimes it won't. But when it does, I at least have a good risk profile for the trade that I'm willing to take. And so here, for example, with bonds, with the weekly chart looking nice and bearish, the hourly now just pounding through that weekly value area low, you know, right here. We pull back now into that area I've identified. I'm comfortable taking a shot. And if I lose a few $100, I'm okay with that, because I know that if I take 20 of those trades, I know that 10 of them will win and give me at least a 2-to-1 payout. That's what I'm looking for. So that makes sense. Hope so. Steven, drive safely out on those icy roads. Technology is amazing. How cool is it? I'm here in Sweden broadcasting from my home office trading, and you can be like out driving your car in Utah listening to some guy in Sweden. I mean, it's just, technology is awesome. All right. So it is 9:28 here. We're going to get the stock market open in a couple minutes. And we're also going to get this 15-minute close here on the bonds. So I will let you know. We're still quite a ways away. I'm interested in that 11 area. I don't have an order in right now. Normally I'd watch the stock market at the open, but right now, since I'm interested in maybe taking a short here on the ultra bonds, I've got to keep an eye on this for the 15-minute close, which is in 45 seconds. S&P's back to 48.27. Check the you can see we're just back inside the daily value area low right here, the green line. That's a previously untested daily value area low coming across there. But again, the key level is, for me, is up around 11, because that's sort of a retest of, you've got that low volume node, that low volume area here. You can see right in here on the daily volume profile, and you're right at the break of the weekly value area low. So that's why I'm waiting for 11. All right, so there's the close. See if we try to punch up there. Right around that trend line there. We're at 6 now. We're getting kind of close. I don't have an order in. I want to see. ES is at 48.28. Take a quick look at the 10-year. 10-year is pushing a little higher here. Got a lot of resistance up here. 10-year is kind of back inside the middle of its daily range, which is interesting. The 10-year is back to the point of control on the weekly chart there. But I still like what I'm seeing in terms of the short side here. I just want to see if just checking one more thing over here. 18 is not a bad spot either. You've got the value area high of this hourly bar in here. So I'm not gonna rush into a trade here. I'm going to watch this and wait. And if I take it, I will let you guys know. Oftentimes when my trades are based on the hourly chart, it's very clear. I just like to, okay, I like what I see. The hourly is giving me, let's say, a close into resistance that I want to short. Boom, I short it. Like I'm in the trade, right? Whereas this one, since I'm having to kind of dial down to the 15-minute, I got to keep a little bit of an extra eye on it. We shall see. So far, we've hit a high of 6. It looks like the long end of the curve is leading us lower here. You can see some selling coming in. ES is being sold into at the open. It's at 48.20. We're down about 7 points. This is a good resistance level overall. You got to be careful. You know, this is why I'm exercising caution, because when the hourly closes on the low like that, you know, you can get, it could punch back up here to 130 and set up, you know, a good close to short the next hourly. You got to really keep an eye on this. I still like this 11 area. I'm going to watch it carefully. You got the 15-minute chart here going for, it's going to try to trend reverse up here is what the 15-minute chart is trying to do. I'm counting on it not being able to do that based on everything else I'm seeing. Doesn't mean that has to happen. That's just what I'm looking for. So if the 15-minute chart is going to fail with this trend reversal to the upside, confirming our hourly resistance level, you know, and everything else we talked about with the weekly value area low, the low volume node on the daily volume profile, if that's going to happen, and you guys see on the 15-minute chart here, all these yellow dots hanging out here, look where they're coming in, right here at 12, 11. Kind of a messy arrow there, but I think you guys get the gist. So I'd want to see if price tests these and fails. That would confirm for me that that resistance level on the 15-minute is worth potentially shorting. That's what I wait for. Just kind of logically deconstructing the trade. Get some coffee. And I'm keeping a close eye on the stock market as well. ES is back to 48.26. See, because all these are connected, right? So let's go ahead and quickly look at gold. See, gold's trying to rally a little bit. See, this is why it's dangerous, Steven, to just take a short in no man's land. And that's why I don't do. I know you only did it on the demo, but letting you know why I make the decisions I make and why I'm so careful. I'm so careful because taking losses is so much easier. I mean, not easier mentally or account-wise, but it's just taking poor trades is much easier than being very selective and waiting for good trades. So now we can see gold is actually rifling quite a bit higher. So this tells me be careful on the bond short because gold is trying to reverse that hourly exhaust. Let's see what silver's doing. You guys see all these? Look at silver. Silver is really punching back up in here now. So you guys see how dangerous trading can be if you just take trades willy-nilly. This is why you got to wait. Copper's not quite rebounding the same way. Platinum sure is. Let's look at the 10-year. 10-year is really important when you're trading the ultra bond or the 30-year. So now you can see, look at the 10-year. See the 10-year right here. We'll see what happens. But the 10-year is trying to tell me 15-minute trend reversal potentially intact to the upside. So if that's happening, let's keep a close eye because there should have been resistance here on the 10-year. There's not. So, I mean, this is some wild stuff today, guys. And remember, it's very easy to look back at the charts and, okay, well, I would have sold there and bought there, but we're trading the hard right edge. So we've got to make decisions in real time before they actually happen. So with, you know, gold, silver, okay, now they're getting sold into a little bit. These are tricky. That's why I've been so careful this whole week, because of these cross currents. What do I mean by cross currents? Well, let's just get back to the E-mini S&P 500 weekly chart. You guys see here, this is the weekly chart of ES, right? Look at this, just right here. Up, 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 right? This is just a nice, this is a nice market. Even when you're trending down, beautiful market. Where you guys got to be super careful are these transitional periods. What are transitional periods? Using Owings market analysis, it's when you do a massive congestion entrance move the other direction. So you've got one here and one right now currently where we're at. So I know from my experience, when I'm in this particular week, when you have this transition from a long-standing trend to a congestion entrance, be careful on those weeks. Why am I careful on those weeks? Because when I used to journal my trades, when I was still figuring out a lot of this, I saw that I took a lot of losses during these weeks. And I started looking back and going, well, why am I taking losses during these weeks? Oh, because the energy is all over the map. And you can see here, we're all over the place today. How many people do you think on ES got sucked into going long here, got smashed, got sucked into going short here, now they're getting smashed, now it's heading higher? You got to have a lot of respect for these markets. So I'm going to wait now until the 10 a.m. hourly close. So I'll put my 15-minute chart away. Bring our hourly back here. Daily over here. And this is why patience wins the game in the long run. Because imagine if you have these kind of patience, and then when you see your trade and you actually have an account where you can put on 10 contracts. I don't put on 10 contracts. I put on, 1, 2, maybe sometimes 3 if I really like the trade and I'm pyramiding it, but I don't have a huge account, but I've got a decent little futures account, and I'm able to put, size on according to my means, right? I'm not super rich or anything like that. I'm working on increasing my size because everything's really been coming together for me the last year and a half, after studying this stuff for a long time, and it's just clicking in a major way. But imagine you just wait when you can put on 3 contracts, 5 contracts, 10 contracts, then you don't need that many good trades a week. Like that example that I gave you guys earlier, where, take 20 trades in a month and 10 lose and 10 win, and your one contract and your losses, cumulatively are 5K and your wins are 10K and you net out 5K. That's great. But imagine you're doing 10 contracts. Suddenly on those same trades, you're netting out 50K a month. You can buy some groceries with that. So this is, I think, to me, this is like the real world of trading. And I think YouTube definitely needs more of that. So much. It's just so much stuff. I see some of the stuff that people are buying out there. I'm not going to name any names. I mean, at some point I might. I'm not afraid of conflict, but right now I'm not going to name any names. But you just see some people out there and you look at them and people are buying courses off these guys. You're like, dude, I mean, oh, yeah, it's hard to watch sometimes. All right. And there's another guy out there who's trading. He's actually a pretty good trader. I'm not going to use his name, but yeah, he's pretty negative. He's like, if anybody out there is teaching, they don't know anything. Like, okay, well, if that was true, how in the hell does anybody ever learn anything if there's nobody out there teaching? I mean, obviously some of us understand, like if I want to learn how to, do something in my garden or build something in my house, I'm going to go on YouTube and find somebody with more experience than me who does that. I'm going to try and learn from them. And they're a teacher to me in that moment. I'm the student because they've got more experience building a chicken coop or whatever, and I want to do that. Great. Well, trading's the same way. Like, some of us have more experience, some of us have less. I have more experience than a lot of people. Some other people have more experience than me. I mean, we can all learn from each other depending on where we are on the journey. A lot of that too is like the spiritual journey. I did a lot of meditation back in the day. I still do quite a bit. And with, when I was starting to learn how to meditate, I could learn a lot from, even just other beginner meditators who have been doing it a year or two longer than me. But now that I've been doing it for, over 10 years, I got to find somebody who's been doing it longer, because in order to progress my level of learning, I need to find people with more experience. It's just, yeah, just some of the stuff you see out there on YouTube is just fascinating. Like with this one guy who's like, anybody teaching is just full of it. Like, okay, just keep scalping. But I like him. He's a good trader. I mean, for himself. And it's great that that works for him. But what he does is very dangerous and not teachable and not replicatable. All right, there's my tangent. It's 9:42 a.m. We're looking at ES here. Still bearish, but I'm just waiting for the hourly now. Because look, now we're getting a nice pullback into this hourly resistance zone. We might be setting up a short for the 10 o'clock hour. But I want to see, I mean, these daily charts are still pretty, I mean, a lot of cross currents here. I do like bonds more. I want to see where they close for the 10 o'clock hour. So we can see there's the 30-year. Here's the Ultra. The Ultra has made a high. So right now we're sitting at 129.5. And the Ultra has made a high, wrong button, for this hour at 10. Interesting, right? So just keep an eye on this. Gold. Okay, so everything that was pushing higher there temporarily is now being sold into. So it's kind of reconfirming our bearish bias here. So that's good to see. Here we have silver. I'm just trying to see what I like best for a potential short for 10 a.m. You can see copper is leading us lower. Platinum is heading lower. I'd love to get a good trade at 10 a.m. Win, lose, or draw. Hopefully win, obviously. We always hope trades win, you know. And go to the gym, because that would be awesome. Do my sauna and my ice bath after a little bit of a workout. But first things first, we got to be here and see if we get any good opportunities. Right now, stocks, you know, you got these cross current on stocks, right? So you do have, you've got some resistance here, but you got some support here. I mean, I'm not going to short ES here at all, because this pattern here, you know, it's going to be messy. I can just see it. You guys just watch and see. It's going to be messy. It's a good time to not lose money. And it's because of these weekly cross flows here. And after that announcement, I was saying, okay, good. We might be off to the races to the downside. And we still might be, but we need to see that happen, because right now, you know, we saw some, you know, the ultra bonds, the 10-year, gold, silver. I mean, they've kind of gone higher than I expected. I mean, look at the 10-year here. We're back in the middle. Now we've got a big, ugly outside bar on the daily chart for the 10-year. Whenever you see an outside bar on the daily chart, be very, very careful trading that chart during the day. As a matter of fact, I wouldn't recommend it, because that's uncertainty, that's confusion, that's volatility. That's bad volatility, right? That's volatility looking for some clarity. We want volatility, but we want clean volatility, right? Hope that makes sense. So look at crude. We haven't looked at crude. Crude is just a mess. Look at this hourly range here. Nat gas. Nothing. Just going to cycle through here, guys. We got about 14 minutes till the 10 a.m. close. I must admit, after a few days here of just not taking trades, I'm getting a bit trigger happy, but it's when you do this long enough, you realize when you're getting trigger happy, and then you just say to yourself, you know, cool your jets there, mister. It's, you got to stay patient as long as the market demands. So here is the euro. Nothing there. Let's look at the pound. You see how they're all similar? Euro and pound, similar to gold and silver, similar to the bonds, right? Similar to stocks, because they're all moving based on what they think rates is going to do, what the Fed's going to do. We haven't looked at corn. Let's look at corn. See, corn doesn't have the same kind of, when you start to get into the ags, they have a different structure. The weekly chart is trending down nicely on corn. And I've been checking corn, you know, every day, waiting for a nice pop to get short into, but we're just not getting it, right? So see how here we're trending down. I just can't short here because the moment you short here, it goes back up here. I'll short corn if we get a pop up close to the daily value area high. Right now on corn, you've got the weekly point of control pretty close to the weekly value area high. So if we could jump back up and retest that level at some point, that'd be a good spot to try and short. It's up around 460 on corn, but I'm not chasing it. So we get wheat. Okay, wheat. So let the charts load here. Just kind of a stable trend run down here. Don't see anything I want to trade. I certainly don't want to buy that. I want to sell. Let's go to soybeans. Putting in a quadruple bottom. No. Is it a quintuple? Is that a 5 bottom? I don't know. I gotta look that up with my 2 master's degrees. I still have to learn the English language, which is awesome. So much left to learn. So you got 1, 2, 3, 4. You got 5 lows almost right at the same spot here for soybeans at 1236 this week. Now, if I had a beautiful exhaust pattern down here to buy that, I'd consider it because we're right at the weekly value area low. You got some daily support here, but the hourly is not confirming it yet. And the weekly is still a little dangerous. Here's the weekly. See how we're just flying to the downside here on the weekly soybeans? You got to be pretty darn careful if you're going to buy that. You can still get good buying opportunities, but generally speaking, you want to favor the short side. So we'll just continue to keep an eye on these. Let's look at soybean meal. I don't trade the ags often, but you know, I will trade them more now that we're live streaming together, and I like to keep up to speed on what's going on. Soybean meal, got about 4 bottoms here. That's an interesting little weekly here. We got about 11 minutes here. I have to decide. So you can see some volume coming in here on the daily volume profile. Soybean meal. I'm open to buying down here potentially, but it's not a trade I'm going to take, and I'll tell you why. Because look at the weekly here. I mean, this is a weekly soybean meal. Now it's going to find a bottom at some point, but not on my dime. I'm not going to be the one trying to find that bottom. But we're in an interesting area here. You're at the, the daily value area low. You're outside the weekly value area low. You do have some support, some evidence down here that you could be exhausting this move. So I'll keep an eye on meal, but I'm not going to do anything at 10 o'clock. Let's look at oil, soybean oil. Just look at this mess. Soybean oil is different because on the daily, so the weekly with soybean oil is going for congestion entrance. So that might be foreshadowing the meal, potentially. Look at live cattle. Hardly ever trade these. I think I've probably put on like 1 or 2 of these in my life, but I see something good on the live stream, I will put it on. Just because cattle, it's a very short day for the trading, so you don't get that many hourly bars. Looking at the weekly chart here for cattle. Kind of slowly going up. The daily, I mean, not really in a good daily area here. Can't buy cattle there. Here is hogs. Hogs are trending up nicely. Hogs have more support down here. Come back to hogs. That's kind of interesting. See, because on hogs at least, the weekly, they're trying to push higher here. The daily is trending up. You do have some support here. And the hourly is trying to pull back and exhaust down here. So I wouldn't take this here, but at the 11 o'clock hour, if we try to take out some stops below that low at 70.50, then you'd be kind of down near the weekly value area low into some daily support there. Could be interesting for hogs. So that's interesting. Let's look at Bitcoin. Wow, Bitcoin monster move to the upside. I guess this is probably on the stock market open, right? Because that ETF got approved. So Ez, if you're watching, hope you're long Bitcoin. I did some analysis on Bitcoin to start the stream. You can check it out. I looked at the yearly and the quarterly charts, and it looks pretty intact right now to the upside. So I think the Bitcoin bulls are feeling pretty good right now. A nice big move on Bitcoin. I mean, this is kind of a good pullback move right there on Bitcoin. I gotta check Bitcoin more carefully sometimes, because it is a good alternative asset class. Here's Ethereum. Big gap up on Ethereum today. All right, it's 9:54. We can go back to some of the major markets. ES is trading at 48.10 now, so it is trying to leak lower, that's for sure. NQ is 16,950. The Dow, not trading the Dow today. The Russell, look at the 10-year. Look at the 30-year. I would love to short. I still like the bonds. I just would want this hourly to, you know, give me a decent little pullback pattern here to short on. Here's the Ultra Bond. I mean, if we can get a little bit of a pump on the Ultra Bond, close up in here around this 11, 12, 13, 14 level, I would be open to shorting it. I'm going to keep an eye on Ultra Bonds. Let's look at gold. Gold's kind of hanging in there, just messy, confused, no pattern. Let's look at silver. No pattern, but trying to head lower with bonds. Copper, trade it. Platinum, not going to trade. Crude, nope. That gas, no. So I think for the 10 o'clock hour, which is in 5 minutes, I'm most interested in, I mean, stocks look like they're going to dump. But I would want to close up in here. And I don't like stocks as much as bonds. I like bonds better from the short side because of the weekly structure. I'm going to have to focus on. Here's the 10-year. I don't like that huge outside bar, as I mentioned, on the bonds here, but I do think that outside bar is concerning on the daily. You see, the NASDAQ doesn't have an outside bar. Bonds do, so that's just a bit, you gotta exercise a bit more caution. So, probably not going to trade unless this is to really give a good punch back up here toward 19. Because it's this, I'll explain myself here. You see how you have that big move to the downside? And so there's obviously some support here, right? Because bonds are holding up. So there's some support there. So if there's some support there and we're now closing here, you know, this is kind of, this bar can go either way. You know, if I'm in a firing trend run to the downside, let's say, then I could be more apt to maybe sometimes want to short this because I think it could open and go. And that might happen. But you're now closing back above the current true average, the live true average. I mean, the risk is that this bar is 50-50. You know, we could open and dump. We could open, pick up the true average and go up here. And that the hourly could stay in congestion and set up that short, you know, for the 11 o'clock hour. This is why the markets are just always changing. And I'm just waiting when I see something and I say, okay, I like that trade. There's nothing I see that I don't like. I'm taking it. Those are the ones I wait for. This week has just been a slow week for that. But it'll pick up as we complete this transition cycle between these daily congestion entrance bars. All right, it's 9:58. 2 minutes left. Just going to kind of see where ES and NQ, just see where everything closes. I do think we're headed lower for the indices. It certainly looks like that. Okay, well, if I think I'm heading lower, why don't I take the trade? Well, like I already suggested, there's still daily support here that could end up driving us back to the highs. Like at this point, I'm open to shorting the indices, but we'd have to push back up, you know, to up in here. I'd want to see a big move up here, fail, and then get short. I'm certainly not going to short here into support. Not a good idea to short into support because then you're betting on support breaking, and if it doesn't break, you're caught with your shorts down when the tide goes out, and that's not a good position to be in. And I do have to attribute that quote to Warren Buffett. It's not mine, but I've always liked that quote. It's really funny. All right, so let's look at, so ES right now, look, it's just stuck at 48.13. We were at 48.08 on the close of the 9 a.m. hourly bar. Now we're going to close at 48.13. Like we're just going to have to see, like nobody's, it's kind of a tug of war. You don't want to get involved when, you know, there's a tug of war. You want to get involved when you can see there's going to more than likely be a clear winner and you want to jump on the side of the winners. Here's the NASDAQ. Could definitely be a short there on the NASDAQ, but like I said, I'm not going to take it because of the reasons already outlined. Looks like the ultra bonds are dropping a little. We're at 121.30. You can see it did hit my resistance level at 11 there. Well, it actually hit 10. I called 11, but pretty good call. Still meaningless because I didn't trade it, so no big deal. And now that's closing exactly. Looking at everything, I think it's going to go down, but with that outside bar and what we're seeing today, it's more of a gamble trade than a, you know, because we're in support now. So I want to short in resistance, which is up in here. I was interested in 11, but what I was seeing on gold, silver, and the 10-year, you can see here the 10-year. This is really important, guys, because you'll see these correlations, not just intermarket correlations, but you'll see correlations. When I say intermarket, I mean, you know, how stocks relate to bonds, relate to gold, silver, crude to some extent, the dollar, of course. But you see, when you're looking at bonds specifically, the 10-year is a really good barometer for the ultra bonds in the 30-year. So here you see, this is the 10-year daily chart. You see how the 10-year is, look at these last daily closes. We're just stuck at this 111.28 level. You see, we're in the middle of the envelope. Boom, right there in the middle. Now take a look at ZB. We're at the envelope bottom. They're out of whack. So is the 10-year going to come down and meet ZB, the 30-year and the ultra bond UB? Is it going to come and meet them at these lower levels? Or are the ultra bond and the 30-year going to suck back up and meet the 10-year near the middle of the moving average envelope here? I don't know. I don't know what's going to happen, but I don't want to throw money, you know, out there in the casino and just hope something happens. I like to take the trades when they're in agreement, right? So if all three gave me a good short pattern in an area that I saw some good resistance, then I would go ahead and short the ultra bonds. Then you ask, well, why would I short the ultra bonds and not the 30-year or the 10-year? Well, the ultra bonds will give you a little bit more bang for your buck. They kind of move a bit more. It's the same tick value as the 30-year. It's obviously double the size of the 10-year. 10 years, you know, $15 and something a tick. 30-year and the ultra bonds are $31.50 a tick. Some commissions and whatever. I always forget, 30 31.25, whatever. It's like $31 and $15 for the 10-year. And you just get, like, if you put on that trade on the ultra bonds, you're getting, you know, $31-ish a tick. So the tick value versus the commission rate is higher, and you get more. If you catch a runner on ultra bonds, you know, you can catch, you know, 20 ticks or a point, which is 32 ticks. Whereas on the 10-year, you might only catch, you know, 10 ticks or 12 ticks. So you just get a bit more bang for your buck. If I have to choose, I'll trade the ultra bond. Oh, and that's it's the reason it moves more is because it's further out on the curve, and there's less there's more uncertainty, so it fluctuates a little bit more, so you can get good moves off of it. Oh, there you go. Yeah, I see your question there, Steven. I hope you're not typing while driving. Yeah, they move together, but you can sometimes get good reads on what one is going to do based off the other one. And that's just kind of an individual situation. But like, so sometimes if I have a really bullish, you know, picture for the bonds, or a very bearish picture for the bonds, and let's say that the 10-year is really getting ahead of the ultra bond, that can sometimes be a really good trade to go long the ultra bond. You have a pretty good idea it's going to catch up to the 10-year. That's where it can be very useful. But I need to have a really good sense of the bullish or bearish picture. And one of the dangerous trades, for example, is right now what I'm seeing, which is all the bonds might head lower. They really might. But the fact that the 10-year is higher than the ultra bond and the 30-year right now, that's a little disconcerting to short the ultra bond when the 10-year is higher. So that's why I'm exercising a little bit of caution. But I do think stocks are going to drop, and they are dropping right now. It's the S&P is at 48.05. So now we've got some nice structure here. I like to play stocks from the short side the rest of the day. I just have to wait, you know, try and get a good bounce to short into. NASDAQ definitely looks weak. Here's the Russell. Russell's very weak. So Russell, this is good. If the Russell really starts to collapse, you know, we could get a nice, see, now you're starting to get this is where the day starts to come together. It's only 10 o'clock, or, you know, you got to keep your powder dry. You don't want to get involved in, you know, the bad trade, so that when the good ones come, you've got mental capital and account capital ready to deploy, right? That's important. So now you can see the Russell 2000 is getting into a nice trend run down on the hourly. We're breaking through some key daily support, which is not a surprise because we've been bearish to Russell the whole week. Looks like we're gunning for last week's value area high, 1950. The weekly chart's bearish. So I like the Russell here from the short side. And now what I would need is just, you know, got a good trend run going. We're breaking the value area low on the daily. You know, the Russell might end up closing at 1920 today, right? Which is 32 points lower than where we are now. If it does that, that's a lot of real estate to cover. You know, the hourly at some point could give us a little bit of a nice pullback that we could short into. So those are the types of trades I like to just, you know, plan. I see what I'm seeing. It's very clear. I feel good about it. I say, okay, if this happens, now I'm really ready to take this trade. So the bonds are the same thing. So with ultra bonds, if we really end up breaking lower, then I'd like to participate in this. But right now here, the support needs to break, you know, before I'm interested in shorting. And right now, gold is not buying it yet. We're still sitting here at 2030 on gold. Silver's starting to head lower. So we could have, you know, if you just wait for the market to show its hand, you just get fantastic opportunities. And 99% of the challenge in this business is just waiting for those opportunities to come your way, right? That's what it's all about. And that's what's going to keep you in the game for a long time, and also make it fun and not stressful. So I can see we're moving a little bit today, and there might be some good opportunities, and I got to make some money. So I'm not going to go to the gym probably until much later, if at all. So I'm going to be here just doing hourly checks here for as long as I feel that there might be some good opportunities. So we will, you know, stay around and check the 11 o'clock hourly close in about, well, I'll start doing my analysis for the 11 o'clock hourly close about 20 minutes before 11. So, you know, what is it now? It's about 10 a.m. now. So in about 30 minutes, I'll start analyzing for what I'm seeing for the 11 o'clock hour to see if there's a good trade setting up. I have a feeling where there's going to be a trade at some point today, and I'm just waiting for it to be the right one. And sometimes, guys, you're waiting and then, you know, you get 2 or 3 at once, right? So when that happens to me, it can be difficult because I'm only able to really follow and execute one at a time. But if I see 2 or 3 happening at once, I'll just try and pick the best one, you know, out of the bunch, and then maybe go an extra contract if I feel like, you know, everything's in agreement and looking good. But I'll let you guys know when those opportunities happen. All right, so before I step away here, just to take a little bit of a break and get some energy for the 11 a.m. check, we'll just do one quick run through. So now you can see ES is definitely dropping. We're at 47.93, so we've broken that 4,800 level. NASDAQ is at 16,850. We're dropping nicely here. The ultras are still kind of sitting here for now at 121.26. Gold is still stuck at 20.31. I can see that on the scoreboard here. Silver is dropping. There's copper. Oh, copper looks like we're going to have a really good drop today. So these things are trending down. Looks like they're probably going to trend down the rest of the day. At some point, we're going to get a pullback on one of these markets, and that's the one I'm going to short. Crude is pushing higher, and we are bullish for crude on the day. So if it continues to push higher and give a pullback to the buy side on crude, we're interested in that as well. Just make sure the dollar is still participating in this party. Yeah, here's the Euro futures. Could certainly see a retest of this low, which is fantastic. That would mean a strong dollar, 109.20. That would be nice. So if we get bonds breaking out, dollar getting stronger, breaking out against the euro, you know, the metals are dropping. So if we can really get this party started, we could have some good opportunities today. So I'm excited about that. This might be one of those days where we trade all the way into the close. But to do that, I have to conserve my energy, be able to analyze effectively hour by hour. I can't talk for 8 hours straight. That's a bit much, even for me. All right, guys. So let's, I'm going to leave the stream running, and I'll leave ES for you if you want to watch ES. I'll leave ES on the screen, and it's 10:10. I'm going to be back. I'm going to take about a half-hour break. So I'll keep streaming, but I'll be back in a half hour, and we'll see what we got shaking. All right. So, yeah, be right back. Guys, this thing may really start dumping here, so I think we're gonna have to bring out the 15-minute chart. I'm just gonna run upstairs and grab some chocolate and some things, then I will be back because we can't wait till 11. These things might just, you know, ES might be 20 points lower by 11. So when I see opportunities like this, I got to remember to bring out the 15-minute chart for us. So I'll do that when I get back, and we'll see if there are any trades. I'll be back in like 3 minutes. As we're back, go ahead and turn off the all right, so here we are. Yeah, so I think we're gonna have to see if there are any opportunities on the 15-minute, because it looks like we're off to the races now across everything. So let me go ahead and just set up we just hit the weekly volume point of control there, and the value area low on ES at 47.90. I think it's the market overall is weak, so we're just gonna have to see if we get some sort of a pullback. I think we go ahead and just get the 15-minute all set up. To be very careful using the 15-minute chart. Very. So let's see what we want to watch here. All right, so here we have the hourly to the left and the 15-minute chart right here is our focus chart. And you can see this is ES. So I have to see if I want to. Let's look at the NASDAQ. We've tagged some pretty good support now. So, and we are into some daily support as well on the NASDAQ. So I'd have to see a pretty serious bounce, but let's keep an eye on it. The indices are more likely to, you know, we're probably more likely to get a good trade on an hourly close on the indices, but we'll follow the 15-minute anyways. But it's more ultra bonds I'm kind of interested in. You see bonds here, they're not buying into the party yet. That was the 30-year. Here's the ultra. We're still, see how we've been stuck at the same spot here for the last, gosh, on bonds since we dropped that initial drop. We're kind of just hanging out here. Let's look at gold. Yeah, trapped. Gold's not off to the races. Silver's trying to get off to the races. As I'm looking at this as well, you guys, I'm looking for where we are in relation to the weekly point of control and the weekly value areas. That's really important. Copper, platinum. Crude pushing higher. The 10-year is still, I mean, we're just stuck. You see how the 10-year and on the daily, we're still at the middle of the moving average envelope. So yeah, there's still, you know, it looked like we were going to be off to the races to the downside, but then when I came back and I see immediately on the S&P 500 and the NASDAQ, what you can see, here, I'll show this to you guys. Here's the weekly. Still hourly bars, but it's on the weekly volume profile. You see here, this is the ES. You see that that's the value area low right there, pink, right at the point of control. That's a ton of support. So we're not going to be off to the races, you know, to the point where I would use a 15-minute chart. I will use the 15, but it's when we really start breaking key levels, and then I've got to dial down into that lower time frame, you know, to give myself an opportunity to jump in on a pullback, right? I can show you an example of that here in a minute. But right now, we're still in the value area for the weekly, and so therefore the hourly could hold here and, you know, push back up. We'll just have to see, because there's a lot of support right here, right now. You see, we're right back at 4,800. And then here on, let's go ahead and, we know the bonds aren't really doing anything right now, so the bonds are actually pushing higher, trying to. Gold is just sitting here doing nothing. Let's see if the dollar, yeah, the dollar is trying to push higher temporarily. sorry, the euro against the dollar. So dollar's just getting a little weaker now. So there's silver looks weak overall. Where are we? Yeah, silver's looking pretty darn weak. Or at least we're making new weekly lows here on silver. We're below the weekly value area low. So I can leave the 15-minute chart up on silver and we'll keep scrolling around. But there's got to be, you know, silver would have to give me a big pop. Right now it's 1026. Probably not gonna, I don't see anything, you know, screaming at me. Look at, I mean, just look at ES here. Pulling back, but you know, those lows, you need to see a solid break of 47.85 before I'll see. And again, back to the reasoning. It's because if I want to go short, right, this is an area where I would go long, right? Because we're in support here on the weekly value area low with the point of control. We still have some OMA support there, but does that mean I'm just going to buy this support? I mean, certainly not on the 15-minute chart. We'll just have to see. It's tricky currents today. Looking at the NASDAQ again. I think it's going to be a range day. I'm going to read how the market is digesting the CPI number, but it looks to me to be kind of like a confusion number. I think the rest of the day, what we're going to see is stocks in a range. And if we look at, I'm just going to go ahead and get rid of the 15 for now because I'm no longer interested in it right this exact moment. But here you can see on the hourly, if we go ahead and look at, you know, the volume profile here, this is the daily volume profile. You see how you've got 1, 2, and now you're potentially putting the third balance distribution here. I talked about this in the volume profile playlist. This is indicative of a range bound day. So you also got the weekly point of control for the NASDAQ right there, right? Coming, and you've got on the ES, it's even better because on ES, go ahead and bring up ES here. You can see the volume profile even better on ES as well. This is just the hourly chart we're looking at right now. Yeah, that looks good. Yeah. So here's the ES. And you can see the volume you got the point of control up here. 48.28 more or less. And then you got a lot more balance in here. So now if we start to put in a lot of volume down here and we get this sort of 3 equal distributions, and you're right at the weekly point of control is here at 47.92, you know, more or less. That could mean that the hourly is going to punch back up here and then maybe roll over and punch back down. So we could see a range. I think a range is most likely here for the rest of the day. And depending on what the markets look like at this 11 a.m. close, depending where we are, I could potentially be willing to buy ES because there's still a lot of daily support here. I mean, we tried to break through it, we couldn't. The weekly point of control is there, the weekly value area low is there. So there's and now what we can see is there's, you know, a lot of volume coming in here on the volume profile. So if that volume is coming in and price is moving up, what does that tell? It tells us there are aggressive buyers here, right? So tricky day, but we're navigating it well, and I want to see where we're at with the 11 o'clock close in a half hour. We don't have any more major news today. Now we're back. Certainly if we close above 4,800 here at 11, I think, you know, you're probably going to see a move back up to 48.24, 48.28. So it could be the kind of situation where, you know, risk 7 ES points to try and make 20, 25. That's a pretty good risk to reward. So, but we'll see where it closes at 11 a.m. Let's look at the NASDAQ. Kind of same with the NASDAQ, but I do like how the volume profile on the weekly supports the long on the S&P more so than the NASDAQ. Let's see, the Russell and the Dow, see, they were the ones too where they were kind of like, you know, off to the races and just, oops, not so fast. Not off to the races. Look at the Russ. I mean, look at all this volume coming in on the Russ right here. Right there. Getting a new volume point of control there, I believe. Let's check it out. Yeah. Your volume point of control now is coming in right there on the Russell, right at the value area low on the daily volume profile. But the weekly Russell looks weak. I gotta say, the weekly on the Russell looks very weak. So the Russell IB still definitely, the Russell's the one I want to short. If this closes up in here somewhere, I definitely want to short the Russell. Because I think even though the volume point of control is here right now at 1952, I do think that if we push back up here to 1976 to this high volume area, daily value area high, the volume will come in, the selling volume will come in here and shift the point of control, and this thing will drop. Because that's also right at the weekly value area low that's already been broken is right in this area too. So Russell looks very weak. I like it a lot for shorting. I just want to wait for it to develop. ES, like I said, it's kind of hanging on a little bit better. I could potentially long ES again, like I said, if we close above 48, because you could see a little bit of a counter trend punch. But I think the safer play, looking at Russell and, you know, looking at the ES, looking at NASDAQ, I do think the safer play is to wait for a pop to get short. So I'm going to be careful on the long side. Let's look at the 30-year. So we're just waiting for a pop, you guys. That's what I'm waiting for. If you look at the ES here, I might. There's a lot of support here. I already gave my reasons why. Weekly point of control, weekly value area low, volume coming in here on this lower distribution. So it could be setting up an 11 o'clock pop like this. It could. It's something I might take a shot at. Let's see where we're at 11. But I do think if that happens, I do think the safer bet is to wait for that to happen. See how high it goes, the higher the better, and then short the you-know-what out of it. That I think is the better play. But I might long it here because of all that support. But we have to see where we close. So that's the ES is of interest for 11 a.m. NASDAQ, definitely. I mean, if we were to pop back up to these highs and suck in some longs, I think you could have a great short up in there. So let's see. But I'm open to longing those two potentially at 11 a.m. The Dow I'm not doing anything with. The Russell, I'm not going to long this at all because it looks super weak, but I'm hoping that we get a pop so we can short, you know, maybe around noon, a drop and ride the Russell into the close. That would be nice. The bonds are just sitting here. Look, guys, doing nothing. I mean, super balanced profile for the moment, which tells us what? Tells us that price is happy here for the moment. You know, I think I'll start having my charts like this. What do you guys think? Do you guys like this? Because this shows you the hourly. You get to see all of it, and you get to see the volume profile very clearly. And then when I want to bring your attention to the daily, I'll just do that. I'll just bring the daily over here. We can talk about it, and then I'll put it back. And if I want to bring over the weekly volume profile, I'll bring it over here. You know, we can talk about it. How do you guys like that? I think I like that. That's how we're gonna rock and roll. Get this set up so it's all nice and my liking. Okay. I think that's what we're gonna do because I see a lot on the volume control that I don't really talk about to you guys a lot, but I know that there's a lot of interest, judging by the analytics on the channel, for volume control, since not a lot of people know how to use it. Certainly nobody's live trading with it. So I'm happy to show you how I use the volume control, volume profile. points of control, value areas, all that stuff across the different time period charts. I've even got the hourly over here. You see, this is the hourly volume profile for each hourly bar. Also important. I don't use it as much, but it is important. Keep it over here for now. Okay. So I think that's good. That's what we'll do. I'll have some chocolate while we're... And let's hope that the dollar continues to get strong, because I have a US dollar wire coming in, and a strong dollar is good for my getting US dollars into Swedish kroner. Let's pray for surf there. All right, here's gold, not doing much. A lot of pain in these markets. I think a lot of people are not having a good week. I mean, I know for sure, because this is the kind of week I would have not had a good week on a couple years ago. And you learn by having horrible weeks how hopefully not to have them. Doesn't mean I still don't have bad weeks. Of course I do. But that's just, those weeks come when it's just a matter of the probabilities. Just hopefully you took good trades and, you know, you just had a losing week. That happens. Not often, but it does. All right. So let's look at, we got enough happening now today on the indices that I don't think we need to look at any of the exotics. And so like corn and soybeans and all that, they're kind of just there if I literally don't have anything else. We'll start using them more and more. All right, let's look at silver here. Yeah, you see silver rebounding strongly. I'm still liking the short side of silver a lot, but again, on a pop. Oh, I said I was going to read the news, right? Yeah, let me just check that real quick. Let's see what Zero Hedge, I like Zero Hedge a lot. See what they have to say. Headline CPI, hotter than expected. Food costs hit record high. You know, our food costs here in Sweden aren't really bad. I mean, some things, but... Oh, you know what? I got to check. Give me a sec, guys. I think I have one cigar left, but if I don't, I'm going to have to run to the cigar store. Not right now, but later. Let me just check that real quick. Give me a sec. I'll just leave everything running because I'm literally going to go upstairs for like 2 seconds. I'll be right back. So just mute it, but I'll be right back. All right, guys, we're in luck. I'm down to my last cigar for this evening. Otherwise, I would have had to make a quick run to the cigar store, but I don't have to do that, which is nice. So I would have just done it during the 12 o'clock hour when it's slow. But for now, I'm happy I don't have to do it. I can go tomorrow. All right, let's see here. Headline consumer price inflation. Yeah, was hotter than expected. Yeah, our food costs here in Sweden aren't bad. That's what I was saying. I mean, they're a little higher for sure, certain products, but not everything. But I know in the US it's getting really bad. I'm just reading what Zero Hedge has to say. Yeah, so it says more problematically for the Fed and the rate cut hypers is the fact that core CPI services ex shelter super core rose 0.4. So you gotta get down under the hood of these numbers. Zero Hedge does a good job of that. Upticking the year-over-year rise to 4.09%. Yeah, the Fed has highlighted this as an area of focus. So it is a hot number. Just waiting to get to the summary here because this is important information. Yeah, I think definitely based on what we're seeing under the hood for this number, this is why we did see that initial move to the downside. And I think that will be the move for the rest of the day, especially looking at the charts. But knowing the number, it does help because that's a number that the Fed is not going to want to see. And it's punching a hole in this, narrative that we're going to start lowering rates in March or whenever. That's probably not going to happen, especially if numbers like this keep coming out. And we're already January now, right? So imagine if the Fed doesn't cut in March, like everyone thought, and if something happens with the bank term funding program. I mean, and this is why I think gold and silver are foreshadowing that. So we're gonna have some really good trading, fantastic trading when these markets really open up. I think even the rest of today we'll see. And when I say good trading, I don't necessarily mean the results. Hopefully the results follow, but it's more just good setups. We take them again and again and again. Hopefully at the end of all of them, we have some good results. But here, you see how, here's silver. This is the daily chart. You see how we're just stuck in this range here, right? For the last 7 days, since this is the kind of trading we want. Right? This is when you get good opportunities. So if we can start breaking out on silver and some of the other ones, because of news like this is going to give us some fantastic trading over the next, several weeks. I mean, there's always good trading, but right now I see some good trade. You usually have these periods of consolidation where after these periods of consolidation, you'll get some good trading when it breaks out. And now we could be breaking out in a direction that's catching a lot of people off guard, which is a lot of people thought that we're going to new highs and life is good. I haven't thought so. And now this just kind of reiterates what I'm seeing on the charts. I just closed my door. My child was just having a temporary meltdown. Let's look at the bonds. So far aren't buying it, but same with stocks. If we get a pop on bonds, we're gonna have to short. Like a good pattern up in here somewhere. We gotta wait. You gotta let the market come to you, and this is why I'm trying to explain and hopefully help you guys out. It's like when we talked about this is gold, right? Like this is why you gotta, I don't say you have to, I say I like to, but I like to wait to short when I'm in resistance. I don't like to short hoping support is going to break. So that's really important. All right, so 10:43 a.m. We got a very clear plan, and now we're just waiting to execute it. I'm probably not going to play that long side there for ES just because that's the dangerous side. Even though it could pop, I've got to stick to my core principles, which is, hey, I hope that this weekly here, I hope that this weekly support level point of control value, I hope this gives us a pop back up to the weekly value area high, 48.30. Now we have some very good evidence that these highs, these are good areas to start taking some shorts. So that's what we're looking for. And these are the days where I'll go all day with my own trading because, on the days where I can see nothing's happening, that's why you got to just, hold up your tent and go home and call it a day so that you have the energy to trade on these days where, like today, I want to be here because I don't want to miss. If this thing pops at 2 in the afternoon Eastern, I got to be ready to short this thing, right? So that's how I like to play it. Chocolate. Switching over to NQ here. So volume profile is suggesting we're probably going to get a bounce. The charts look like we could get a bounce. Again, I'm going to be careful. I'm tempted to take that long just because I do think it'll bounce, but I gotta wait for that short to set up. I think that's the safer side of the zone. The Russell, again, my favorite. I think all this volume coming in down here on the Russell is basically ultimately going to prove to be selling. But if we could get a pop, I mean, look at this weekly structure, you guys, on the Russell. The volume profile here for the weekly. Look at this. These are hourly bars. They're just clean bars. They don't have my OMA on there. Look at this. That's the, you know, highly traded volume area. You can see the value area for this week is here. That's the old weekly value area high. But look, cleared out a ton of stops here on the back of the CPI. Now we got point of control and the value area high up here. We're breaking. This is what I want to bring your attention to. We're breaking through these lows at the value area low. And I think we're going to explore lower. And ultimately, you know, I don't know about today, but we're going to want to go check out this old weekly point of control at 19. Oh yeah, we could get there. I mean, today or tomorrow for sure. So the Russell, the bounces need to be sold now on the Russell for sure. It's also the most rate sensitive, right? So this hawkish number is going to weigh on the Russell the most. So I like shorting the Russell here. I mean, not right here, but we're going to wait and see how it develops. Good bonds. Any pop on bonds? So now we're just waiting, you guys. Just got a lot of resistance here on the 30-year. You got the weekly point of control up near the value area high on the weekly here. 30-year treasury bonds about 14. Probably a good spot to try and get short if we get a good pattern up there on OMA. Look at the ultras. Yeah. Ultra bonds are already breaking through the weekly value area low. Yeah. I think these things are going lower. You can see this is why I like that area to potentially short 11. You can see it tagged it right there. Went down. I suppose I could have been a bit more aggressive and shorted that, but at the time I didn't really realize what the news was under the hood. I should have checked that earlier. That's okay. These are tough bars here that follow these exhaustion bars, so it is what it is. Let's look at gold. I mean, gold from the short side is going to be good, I think, too, but there are way better trades that I'm going to focus on. Silver, definitely, if we get a good pop. What's nice with silver is that it's a big contract, so, you know, commission-wise, it's it just makes a lot of sense. Because, you know, you got to take more risk, obviously, but silver's nice if you get the right trade and you can. I mean, the levels are. I like trading silver a lot. You got to remember to drink water. Been drinking coffee today, but not a lot of water. All right, so it's 10:49. You guys hear my 4-year-old singing the Frozen theme song? She's in the living room up there. It's funny. I think it's a pretty good noise filtering mic. It didn't filter my clap, but I think it filters all the other noise. It wasn't cheap, and I bought it for you guys. Make sure the quality was hopefully okay for the sound. Sometimes there's a little crackling, but that's an OBS software issue, not the mic. I've read a lot of people have it, so it just kind of comes and goes because you're hooking up the OBS software to the YouTube live streaming. And I mean, overall, I mean, what do we have to complain about? Like, all over the world, we can communicate now and trade together. How cool is that? All right, so I think we've got a pretty darn clear, you know, lay of the land in terms of what we're looking for. And now it's just letting the market come give us some good setups. here on the hourly chart. Again, I will bring out the 15 if we're just firing and I feel like I'm going to miss something that I don't want to miss. Right now, we're not in that situation yet. We might be. Here for 11 o'clock hourly close for ES in 10 minutes. Like I said, I'm not longing this at all. I'm just hoping it pops to give a chance to short. But if ES pops, there's going to be better shorts on other markets. Here's NASDAQ. Not going to do anything on 11 because I'm waiting for shorts. The Dow. Not going to do anything at 11. I got some chocolate, guys, so forgive me if I sound like I'm chewing on something. I am. Here's the Russell. When control shifted now. No, it has been there. Yeah. We might put it this way. If the Russ closes down here, which it looks like it's going to, I'm probably going to have to bring out the 15-minute chart exclusively for our friend, the Russell 2000, because it may just head like, just see if I can find an example. It might just do this. And see, in here, you'll have micro 15-minute pullbacks. And if you wait for the hourly, it's nice. You finally get one here, right? That gives you a good short finally. Those are what I'm looking for, but sometimes they just don't come. So I think this could be a situation on the Russell where we have to take some trades. So does the 30 years not doing anything? The Ultra's not doing anything. I think these will break lower. They're just hanging on for now. Gold, silver's already leading us lower, but the Russell looks weaker. Copper, we're not outside the value area low yet. You see, the Russell's the best because it's, look how weak it looks on its weekly volume profile chart. Here's crude. Crude's pushing higher like we thought. You know, later in the day, we might get a good hourly pullback in crude, but I'll wait for the hourly on crude. Euro trying to stage a little bit of a rally here, but I don't see that. I think these reversal, I think it's gonna continue to be bearish. Strong dollar, weak bonds, rising rates, stocks under pressure, especially the Russell. I'm liking what I'm seeing. So here's the Russell. I'm just going to check the calendar one more time, you guys. Make sure we don't have any bond auctions coming out. We might. Not right now, but later at 1. Let's see. We've got, well, we've got some 4-week, 8-week auctions coming out 11:30. Those aren't that major. Or mortgage rates are coming out. That's not a big deal. We got the 30-year bond auction at 1 p.m. That's gonna. All right, Steven, if you're still with me, please remind me when I forget that we have a 30-year bond auction. Sneak away from your desk at your office and just message me. Go, Andy, that bond auction's coming out at 1 p.m. I'll try to write it down. No, usually I just remember these things. So 30-year bond auction at 1 p.m. That could be a good one. So we'll keep that in mind. But I think the Russ, so back to why, if you look at all the other charts, look at this weekly volume profile here on the Russell. Look at this. Break. 1, 2, triple bottom. We're holding. No, we're not. Boom. Straight through. And when you see a triple bottom on the hourly break like that, that's nice, right? So I think we are headed south because the Russell is going to look for new, you know, some new balance down here somewhere. So we go back and look. Last couple weeks, it's gonna. It wants to go back to that point of control here that I'm searching for. 1910. This one, right there. Probably where we're headed. I don't know about today, but I would pretty much guess today, tomorrow, headed lower on the Russ. So let's get ready. Go ahead and do the 15 roll. Boom. There's our 15-minute chart. Exciting. All right. Russell trading. Set up my I'll let you guys know how many contracts I trade, but just know that your trading is up to you. See the risk disclaimer. Anything I put on is up to me. Anything you do is up to you. So don't construe this as financial advice, you guys, but I can give you advice on dark chocolate. That I can do. I'm qualified. I have a certificate for that from Lindt, and the 90% dark chocolate is absolutely fantastic. I highly recommend this. So I do recommend you buy Lindt chocolate, but just I can't make financial advice, unfortunately. All right, now we're just going to apply the same idea on the 15 that we do to the hourly. We still wait for pullbacks, but you're just more likely to get them here on the 15. Now I feel very confident that the Russell is going to head back down to the lows of the week from maybe Friday's low. Yeah, we're making new lows for the week right now. I think we're going to break through last week's lows. Happened last Friday at 1940, and then once last week's lows, if those break, you'd see a pretty swift move down to that old weekly volume point of control in 1910. Is it going to happen today or tomorrow? I don't know, but probably going to happen. So I need to be ready to short rallies. And we'll still check in on the other charts, but this just looks the weakest. So why not go with that? Gotta tune my guitar so we can play some guitar while we're waiting. I don't play guitar. I suck, but I can at least practice. Not now, there's too much going on, but in the future, maybe I'll learn and we can play. We want any cool blue lights on? Maybe we do. Cool, let's throw. I'm digging it. I'm digging the blue lights. Let me know if anybody has any questions. And if you guys happen to catch this, once YouTube figures out that we actually know how to trade here and we overall make money and give good advice, people start catching on to the fact that this is actually a good stream worth watching. They probably will come back and watch the old videos that we're storing now in our live video archive. So if you guys have questions when you rewatch the video and you post the question in the comment section, I will do my best to answer it if I can. If I can't, then I'll just tell you that I don't know the answer. That's the advantage now while we have a small channel, is that we can really interact personally, and it's kind of fun to see who's in the channel in the early stages, because I know the channel is going to grow because I've seen the competition. No offense, competition. I mean that in a very loving way. But you know, it's watching people trade is one thing, right? But I mean, I don't know. If I was learning, I would want to watch and learn. I think that's what's so much fun about trading, is just constantly trying to learn new things. All right, so here's our 11 o'clock close, and we've got the Russell. We could get a bounce here, you know. I'm hoping we do, because that key level that broke was the weekly value area low. That triple bottom that broke, that's all coming in at just below 1970 up in here, right in this level. You can go ahead and draw this right here. That's gonna, just like what the bonds did, where I was looking to short the bonds, which you can see here, which I didn't, but I was looking. That was right there as that came back up to the weekly value area low. I'm looking for on the Russell. Let's see, ES here. We're breaking. So this is key too. You got to know, like, now you see with the context how all this is happening, and I teach this in the course, is that, you know, when you start learning my methodology and you learn how to, you know, plug in the different time periods and patterns and, you know, everything that's going on that I'm talking about here, you'll get a sense, you'll learn, you know, where to take those patterns, right? Because it's all about context. It's not like, oh, well, there's a pattern, I'll just take it all the time. It's like, no, like, here's something under normal circumstances that could be a decent buy pattern on ES. I'm not taking it. Why? Because the current circumstances that we're under, right? So we're focused on the Russell. And what we want to know about the Russell is I want to bounce, but the reason I've got the 15-minute open is because we might not get a bounce on the hourly. If the hourly starts breaking lower, that means that this 15 minutes is going to start trending lower. Then the best I'm going to be able to hope for is like a micro bounce on the 15 that I can get short. And then my goal is to try and, you know, maybe get short a couple of contracts, try and hold one, you know, for the rest of the day, and then just try and, you know, short, cover one, wait for the next 15-minute bounce, short, cover, kind of work around the main position if you end up dropping. So let's see what happens. And the 15 minutes still a pretty safe chart because you're waiting 15 minutes at a time. So, and I do wait for the closes because, again, it just helps to anchor my decision-making process. Sure, I miss out on, sometimes you miss out on, you know, a price move that jumps up into your resistance area where you want to short. It doesn't close there, it comes down. You miss the trade because you're waiting for the close. But I can tell you, in my experience, for me, it helps me stay out of a lot of, you know, if I just wait for the close, it kind of reinforces the discipline and the patience. That's, in a nutshell, what I'm trying to say. Now we're just going to wait and drink some water while we wait. Check some more news while we wait. I'm going to write that down. All right. That's really funny, the Zero Hedge. You guys should go to Zero Hedge and check it out. The headline article is about the headline CPI. And, you know, the Goldilocks scenario. They have a picture of Goldilocks walking in the forest with two bears about to eat her. They said it's the Goldilocks scenario. Dead. That's funny. I think the Goldilocks scenario is dead. Iran hijacks oil tanker in Gulf of Oman. Well, geez, that should help crude to rally. Probably why crude is... Okay, yeah, that's why we're seeing this bump. So crude is finally responding to some of this geopolitical risk. We could see a pretty serious move to the upside in crude today, based on the charts. And now Iran hijacking an oil tanker. I got to read through that article more, but so I'm not going to follow crude here. I want to short the Russell instead, but we'll wait hour by hour. And if we get a good little pullback on crude later this afternoon, we might short it because it's exiting the value area high here for the week. So if we pull back to the point of control, Could be a good place to get long crude. That's at 72.80 more or less. All right, so that's crude. Good to know. The Iranians are busy hijacking tankers. Let's look and see what else we got going on here. Wall Street's not happy about the hotter than expected CPI. Yeah, I think that's pretty, we're pretty up to speed on the news. And now we're waiting to short. So we'll long crude later if we get a pullback. We'll turn our attention back to the Russell. It is 11 a.m. Eastern. For you guys in the US, still pretty early. For me here in Sweden, 5 p.m. That's all right. Money must be made. Trades must be taken when the opportunities are present, and certainly the Russell is looking very nice. So on the weekly here, the 15-minute chart, Russell 2000, you got support. We're just looking for resistance up in here somewhere, kind of into anywhere from 1968 and 1964. That's a pretty good hourly resistance zone under these circumstances right now. So if we ask ourselves, where is that on the 15-minute chart? It's right here. There's 1968 to 1964, drawn in red. There's our hourly resistance zone. So if the 15-minute, for example, here wanted to pop up and go right into that extension, right at that level, that's where I'd be willing to short, because I would anticipate that that hourly resistance would be strong enough to knock that back down and start heading lower. So that's the kind of thing that I'm looking for. And I'm very content to patiently wait for it, because it will come. You know the movie Field of Dreams, if you build it, they will come. This is, if you wait for it, it will come. No, but I think it's if you build it, he will come. And he's talking about his dad, for Shoeless Joe Jackson. But some people think it's if you build it, they will come, from Field of Dreams. That was a good movie. All right, ES 4788. We just want to see if the other markets are kind of in agreement here. Yes, definitely. Making fresh lows. Beautiful. Bonds are still hanging out, but yeah, they're going to drop. Sure. I'll have to keep my eye on bonds a little too, because that's a good little resistance level right there for bonds. Kind of flop back and forth between, you know, the ultra bond. Silver, I think, is going to really start breaking down. So I'll look for pullbacks on silver and the Russell. That's what we're looking for right now. We'll just kind of flip back and forth. We've got 5 minutes to go until our first 15-minute check. You see how we use the hourly and the 15? And when it's time to use the 15, we pull it out of our back pocket. We use it. And when we're done, we put it away and we wait for the hourly. And on crude, we're still waiting for hourly setups, potentially. And we're not going to mess with any of the ags right now. My last little bit of coffee. All right. We are waiting nice and patiently here. Those of you who don't often trade the Russell, it is a smaller contract. So I believe, I think it's, I always forget with the Russell, but I'm pretty sure it's $5 a tick, which makes it $50 a point. Pretty sure that's what it is. And, you know, so if you have a 3-point stop on the Russell, that's $150 risk per futures contract. So depending what you want to risk, how many contracts one would put on. I'll let you know in the moment when I trade what I'm doing, but again, just don't construe it as financial advice. That's important. It's 11:11 a.m. Seeing if we can get a pop. Look at the ultras. Waiting for a pop. If you wait, you'll get it. Silver. So silver I'm waiting for as well. So we're just going to wait here together, guys. News while we're waiting. If you got any questions, let me know. I'm going to read through this Iranian oil tanker. That's interesting. All right, the Russ is dropping. When I get short, I'll probably start out with 2 or 3 contracts, but I'll tell you. Right now I've got it set to 2. Again, because it's a smaller contract. And we're going to get a close here on the 15-minute. Close in the 15-minute in 30 seconds. Make sure we're not missing. We're not getting a pop here. Are we getting a pop in the ultras? No. Silver? No. So we can see we're in this congestion zone on the 15-minute. You've got that support there. That's probably going to break. That's the low of the day. But we need to just stay patient. I'm just waiting for a test up in here. We will get it at some point. S&P is really dropping now, 47.78. At least we have clarity now. I'm really happy about that. It's nice when you wait and then you get some clarity. Here you see this is the, yeah, I'm waiting for a pop because we're going to get it on one of these markets. I don't need to chase. I want a short resistance even on the 15-minute chart. So here's the 30-year. Might give us a pop. Here's the ultra bond. You know, might pop up here. You just don't know. I think the S&P and the NASDAQ are going to continue to drop as well, but the Russell again is the weakest, so that's the one I'm going to focus on for the indices. Gold, I suspect, will drop. Yeah, it already is dropping, joining the party. I suppose a big pop on gold I could short. It's going to fall like everything else. But I like silver better. Look, silver is just not dropping, not popping at all, just dropping, but we're waiting on silver. Crude, if we get an hourly pullback, we're interested. So we know why we're here and what we're doing, you guys, which is very exciting. I'll be pretty aggressive in terms of if something looks okay on the 15-minute, but not perfect, I'm still going to take it because everything else looks so good. But I'm still going to wait. See the ultra bonds here, they're back near 128.29. So hopefully the bonds can push a little higher, take pressure off rates momentarily. That could give us our bounce in the markets that we want to get short. Just a personal style. I don't recommend chasing, you know, trading breakouts. I think is pretty, it's just a little bit of a more dangerous way to trade. I guess it depends how you do it, but for me, if I got to put my stop, breakouts just make the stop placement more difficult. But, you know, and in this case, for example, with the Russell, I mean, we are going with the energy now. I don't think we're going to get a pullback on the hourly anytime soon. So that's why you shift down to the 15-minute. And then you're kind of trading the hourly breakout, but you're using the pullback on the 15-minute to do it. Hope that makes sense. A bit of stretching. Oh. Oh, Russell's trying to bounce a little bit. And this is the thing too, you know, you see so many people out there on YouTube and they're ballers and they're living the dream and they're trading from a beach. I mean, I think all that is total horseshit because trading requires an enormous amount of focus and planning and preparation and patience and discipline. And I mean, you can generally tell, you know, you shouldn't judge a book by its cover. I don't agree with that. I think you should judge a book by its cover. So you can tell by, you know, looking at someone who's probably disciplined and who's probably not. And that's just the harsh reality of life. And when you see some ballers out there with, you know, all the bling and all the bullshit, they're probably not traders. You know, you can just tell. And if they are, then I want to see them get on YouTube and trade live every single day and see how you know, see every trade you put on, every trade you call specifically. Because I think that's kind of where the rubber meets the road. That's the litmus test. That's the importance. Can you get out here and call stuff in real time? You know? And if you can, then fine. But if you can't, then you got to question the person who's telling you that they're making all kinds of money trading, because it's probably not true. That's why I'm excited that we're on this journey together. And first few days have been fun. I started I made the commitment to myself. I was kind of going back and forth with it. I was testing different formats in terms of, you know, if I'm going to stream, how am I going to do it? What do I want to trade? And I finally, it felt right to me last Friday, like really right, after a lot of thought, like, do I want to do this? You know, I thought, you know what, I'm just going to do it. I'm going to commit, you know, barring something crazy, I'm going to commit to doing this for the entire year of 2024. Streaming at least, you know, the New York Open, you know, those 3 or 4 hours every day when I'm trading my account, and just, you know, start compiling a YouTube track record of my trades and see how it goes, because why not? What's the worst that can happen? Well, I suppose I could fail, but, you know, we fail all the time. So I thought it's time to go for it and try to do my best to bring some type of authenticity to the sea of bullshit out there, basically. So that's that. And we got off to a good start on Friday with the one silver trade. That's the first trade on the really the public, even though I've posted other trades and stuff. But this is like, okay, now this is YouTube. Every day I'm showing you exactly what I'm doing. I'm telling you the trades. We're going to keep tallies. So Friday was kind of like the first one with silver. And would have been a much better day had I just stuck with that second short. I should have in retrospect, but I had my reasons for not doing it. Also, that was my first day streaming. I feel much more comfortable now that I'm even just 4 or 5 days into it. So anyways, that's the first trade of the live streaming. And that was Friday. And Monday, I missed a platinum trade. So that was missed. It's just really just been waiting for the markets to give us our answer on which way they would like to proceed. Now we have that answer, which is beautiful, because we've patiently waited for the markets to show us their hand. Now, does that mean our next trade is going to win? No. But it does mean at least the trade that we take next, and we've got a good reason for doing it. We were patient, we waited, and we're executing our plan. And that's all you can do. And the rest is up to whoever's in charge of this stuff. We just got to follow our process. All right, so it's 11:23 a.m. and we are going to, so this is the Russell, we're waiting. Go ahead and look at the Ultra Bond, dropping, nice. We're just waiting for any of these to just keep dropping. There you go, some selling coming into the Ultra Bond. Look at silver, silver's dropping nicely. So I hope this is clear, even though we're not in any trades right now. You see how we do the analysis, and the analysis works. And so do the trades when we put them on. Not every time. Phone. Stretching. I'm just gonna use the restroom real quick, you guys. I'll be back in 2 minutes. We'll see what's going on for the 15-minute close here at 11:30 a.m. But excited to pretty good setup. Be back in 2 minutes, maybe 3, but not long. Just gotta get my OBS. There it is. Still figuring all this stuff out. All right, we're back. And well, I guess I can just minimize my FPS like that. A bit easier. Cool. All right. 1127. Yes, is back to 4780. Look at the ultras. Silver. Silver's nice too because we just had a beautiful pounding lower here on the weekly volume profile, which is fantastic. I think silver. I gotta have my my DOM ready for everything. There. Cool. The main markets I'm interested in all plugged in and ready to go. Get the Russ. Sometimes this can be the hardest part, is just you kind of, you've got a great read now and you want to be in, which I do right now. But I just have to wait for, a decent little pop to get short, because the odds are, even though some days these markets just go down or up without literally a pullback, those are incredibly rare. If you wait, you will get a pop. And just the worst thing that can happen is, you short into a short-term support, and then you got to sit through a 10-point pullback. That's, on the Russell, even one contract, right? That's $500. So that's not fun to sit through that if you don't have to. And I certainly don't want to sit through that. That's why I'm selective in waiting for my exact spot to enter. Now, when it comes to my spot, I'll take the trade, and whatever the outcome is, I'll accept it. But I'm going to wait for my spot. And right now with this closing, it's going to be 11:30 here in 15 seconds. This is looking to me like it wants to head lower. But I'm just not going to short here because we're not popping. We're still in support. I think this support's going to break, but I don't short into support. So I wait. And then if it does start to pop up here, then I'm in a good position to short, because I haven't blown my powder down here in support. Right? So that's important. Got to keep the powder dry. Keeping the powder dry means you miss out on a lot of trades. Like, you see, this is also, right? We're in 15-minute. Here's the 15-minute congestion support zone. Here's the 15-minute congestion resistance zone. Do I want to short ultra bonds here? No. We're here. I want to try and make, and I think this could go down for sure, but if we're trending, then I'll take a pullback like that. But in congestion, I have to be up toward the upper end of the congestion zone. So there's gold. Beautiful drop. Steven, your demo short on gold is looking amazing. Job. Let's look at silver. Dropping nicely. Crude. We're waiting for the hourly. Let's go back to the Russ. I think the Russ is just going to drop here. If I can find an example, here's the hourly chart on the Russell. kind of like here, right? Like, this is a great example. This is just before CPI. Before, we didn't have any idea. We were waiting to see how the day was going to turn out. So this is just a good example. Let's just say like here, right? The hourly is dropping, and then you make a new hourly low. Imagine all the people that just shorted down here, and then you just get nailed. That's this thing. That's why you want to wait for that. And then, right? We didn't take this because of CPI. That's fine, but that's just the general idea. Like if let's say you're bearish the Russell, and here's the hourly up here, you're in congestion, right? You're range bound. You're kind of you're cycling here, and you want to get short, let's say, right? So as this starts to break down, oh my goodness, I can't take the patience anymore. I got to go short. And then that happens. And what you got to wait for is you got to wait to get back to the upper end of the zone. Sometimes you miss it, but that's where your risk is most definable. That's what you wait for. And it makes trading sometimes frustrating, sometimes boring, but it's consistent, and you have the best risk profile by looking at it that way. I know that's not what all the crypto bros in Miami want to hear, but that's the way I trade. UB is probably going to now snap down to here at least 127.31. Oh, look, there it goes. I think we're probably going to snap now on UB, because look at gold just leading the charge with silver. Russell's not pulling back yet. So hopefully UB can just hang on a little bit longer, give me a sneaky pop back up in here, and let me get short to go back down like that. May happen, it may not, but trust me, I know UB. It can be a sneaky one. There are times to chase. Right now it could just break down, but more often than not, you just wait. If I sound like a broken record, good, because that's the point. When I get lost on this screen or this screen, this is because I'm looking at the other charts. All right, chocolate time. We're going strong, you guys. It's been streaming for, I don't know, what, 4 hours. Nice. I'm sorry, I don't want you to hear my chewing. I can mute. All right, delicious dark chocolate. Thank goodness for dark chocolate. What enables get through long, cold, dark Swedish winter days. And you got to ask yourself sometimes, like when I'm looking at this, I'm like, man, how am I not in a trade right now? But look, 99.999% of the current drop here on ultra bonds was in 10 seconds on the back of CPI, right? So we're not going to get in there. That's CPI. And now we're just waiting. Sure, I picked a good level. You saw the level there live in real time. I picked it at 11. That was the high. But at that exact moment, I still didn't feel ready, so I didn't take it. But a good call nonetheless. But a huge, huge daily range. And when you're trading after that huge move like that, you just, got to pick your spots a little bit more carefully. So, because we didn't have confirmation on this particular day for me until, we saw what CPI did, we saw how the market responded, and then it became very clear as we started to see the various markets pounding through their weekly value area low levels. And now we can identify the weakest ones, which we're seeing based on the weekly volume profile, is silver to the downside, the Russell to the downside, ultra bonds to the downside. So now we've got a very clear playbook for the rest of the day, and it makes it worth it in order to, wait until you've got that clear playbook. So Steven, he says, what have I missed? You missed everything, Steven. I made $10 million while you were gone. I bought a Rolex and a Bugatti, and I'm going to put it in my next video on YouTube. I'm going to make lots of shorts, and it's going to be incredible. Does that bring you up to speed? No, you missed. I mean, it's coming together now. The picture is very clear. We know exactly what we want to do. What you should do is just put the live stream back, I just gave a pretty good recap. Put the live stream back maybe 5 minutes or something, and then just watch it forward on ×1.5 or ×2 speed, and it'll catch you up on where we are. But we're looking to go short the Russell, silver, or ultra bonds at this exact moment. We've got the 15-minute chart because it looks like we're going to start seriously breaking. We've already started. I thought we were going to break lower on silver when we were up here, and here we go. So we're identifying some very good levels here, and now we're just waiting for a good opportunity to enter from the short side on these markets. And in terms of the indices, the Russell's the weakest. I've been talking about that all week, so it's the one that I'm looking to short here. It also looks the best on the volume profile, the weekly volume profile. So I'm waiting for a pop. So here's the 15-minute Russell. I want to see if we can get a pop to get short. Ultra bonds, I'm also waiting for a pop. But I explained how I'm using my 15-minute charts. I'm waiting for the appropriate areas in which to transact. Okay, cool. That'll catch you up. And you can catch up on where we're at. So let's look at the Russ. Waiting for the pop. Let's look at the ultra bonds. I think these are going to catch down here to gold. You can see gold is just getting slammed. Beautiful. So even a pop on gold right now. I mean, everything. This is beautiful. CPI caught everybody off sides. We're resuming that initial energy now. I'm pretty sure if we look at like ES and NQ, this is beautiful. The yearly, quarterly forecasts are intact now. Here's the weekly NQ. Now we know that that pocket is probably strong resistance, and we are going to resume the party to the downside. So feeling very nice and comfy about all the analysis at this exact moment. And I'm just waiting to get short. I think the longs, and this is the thing too, there's probably, you should go check out some other channels. They're probably like, watching NQ, waiting to get long on this dip. Have fun with that. Should have watched this channel, then you would have known not to get long on this dip. Because it's not going to be a good situation. It's not going to end well today for you. Nothing is certain, but I can get a pretty good idea based on the weekly volume profiles, what's going on. You can see the charts using OMA, and you can really see the intermarket correlations when you look at the indices, bonds, gold, silver, platinum. The crude is the only outlier right now, but that's because the Iranians hijacked that tanker. And we're waiting for a pullback on the hourly, maybe to get long crude later, but we got to wait and see. So that is where we're at. Ultra bonds dropping. We're 11:40 a.m. So we got 5 minutes until our next 15-minute check. And then we've got 20 minutes until our next hourly check. See what crude is doing for us. Just kind of hanging out. Platinum off to, I'll short platinum too. I'll short anything. Just want to get a nice pop because they're all going down. Again, not financial advice. I have to constantly reiterate that. I can't even speak. I guess that's acceptable, right? If I get a little tongue-tied after 4 hours straight of talking, I have to always reiterate it's not financial advice. Please see the full risk disclosure, because the world is full of people who don't want to take responsibility for their actions. So that's why I have to say that. Here's silver. There's copper. You see, they're all correlated. They're all not liking the CPI. Here's ultra bonds. Here's the 30-year. And here's our good friend, the Russell. We're waiting to short anything on a pop. And it could happen too, you know, as well, like the Russell. If this thing pops up here to like 1953, you know, I'm going to have to short it. But my stop is going to be, you know, pretty tight. And if I take a loss on that, it just means I shorted too early and it's going to go higher and I'll short again. But this is tricky when they're dropping this fast, you know, and I'm counting on hourly support breaking. This is the trade I rarely will take unless I feel very confident in the direction of the overall markets, which I do right now, which is why I'm waiting for the 15-minute to at least pop. Steven, when you're back, let me know if that makes sense to you, what I'm talking about with, you know, when I use the 15-minute and why. I want to make sure that I'm explaining that clearly. Here's gold. If you guys ever wonder what chart we're looking at and I don't announce it, just look up here at the symbol GC G24. You can read it here, COMEX gold futures. Silver, platinum, Russell. So it's 9:43. We got 2 minutes until this 15-minute close. I was cracking my knuckles there for you guys. Didn't want to record that, so I muted it. Stretching. All right. We can look at the Dow just for fun, but I'm not going to trade it. It's weak. Definitely weak. We're breaking through the weekly value area low here on the Dow. The Russell, very weak. Ultra bonds. If I was super aggressive, I could have shorted there, but I have my reasons not to. When I'm in congestion, I'm just not shorting the support level on the congestion, and that's just the way the cookie crumbles. Here's silver. Here's gold. I'm just kind of flipping back and forth, guys, because anything that pops, I'm shorting. And we're going to get a 15-minute close here in 10 seconds. For latency, you guys know how far you're behind. We're coming upon 11:45 in 1 second. Boom. That's 11:45. You could see 15-minute flopped over to the next one. So now you know what your latency is. We are waiting for a pop. It feels like it takes forever, but it really doesn't. It's just because we're waiting. If we were like watching a movie right now or doing something else, you know, this time would go by fast. It's just that when you sit here and watch, that's why it's important sometimes, you know, I got to remember too, even though I'm live streaming and planning things, which is fantastic. Sometimes when you're waiting for a setup, it's good to just, you know, do some admin work or whatever it is you got to do to keep your mind occupied, so you just don't do anything stupid while you're waiting for your setup. Really key. But we're waiting. We know what we're waiting for. Here's the Russell. Come on, give us a little bounce. Awesome. Trying. And the reason it bounces, because you know these algos and big money, I mean, they know how to play these games, and it's not rigged. It's just this is the way the market works. They'll suck people in, everybody will go short, and then they will just ram it back the other way, 10, 15 points, squeeze the you know what out of people. And then when that squeeze is over, you know, that's when you want to short. So you learn this through time and experience, you know. It's after the 500th time of it happening to me, I thought, you know, I'm going to stop trading those breakouts and I'm just going to patiently wait for the pullbacks. But that takes, you know, you got to get punched in the face several hundred times first before you learn that lesson. It's really important. And that's why hopefully the stream will help you guys to, you know, just be a bit more patient and wait for the setups. And it can be easier to be patient when you're waiting with somebody rather than sitting there on your own, like wondering if you should take every single trade that you're seeing. I think that's important. All right, so we're waiting for the pullback here in the Russell, and look, we're getting a little bit of a pop here, so that's nice. I want to get short down here somewhere. You're at the daily value area low here. See some volume coming in, right? I talk about this in the volume profile playlist. You guys should really, there's a lot of nuggets in there. It's getting some views, which is good, but you probably won't get that many views because you actually have to really, you know, it's not just, oh, sell the low volume node and, you know, make millions of dollars and buy a Bugatti. Not like that. You actually got to watch and learn how the volume profile is developing during the day. So here you can see how the volume point of control for the Russell is here, right? And we're right near the value area low, right? So what I would want to see, so far we can see that all that volume as of this exact moment is selling, which you would expect it to be because of where you are in the weekly volume profile here. This is the weekly value area low. We went over this triple bottom breaking, right? But the question I have, the reason I'm not chasing it down here right now, 1950, is my question is, we only broke through that triple bottom and the weekly value area low, you know, last hour. So are we going to jump back up and test that level before then rolling over? You know, those levels like to get retested. So that's kind of what I'm waiting for. I don't know if we're going to get all the way back up there, but that's why we could be seeing some volume coming in here. But I have a feeling based on the way everything's looking so weak, everybody's caught off guard. I don't think we're going to jump all the way back up to 1966 here. Anything can happen, but I would be surprised if we went all the way back up here. But if we did, it'd be a great short. See, I got to manage this risk by not, you know, I got to pick the spot on where I want to get short, and I'm just using the 15-minute chart here and the hourly. Try to look for a good spot without doing something stupid, right? That's the key, because even if you have, these are the details of trading, right? So even if you have the direction right, which right now I'm pretty confident we're going to be heading lower the rest of the day, which is great, right? So now it comes down to the nitty gritty of finding good entry spots so we have good risk profiles on our trade, right? So I'm guessing a lot of people went short down here, which is why we're pushing higher now. Because, you know, the market can't go higher unless two things happen. Number one, right, you're going to have, you know, there's never more buyers than sellers or vice versa, right? There's only more aggressive buying than selling because every futures contract has a buyer and a seller. It's not like, oh, there's more buying, that's why it goes up. No. There's more aggressive buying, number one. So more people are aggressively hitting those offers, lifting the offers, it's going higher. But what really gives the market fuel is when you trap the other side. So you not only need those aggressive buyers in this case to push the market higher, but you need shorts that are trapped, and they also got to get out at market, which is also accelerating that aggressive buying to the upside because they have to aggressively buy back their shorts. They're also going to hit, you know, the offer, and it's just going to, that gives the market the fuel to go. That's a really important thing to understand. And it's just kind of helping to understand the underlying dynamics of what makes the market move. And it's fun when you really understand that, because then you can kind of see where and why, you know, things move and where the market makers and, you know, the big boys like to play their games. They play their games because it is a game. It's a game of chess. And this is how, it's how the market moves, by imbalances. And those imbalances are created, by some people making bad decisions and other people trapping them. And so that's another reason why I'm very careful in terms of not shorting into support or longing into resistance. And that's why, there are, I would say for me, the days where the market is the easiest to trade are volatile congestion days, because you just get just really nice, clear trending days. Believe it or not, like I think are actually quite difficult to trade, because you just never know how big the pullback's going to be. That's very difficult. And sure, I mean, if you have a huge account and you can say, okay, I know the Russell's going to drop the rest of the day, I'm just going to throw on a couple of contracts. If it goes against me by 40 points, I don't care. I mean, that's great. That's not me. I like to manage my risk. Because I don't need to sit through a, $5,000 floating loss. If I'm right on the direction, I want to also try and be right on the spot I try and get in. And that sometimes means missing things. Sometimes means getting in a little too early, taking a small loss. This is just the way that I like to do it. But that's why, generally speaking, I like to trade off the hourly, because it's just a lot slower, more relaxed. But sometimes you've got to fire down to the 15-minute so you can get these pullbacks. Oh, hey, Steven, you said, why do I use a 15-minute? I use it if I feel there's not going to be a pullback on the hourly, then I have to dial down to the 15-minute and try and get a pullback here. So you can see now this pullback did get sold into up into 1952. You say, oh, well, why didn't I get short there? Well, because I'm waiting for the close, because when this thing's heading up like this, we don't know where this is going to close. It might close here, which means it might be headed up here. So I'm waiting for a good pullback on a 15-minute chart into a good hourly zone. That's why I use the 15 minutes. I hope that makes sense. Now it's 11:54. So we've got 5 minutes until everything closes on the hourly. And see, this is the question for this hourly close here for the Russell. This is where, I'm very confident that we're headed down the rest of the day. But are we going to, just open and go like this for this next hour? Or are we going to pick up some support and go up here and squeeze some people a little first and then go like this? I'm more apt to wait for that pullback to here. But in this case, I think the Russell's so weak that we may actually just open and head lower. And if that's the case, the 15-minute will get into a trend run to the downside. And if the 15-minute gets into a trend run to the downside, then I'm willing to take a pullback on the 15-minute trend. I can find an example of that for you. So are we going to see this on the hourly now? Boom, and just keep leaking lower. I think this is what we're going to see on the hourly, which means on the 15-minute, I'm just going to have to look for a good pullback to get short. This was one here. Now we just got to see where this closes. So that's how I use the 15-minute and try and piece it all together. But I'm open to shorting ultra bonds as well. We're just waiting. We're still in the congestion zone here, right? We're not trending. So that's why we're in support on the 15-minute. That's why I don't take that. So get gold. Now gold is trending pretty nicely here. This is a nice 15-minute trend. Hourly is breaking down nicely. See what the silver's trying to pull back a little bit here. I mean, really the level, I think if I'm patient, I'll get it on one of these levels, which is what I really want. If we just look at this, here's the Russell, right? This is the value area low on the weekly right there. That was a super strong support level all week, right? You can see this is where we open the week here. And then we tested the value area low once, twice, 3 times, and boom, right? So now that that broke, I don't think we're going to go back and test it because the Russell's so weak, but it's hard to chase down here just in case it does go back and test it. Whereas I think one of these markets will test it. So here's ultras. So the ultras kind of tried to there. So I think the ultras look like they're kind of off and running now, which is nice because we've revisited that key broken support that should now be resistance. Let's look at silver. Very similar. You see how silver's grinding through its weekly value area low. So any pop up into 23 for silver would be a gift to get short. I don't know if we're going to get that. So this is what I'm looking for. So here you can see, silver is giving us a little bit of a 15-minute pop right here, right? But this hourly, here the hourly is trending down here. But what happens if this goes back up here? This is where I want to get short. Right up in here. Now I'll take it. I won't wait for the hourly close now because these things are heading down. I'm very confident now. So that's why I've got the 15-minute open, because I don't want to wait for the hourly close. I'm still waiting for 15-minute closes, but I know the general area. So like on silver, my area is basically, what I just showed you, up around 23, which is in this hourly pocket. So this hour, we could see something up here. The 15-minute will show us, we get short, and then it ends up selling off and the hourly closes, down here, and we're already in because we used the 15 to get in up here. And that's also right where that weekly value area low is. You can see the point of control value area low is up there. But this is the key level now, up into 22.95 or higher for silver, where I want to get short. And for the Russell, that's coming in at 1966, kind of up in here. So it'd be something like that we just saw on the 15. That's what I want to see over here on the hourly, because that's also a retest of that value area low on the weekly volume profile. And I think we are headed down to that old point of control today or tomorrow for the Russell at 1910. Good drop because the market's off guard from CPI. Okay, so let's look at the 30-year. The 30-year, you're kind of stuck in here. It's not really doing, see, it's not, the 30-year is not doing much in CPI. It's really the ones that are moving: gold, silver, the Russell. I'm still open on the 30-year and the ultra bonds, but they kind of need to get going first a little bit. Here's a nice little pullback on the ultra bonds, but we're still just in this little range, so I'm not as eager to take an ultra bonds trade. So here's, look at gold here, guys. Plowing straight down and through all these lows on the weekly value area low. Off we go. All right, so now 2030 is a really good resistance level, probably headed back down to this point of control. So now we just wait for a good short to set up back up into that 2030 area, because I promise you, you got to think like a market maker. You got to think like somebody with a lot of money that can move this market around and play games and, frustrate the what out of people. When this thing drops and everybody starts going short down here, that's exactly when you don't want to be short, because that's when it's going to run back here. So it might drop without us. That's fine, but you got to pick your levels. And this is how I'm picking my levels. And I speak very passionately because I am very passionate about trading, and also about waiting for the right levels to be, waiting to interact at the right levels. And we'll see if our patience and our just waiting for the market to come to us. We'll see how that turns out. But imagine, sometimes people go, "Oh, that's so dumb. Why are you waiting? Look, you know it's going down." Yeah, but on silver, for example, what if, we're trading the hard right edge. None of this has happened yet. So we're doing this live in real time as it's happening, right? Publicly. And imagine if you shorted here on silver because you thought, "Oh, this thing's just going down." Okay, you're short at 22.68. you know, or you shorted here at 22.64, you know, right now you're at least $500 underwater per contract you shorted, and you're starting to shit the bed because this thing could go back up here, and then you'd be 1,000 underwater, and then where do you cut it? So you were right on the direction, but then totally botched the entry and the management. You see how important this is? Does this make sense to you, Steven? Because this is one of the areas where I'm really gonna harp on, because it's so important, and it's something that I just don't see anybody talking about. The only thing I see people talking about is like, oh, trading's so easy, just do this and that. No way is it easy. Like, I mean, that's what makes it so fun. And that's, I mean, if it was easy, you wouldn't make the kind of money you can make when you do it well. That's the reason you can make good money, is because it's so hard that, you know, that's where the reward is. If it was easy, there'd be no reward. So I think that the trade entry aspect is just so important, and it means having to sometimes painfully sit and watch the market going without you. And that's a great exercise. And that's where I think meditation helps, right? So for me, as I'm watching this going down, I want to be in a trade because I feel very confident about the direction that these are all headed the rest of the day. But I'm not at all feeling FOMO, like, oh my God, I have to be in this, because I know my trading plan. I know my setups. I know what I'm waiting for. And the market either gives it to me or it doesn't. That's out of my control. What's in my control is how I execute my process. That's the only thing that I can actually control. I can control the outcome. You know, each trade is, the outcome of each trade is 50-50. Even if you have an edge, you know, where overall your edge is 60-40 or 65-35, or, you know, that's fine in a basket of 1,000 trades. But the outcome on every single individual trade is 50-50. It can win or it can lose. And you just don't know, so you don't have the control over the outcome. You only have the control over your ability to execute the process. Now that's it. And that's all the kind of boring stuff, you know, that most people don't want to talk about, but that's the important stuff. I'm going to read your comment here, Steven. You said, I've seen a trainer at SMB talk about being on the right side of the V. Yeah, so are you talking about being on the right side of the V? Are you referring to VWAP or VWAP, however you want to say it, volume weighted average price? Or are you talking about being on the right side of the V, like when a market, you know, bottoms and makes a V reversal? I think Lance Breitstein at SMB talks about the V reversal and being on the right side of the V reversal. Yeah, just being on the right side in general is just important. And you've got to have discipline. And I mean, people talk about confidence in trading. It's discipline. First, you got to have a system that works, obviously, right? I think a lot of psychological issues are caused by people who just don't have an edge. They think they have an edge, and that's going to lead to some serious psychological, you know, trading problems. Obviously, if you don't have an edge and you think you have an edge, that's going to make trading very difficult. You got to have an edge. You got to have a system, and then you've got to have the discipline, you know, to all of that. You got to know your system. You got to have the discipline, patience, and then all those things will lead to the confidence, right? That's when the confidence comes. But then, you know, that's when the other, yeah, it's Lance, exactly. I like Lance. He seems like a cool guy. That's where the other side of the, you know, the hard part comes in. Is like, let's say you follow all your rules, you're doing great, patience, discipline, and then you hit a couple of good setups because you waited and they were awesome setups and you made some good money on those setups, right? That's when you immediately got to watch your thought process in your mind, because that's when you're like, oh my God, no, this actually, your mind will try and convince you that it's not that hard after all. Look, that was so easy. And then that can get you into a whole host of different, you know, problematic trading situations. So it's this constant mental teeter-totter of just like, when you have wins, don't get too excited. When you have losses, don't get down. Just stay here in the middle, follow your plan, and just, you know, let the stuff take care of itself. Make sense? I talk about all this because, you know, I think it's fun to help, but I also, for myself, you have to constantly remind yourself of what you know, or you forget it. So by kind of explaining things, I'm constantly reminding myself, and that's very helpful. All right. So fire away. Anybody have any questions? We're just waiting for our trades to set up, having a nice chat. So here's the Russell. We're still waiting. We know our zone. And I'm not going to ES and Q because they're all dropping right now, and we have our market. These are our markets that we want to focus on based on the intermarket correlations, weekly volume profile, all this stuff. This is why we want to short the Russell, the ultra bonds, maybe gold, definitely silver, platinum. Let's look at platinum again on. Oh, this is beautiful. See how platinum's just point of control right at weekly value area low 928. If we can just pop up and revisit that at some point, it'd be a great short. So we've got our levels here on everything, and now for our key markets, and this is what we wait for. Yeah, Steven said that's the psychological part. Patience and discipline can cure a lot of psychological issues of fear and greed. Absolutely, it's so true. And it's also, you know, sometimes just a little piece of advice, friendly piece of advice. When you get a big win, or you know, something just goes really well for you, it's the same as if you take a big loss and you're not feeling good. Either shut it down for the day or walk away from the computer or do whatever you have to do, because you're gonna have a lot of emotions, obviously, but your brain chemistry is actually quite different after a big win or a big loss, especially after a big win. There's a lot of dopamine flying around in there, and that's what leads to that Superman effect, where people just go nuts and start putting on huge size and they just blow their accounts. That usually comes after like a really big winning streak. So that's super important to, you know, what I try and do is, if, you know, let's say I have a decent sized win or something, I'm aware of this because I've made all these mistakes many times. So then I like to just go away, get some tea, you know, breathe deeply, you know, just take a nice break and then come back and recenter, and then don't think about the fact that that was a big win and I'm so excited. And the same thing with a big loss, you know, when they happen, walk away, digest it, come back, boom, move on to the next trade. The power of quitting. What is, I got to look that up. I've never heard that before. It sounds interesting. What's the power of quitting? Is that like when you know you should stop? So we're looking at the Russ. We can get a pop. We're 12:09 p.m. heading into the afternoon. All right, I'm going to let you talk about the power of quitting in the chat. I'm going to just use the restroom real quick. Be right back. 5-minute break, walk, stretch. When we come back, we'll see if anything sets up, but I'm still waiting for these markets to go a little higher to short into, so I think we've got some time. Yeah, I'm going to stretch my legs, use the restroom, refill my water, and I will be right back, but the stream will be running, and any questions in the chat, I will see them when I get back in just a moment. So I got to go to OBS, cut the webcam, put on the be right back thingy, and I'll mute the mic, guys. Okay, be right back. All right, back. Back. Just quit after, yeah, well, quit. Yeah, exactly. Quit after a couple of big wins. Yeah, exactly. On the Russell, up close to, I mean, it depends. I got to see where the 15 kind of runs out of gas, but my ideal area for where I'd short the Russell is up in here. These old broken lows around the weekly value area low that got broken, you know, 1965. I don't know if we'll get that high, but that would be my preferred area. We'll have to see. That would be a great spot if the weekly could, if the 15-minute could trend run up to that 1965 area and give me a good sell signal. That would be I would not hesitate on that, because I just don't think, if you look at the daily here, you know, sometimes the daily can reverse, right? But it's all a matter of context. This daily here breaking down, breaking all that support here, I think we're headed for these lows at least from Friday, if not down here to these pink dots. These are really important OMA levels. So I don't think this is going to be one of these days on the Russell where this sucks back up and closes up here. It could, you know, especially, you know, toward the end of the day, the close, but I don't see that happening in the afternoon here, right? So anything can happen, we'll see, but based on the context of what's happening, CPI report, more hawkish, weekly looking very bearish. I'm feeling quite good about these shorts. Just got to try and pick the right spot. So for the Russell, that would be 1965 if I could get it, but we'll see. For the ultra bonds, that's a temporary little, you see the bonds aren't going anywhere yet, right? Not yet anyways. I mean, we had that huge move down. They had too big of a drop on CPI. I mean, this was 2.5 handles roughly. That's why we're consolidating down here on the bonds. But certainly on the bonds up around, you know, again, anywhere up in here. But for the bonds, I'm kind of more interested in an hourly pattern, because the 15s, I mean, we're not breaking down on the hourly yet. We're consolidating. You can see the volume point of control. We're still right in the middle of the value area on the bond, the daily value area on the bonds, even though we're below the weekly value area there. But a pop on the bonds would be great to get short. But the Russell is, you know, the one where you can see that the daily value area has shifted based on all that volume coming in here. So if we could get a pop up there, that'd be great. Let's look at silver. I also really like, and I mean, silver is one of my favorites here for the shorts. I love shorting silver. Look, I love owning physical silver. I get it. I do have physical silver, but when it comes to just shorting silver futures, I mean, it's a great market. They probably do manipulate it, but you know, it is what it is. You got to do what you got to do. But silver is looking pretty good from the short side here. Look at this value area low here. Broken support. I mean, if we were to, let's say I can do a little black bar here like this. If the hourly was to, oh, blue, oh, black is, one sec. Like this. If the hourly was to give us a bar like that, that would be awesome for a move back like that. That's what I'd be looking for. It's not bad artistic drawing skills here. So I don't know if we'll get that, but that would be ideal for silver. We might not get it. In which case, if I'm waiting and we don't get it, I'm either just not going to get it, or I'm going to have to be more aggressive on a 15-minute pullback. But it's finding that sweet spot, letting the market develop. You know, very rarely do you get days. I was explaining this earlier, Stephen. I don't know if you heard it, but very rarely do you get these days that just go straight down or straight up. They happen, but they are the exception, not the rule, which means that, you know, 8 times out of 10 or 9 times out of 10, if you patiently wait to just take the trade in the area you want to take it, usually you'll get that opportunity. Chasing is never a good idea. Leads to FOMO, leads to just selling the trend at the low or buying it at the high. So I always just wait. Just the way I like to play it. So waiting to get short silver, Russell, those are kind of the top candidates at the moment. Platinum certainly is just, platinum's getting killed. I'd love to short platinum, but waiting for some sort of a pullback now on the 15-minute would pop. You know, the level for platinum would be up in here around 925. Crude, we're waiting to maybe get long. Oh, here you go. You see, this is why you wait. I mean, this is a great example, exactly what I'm talking about. So thank you, crude, for giving me this opportunity to go over this example. So we're bullish crude, right? We're excited. The Iranians have hijacked the ship in the Red Sea, I believe. Sucks for the people on the ship, but it adds some volatility to the oil market. So oil's going to the moon. Everybody buys it here. Oops. Now everybody's underwater by $1,000 per contract. So, you know, buy 5 contracts there. You're confident we're going to the moon. And now you're down 5K and you're shitting the bed. That's not fun. So that's why it's just better to wait, I think, for pullbacks. And I want to reiterate, just because I wait for pullbacks, I can wait and wait and wait, get my pullback, take my trade, and boom, it's a loss. And it's like, oh, look, you wait for the pullback, you still lost. Like, yeah, of course. You know, trading involves losing trades. But at least I waited for the most logical spot to enter my trade based on, you know, risk and reward. If I want to buy, I want to wait to buy in support. If I want to short, I want to wait to short in resistance. And I have to, first of all, I have to find those levels, right? And then I have to wait for price to come back to those levels. So right now you can see that crude is pulling back down to, you know, this is what I said earlier. I don't know if you caught this, Stephen, but the weekly point of control here on crude, if I'm going to get long, this would be a really interesting spot to watch. Let's see how price, this is pretty fun, you guys. We can watch this in real time. How does price react to the weekly point of control here? You can see on OMA over here on the hourly chart, you got a beautiful extension down there, 2 of them, in fact, right at this. This is a really important level as well coming across. So got a lot of OMA support here as well on crude. Now, I'm not going to buy this right now because everything else is selling off. So we could have a liquidity event today and crude may end up suffering. We already know crude can't hang on to the rallies, right? So we got to be careful about that. But this is the level now on crude. I'd be willing to watch weekly point of control. Let's see. Does all the buying that come in here or all the action that comes in here, all the volume, is that going to be aggressive buyers or aggressive sellers? Well, we're going to get the answer to that because we're going to see which direction price goes as the volume starts coming in here, because this is where the institutions are transacting. So pretty cool, right? And then if we want to really dial it down, we'll go to the daily. Here's the hourly. So we'll look at the daily volume profile here. And we can see the daily volume point of control is right there, right? So you can see we're getting into the low volume rejection area here, daily value area low here. So this is a key level for crude now. If it wants to go higher the rest of the day, it's got to hold this 72.50 to 72.75 level. Super duper important. So, and then I don't rush in. I just, you know, it's 12:22. Crude is, you know, crude's still messy, right? Even though I'm bullish, that's why I'm not bringing out the 15-minute chart on crude, because the 15-minute can lead to a lot of mistakes if you use it in the wrong situations, right? So I'll just wait at the end of the hour and see what crude looks like and make a decision on that. But with these other markets that are really breaking down, like the Russell, silver, bonds, these are the ones I've got the 15-minute chart out on. So now you can see we're getting a little bit of reaction out of 1952. You know, oh, Andy, why didn't you short there? No, it's just not, it's not in my zone yet. So that's just the way that goes. Let's look at ultra bonds. Bonds waiting. Silver waiting. Platinum waiting. That's how I wait. That's how I use the 15. Does that make sense, Stephen? Anybody else also, if you guys got any questions or if something doesn't make sense, let me know. I'll try and make it clear. Do I ever trade RB or no? Because they're just too correlated to CL and they're way less liquid. I don't really see much reason to trade those. I used to chart them. But no, I don't trade those. They move pretty identically to crude, or you know, most of the time. I'm happy with just natural gas. even natural gas, you know, I'll trade it sometimes, but you know, only when I have a real good reason to trade it. I don't look at it that much. See, right now I'm not even looking at like natural gas or the currencies, or because we've got some really good opportunities here potentially on the major markets, and I'll always trade the most liquid assets, you know, the indices and bonds, gold, silver, crude, like those are the main markets. And 90% of the trades happen in those markets, because when a setup happens on one market, it kind of happens all over the place, right? Like you see right now, the Russell's collapsing, silver's collapsing, bonds are collapsing. So now I got to wait and try and pick the one that gives me, you know, the nice pullback to get short. You see how when you use the 15-minute chart, this is why I don't recommend it. And this is why I'm very careful with it myself. When you use that, you can really start getting, you can make a lot of mistakes. You can just, the lower the time period, the more likely it is you can make mistakes. And so it's kind of like a fine line. You can, I pull it out when I really need it. If basically I pull it out if I'm so confident in a trade, and again, just because I'm confident doesn't mean it's guaranteed to work at all. But right now I have very good context for why the Russell is dropping, why I want to short the Russell, bonds potentially, definitely silver, platinum, why I want to short these markets is very clear. I've got my levels, everything looks great. So then I'm not willing to miss, you know, if the hourly, let's say on silver, that's a really good one, you know, because I wait for the hourly closes because they're my anchor. But I'm not willing to wait and see if silver fires up here and gives me a beautiful close that I can short and go straight back down. That would be ideal. I would love that. But in a market that's this bearish right now, silver, I got to watch the 15-minute because I have to see if I get confirmation on the 15-minute intra-bar on the hourly here, because the likelihood is that sellers are going to come in here hard and fast, and that if I wait till the hourly close, we could be seeing something like this where we close down here, and then I'm looking at this going, man, I wish I had gotten short up there. Well, that's when I need the 15-minute, you know. But other, if we're in congestion, I'll just wait for the hourly, because you'll typically, I mean, it's more of a, it's when we're really moving and I don't think we're going to get the pullback on the hourly, I'll go down to the 15-minute. But even then, I'm very respectful and careful of how I use this 15-minute chart, because you know, you can start jumping in and out of trades and seeing trades that aren't there. So you got to be, you know, very careful and aware of this. All right, so we're coming up on 12:30. Remember, we do have the bonds. Got the bond auction coming out at 1 p.m. All right, so how's work going, Steven? Are you like in a cubicle? You can listen to the stream while you're working. That's pretty cool. Glad to keep you company at work. So here's the Russ. Just, you know, look at this. This is just, I'm bearish, but we're waiting. You know, didn't catch any of this after CPI here, but the market is really clear now. These are the times I like to take action. Ultra bonds, waiting. Silver, I'm really hoping we can get some kind of a pop going. There's copper. It'd be nice, get a little pop on copper. Copper I don't trade that often. Like right now I'm not going to trade it, but sometimes I will. Here's platinum. Be great if we get a pop. Oh, here's crude. Let's see how we're reacting. Oh, that's cool. That's nice. Nice that you can do that. Hey, at least one of us is making money today, right? That's you at work. Well, hopefully I'll get a trade soon and make some money myself. So here you can see this is going to be interesting with crude. We're at a key level. We're right back to the daily value area low. We're just through the weekly point of control a little bit. I mean, I'm very curious to see how crude responds to this level. This is a really important level for the bulls for crude right here. Ugh. Sweden. I'll have to have some dinner soon. I'll just eat it while we're watching together, but I'll just kill the webcam, so I don't really feel like being a rat in a cage on camera while I'm eating dinner. So this crude is going to close here in 40 seconds. Give me a lot of support. I'm really interested in this level. I'll tell you, at the 1 p.m. hourly close, I'm not trading crude on the 15, but if this hourly bar closes down here around 72.80, we get a close there, I'm going to have to strongly consider buying crude for a potential push like that. But I'm still going to think about it because everything else is heading down. You've got a little bit of a liquidity event, so crude's a little more dangerous, you know, when you have that total risk off day, which it looks like we're having. And it's unable to hold gains, but this is a key level, weekly point of control in this area. So I'm really curious to see how the hourly responds to this area within the next 30 minutes. So we'll keep our eye on crude. There's platinum. Let's look at silver. And sometimes this happens. This is the ultra bonds. Sometimes this happens on these, you know, the news days like CPI, where you get that the big chunk in the move is right around the announcement. I don't trade around the announcement. I think it's not smart. And then you're waiting for something to develop, and sometimes it does, sometimes it doesn't, right? Like, there's no cookie cutter formula. Look at the 30-year. Just waiting for bonds to break lower or pop, preferably pop. I'd love to short bonds. Russell, again, you see we're just, that's the thing too. You got to think about the time value of being in a trade, right? This is really important. You know, margin, you only have so much margin in the real world. And also just the risk of just being in the market. I like to be in a trade when I think it's about to move my direction, right? So if let's say I was to get into the Russell, you know, whatever, back in here somewhere, I wouldn't, but let's just say I would. I mean, and then all of a sudden you're sitting through this for 2 hours. I mean, I just don't like to sit through. I mean, I will, look, if a trade is just trending and I'm in it and I'm adding and I'm just making money while I'm holding the trade, obviously then I love to be in a trade for 2 hours. But if I'm sitting in a trade that's not really going anywhere, that I don't want to be in for 2 hours, you know? So that's why I'm kind of picky about where I get in. I mean, this has been one of the slowest weeks I've had in a long time in terms of, and I'm okay with that because the, you know, the price action has justified patience, and I'm happy with the patience. And now I can see the charts we're about to start the next leg down, most likely, on the indices, on bonds, and I think there's going to be some great trading the next couple of weeks. So, you know, trading is not a linear paycheck. Not a lot of trades this week, but next couple of weeks, hopefully even starting today, tomorrow, there's going to be some good trading, I think. So that's the time to put the foot down on the pedal a little bit and make hay while the sun shines. But I haven't had a week this slow in a long time. I mean, I'd say on average, like I'll take, you know, a decent week. I'll take 2-3 trades a day. So, you know, 15 trades a week. That's probably average. Sometimes a little more, sometimes less. But I mean, certainly this is a very, very slow week. And that's 100% okay with me. Let's look at ES. We haven't looked at ES. I mean, I'm open to shorting ES as well, obviously, but Russell is way weaker. It's the weakest of the bunch. That's what you want to focus on. And if ES pops, Russell's going to pop. So I want to short the Russell. That's why I'm watching the Russell, if that makes sense. Here's the NASDAQ. Just give these guys a chance to bounce. Nothing goes straight up or straight down. We know what we want, and we're just waiting. We know we want to play the short side. That's great. You know, didn't get. People are always focused on how much money they're making. Like, what about all the people who bought that support, you know, here, and kind of thought it was, and then just got smashed? You know, buy that support, get smashed. I mean, that's not fun. Sure, maybe some people will buy this support and it'll bounce, they'll make some money, but I don't know. I just like to wait for the low-hanging fruit. That's just me. You can see here on the weekly NASDAQ, this pocket up here, really nice resistance. I think we're setting up probably for a close tomorrow down here, and I think the weekly is going to resume down like this. So I think we're going to have some really good trading. Kind of like if you look at the weekly chart here, it's like a macro view of this hourly. See this hourly here? How you jump up into that resistance, close here, and then you just continue lower. I think we're going to see that on the weekly. That'll be cool. Obviously, if anything changes, we'll adapt. You're constantly adapting, constantly watching what's happening and adjusting. That's why there's no if A then B, do that all the time and get rich. I mean, that just doesn't exist. There might be systems, you know, you might have some sort of a moving average system or something that you can use in certain market types where it'll do very well, but then you got to know when to turn that on and off, and very few people know how to do that. And you know, all the money you make during the good time, you're going to get back during the bad times when the market regime shifts. So that's why I like my stuff, because it's just every day I've got the tools in the toolbox ready to trade that day, no matter what happens. And that's also because of reading the intermarket correlations. Let's look at bonds. All right, bonds are breaking a little lower. This is good. I'm waiting for them to break, because bonds are great when they really get going. So if this starts trending to the downside, they're one of the ones I'm most comfortable trading a 15-minute pullback if the 15-minute really starts making new lows. And I could see bonds going down here to 128.2 for sure. And if that happens, you know, the 15-minute, I could get a good pullback. So we'll see. Bonds, I want to pop on anything, but bonds are ones where if you're going with the trend, you're kind of less likely to get squeezed the other way, like the indices or silver. Bonds are just so thick. They're like a freight train. Once they get moving, they go. So we'll keep an eye on the ultra bonds. Back to the Russ. Oh, we've got the 30-year Treasury bond auction. I think I mentioned that, but I'll mention it again. 1 o'clock. So coming up in about 20 minutes, 23 minutes. Silver. They leaking lower again. Platinum. Gold. The crude is pushing lower. Man, a lot of people are off sides on that one there. See, that's you know, I just love, like, when you're patient and you just, well, it's such a good feeling when you can just see trades that you feel bad for the others that are stuck, right? But unfortunately, that's the way the market works. You know, they don't move without people getting stuck. But you look at something and go, I'm so happy I've been patient and, you know, didn't get sucked into buying up in here. Because now these people are underwater getting hammered. You know, they saw the news, they got excited, it started breaking out. But see, we knew not to buy that breakout because we've been talking about crude the whole week, that it's been unable to hold on to rallies in spite of all this geopolitical tension. And that's another thing, Stephen. If you notice how we're carrying over our analysis and our thought process from one day to the next, you know, like the decisions we make today, you know, are connected to what we saw yesterday, and the decisions we make tomorrow will be connected to what we saw today and yesterday. So this is how it's building constantly. Super important. Russell, not doing much. Ultras. All right, ultras are getting the party started. Beautiful. It'd be nice if the ultras could drop. I was just looking over at the weekly volume profile. I think it's going to be a rough afternoon for the risk assets for gold, silver, bonds. Hopefully a good afternoon for us. We're able to get some shorts. Back to the ultras. Oh, Russell. So with bonds heading lower, rates rising, it just makes any short on the Russell that much better. Like if I see bonds collapsing and Russell pops and gives me that short while the bonds are collapsing, you know, that's kind of like add more contract time. But we may not get the pop in the Russell, and I might have to jump on board the bonds. It looks like they're headed a lot lower. I could see us closing the day on bonds at down below 128 potentially, which is, you know, half a point lower than we are now. All right, let's look at the 30-year. 10-year, I just looked and see it's, yeah, even the 10-year is trying to get going now. I don't trade the 10-year, I just use it. I'll trade it sometimes on a news announcement, but very rare. Gold, silver, copper. Come on, Russell, give us a bounce. That would be great. All right, guys, we're just watching and waiting. It's 12:40. Like I got a time going in upstairs and grab my dinner and bring it back down, so I don't like. It's also the thing, you know. I just don't want to. Anything can happen at any time, right? So I'm waiting to short the Russell. You just never know. Like this thing, and then I could run away to make dinner, and this thing spikes 1960, where I probably would short it, and then I'm not there, you know. So I gotta wait. We're gonna get this 15-minute close here in 4 minutes. I'll wait and see where this goes, and then I gotta run up, make a very quick dinner, and bring it back down so we're ready to rock and roll for the 1 p.m. check. But I promise you guys not to eat on camera, but we will watch and talk and see if any trades trigger. They'll probably trigger during dinner, the way it always goes. All right, we're getting some movement in the Russell, which is nice. Oh, this is probably in anticipation of the bond auction coming on at 1 p.m., I would guess. So we got to remember that's going to rock and roll bonds. Oh, right. This is so guys, this is exciting. We got a 30-year bond auction. You know, on a pretty busy day with CPI here, things are already moving. So this kind of volatility, you never know. This bond auction could give us a nice pop on bonds. I would love that. Short into it and get some volatility to get short. Be awesome. So that's very exciting. Have you ever seen anybody get so excited over a 30-year bond auction? I love it. Get the Russell pushing higher. Keeping an eye on my overall. We're not at my zone yet. I mean, I can see over here on the hourly. You know, this would just be beautiful. Up in here to this level, it's matching up with our weekly level. So that's what I'm waiting for. I think that's another important thing too. One thing I had to deal with is like when you're really patient waiting for trades and then a trade finally comes and you take it and you're patient, you follow your plan, and then, oh, it's a loss. It's so easy to feel so defeated because you did everything right and you still lost. But that's actually the hard part about trading. You can do everything right and you still can lose. And that's just one thing you got to learn how to deal with and continue to, as long as you followed your plan, then just put on the next one, put on the next one. That's what it's all about. All right, 12:44. It is, we got about 50 seconds left. So latency check for you guys. We got 45 seconds, boom, right now until this closes. Just keeping an eye here. Now what I would just love, this 15, I'm not going to short here because see, I have my area. But what I would just love is for the this 15-minute to give me a nice little 2-bar push exhaust up into the closing of this hourly bar here. Would just be awesome. See, because this might be some resistance here on the 15-minute, and all other things being equal, you'd look at this and go, well, geez, I mean, I'm at the 15-minute highs, I want to short. Like, yeah, I'm not going to because I'm waiting for my hourly resistance level, which is matching up with, you know, an area of interest on the weekly volume profile. If we look at the daily volume profile here on the Russell, just for fun, what's up there at 1964-ish? I don't know. Let's see. Well, you guys see that? Low volume, rejection area. Essentially, doesn't mean we're going to be right. It just means more things we can kind of see going for us in a given area, the better. So that's why I like that. And that's why it's so hard to answer questions like, oh, when should I take a low volume? It's different when you should take it in low volume versus high volume. You just got to wait and see. But this is fantastic to see that we're bouncing, heading into the watch. You know, this is what's going to happen too. There's going to be a ton of bond volatility at 1 p.m. If the Russell closes up here, I'm just going to have to short. You know, you can get some pretty wicked volatility on the bonds. Like it's, but we're going to have to, I'll let you guys know. We're going to have to do it. But the bond auction can also be a similar, you know, type of volatility to a news announcement. So you got to respect it. You can't just be like, well, you know, because when I put on my trades, I don't put a stop. Like I will after the trade's on and I'm in, I'll throw a stop way back, but I manage it while I'm in and I just close it when I'm ready to close it. But I do have, you know, and I'll put in an emergency stop, but something like a bond auction, you know, you can short something. Let's say the Russell, you're right, but that bond auction comes in, spikes it, you know, immediately 20 points against you. You know, you're down $1,000. That's not fun. And that's why you got to respect the news. But this is just too good. I'm probably going to have to just short it no matter what. If we get up there, let's see. And that's the Russell. So let's look at Ultra. Bond auctions are just, that's when, you know, the dealers and the foreigners, they're buying the bonds. They're basically financing the debt for the treasury. So it's just showing you how much demand there is, in this case, for the 30-year bond today. So it has an effect on yields because of the demand or lack of demand at the auction, right? So it moves the bond market. It can move. It depends. It can be a smooth, you know, functioning bond auction. Fine, not a lot of volatility. Lately, the bond auctions have been pretty volatile, and that'll, you know, shake interest rates, move the stock market. So lately, the bond auctions, especially the 10-year, 30-year, you know, longer term, I mean, they've been like news announcements. So you got to be careful with the bond auctions. We got to respect that here at 1 p.m. So we'll see, but I mean, we're gonna have to try and get, if we got a short on a pop on ultra bonds here, we just have to sell it. The Russell, I'm probably going to have to sell if we get up here. I will tell you. That's the point of this channel too. I'm telling you, we're preparing, and I'm telling you when I take the trade, I will tell you exactly when I take the trade, where my stop is, where I'm getting out. You will know exactly what I'm doing live in real time. So you will get to see if I win or if I lose. And that's kind of the point. There's gold not doing it. So I think silver's not doing it. So our plays now heading in. This is why it's important to watch a lot of different markets too, right? Because, you know, right now we're waiting to short. Gold, silver, platinum aren't really popping for us, but the Russell is. That's great. All right, so I'm really interested up in here on the Russell. Okay, so we got 10 minutes to the bond auction, you guys. I'm gonna leave it running. I gotta go use the restroom real quick, stretch my legs, and I'll be back in just a few minutes, and we'll keep an eye on this. So hang in there. Might be getting close to a trade. We'll see. All right, guys, I'm back. Go ahead and flip on the webcam. And Russell's trying to get up there. Gonna see if Zero Hedge has anything to say about the bond auction. Nope, I don't see anything about the bond auction. Doesn't matter. All right, so the Russ, looking to get short here. Anywhere up in this general area. Just patiently wait. This level here, 1964-ish. Looks pretty good OMA wise. Right where those old lows are. Or yeah. That's the level. And if I short this and this thing just wants to blow straight through me and go straight back up, I'm like, I'll sleep like a baby. That's a loss I'll take because everything is just pointing to the downside right now. All right, so that's the Russell. We're getting ready to potentially short the Russell. We'll see. But see, this is why you wait for the pullback. Now, no matter what happens, at least we patiently waited. Let's look at the ultra bonds. Heading lower, we'll see what happens at the auction. Silver continuing under pressure. Gold. My child is singing. I think her mom's going to give her a bath. Nice. So usually I have a meltdown right as I'm about to put on a trade. It's just the way it works. It's really funny. Well, it's not funny in the moment, but I've had to teach myself to laugh at it because you can't let it drive you crazy or it will. Oh, let's look at crude. We're going to look at that, but I'm too, yeah. We're not going to do anything on crude. You guys do whatever you want. I'm not doing anything on crude. I mean, look at this. Patience has really paid off here in crude. A lot of people feeling some pain there. We're breaking through that key support level, so that invalidates it. So crude can do whatever it wants. I'm not interested. All right, so heading into the 1 o'clock close here in 5 minutes. We've got about it's less than 5 minutes. I'm interested in the Russell. Remember, we got that low volume area. We're right at the broken weekly value area low. There's triple bottom on the hourly for the week. It's as good of a setup as we're going to see. So does that mean it can't lose? No, it means it still can lose. Always important to remember that. But I'm going to probably take it. But I must admit, you know, with the bond auction coming on, it's a little nerve-wracking. I'm just not going to be able to. What I'm probably going to have to do is go in with an automatic stop immediately in case the bond auction causes a crazy move. At least I limit my risk. But I just hate stops because you'll get taken out sometimes on stuff you don't want to get taken out of, right? That's why I don't use them. Yeah, Russell's getting up there, Steven. I'll let you know. It still needs to get up here, so I'm not going to take action here on the close. Like, this would have to close here and then punch up here on the 15. I watch the 15, and if I like what I see, I short. Sometimes when the 15 just gives you an excellent pattern into your hourly area, I mean, it's like Christmas. You just have to wait for it. All right, let's go ahead and look at the ultra bonds. Again, we got the bond auction coming out in 4 minutes. I'm waiting to short a pop on either the ultra bonds or the Russell. Probably the Russell. We've been very patient. We've got the weekly value area low here on the Russell 2000, breaking triple bottom. It's looking good. We got a lot of OMA levels there. Got a low volume node on the volume profile for the daily. So this is a good spot to short the Russell potentially. Remember, it's not financial advice. Go see the risk disclaimer, all that good stuff. But I'm going to try and look to short, not at the hourly close here, only because I want to get up to my level here, 1964. This is the area I'm most interested in on the Russell shorting. So we'll have to see what the 15-minute chart does. But also, if the bond auction could give us a good pump, you know, to short bonds, I would be thrilled about that. So we'll keep our eye on that. Silver, I'll short if it pops, but we need to pop. So we're waiting to get short. Bonds, Russell, or silver. And we've got 2 minutes to go here until the 30-year bond auction kicks off. So buckle your seatbelts. It's going to be fun. I do expect volatility on the bond auction. Lately, they've been volatile. The Russell looks very weak. And I'm excited to short it. You know, if the 15-minute could just once we close here at 1 p.m. in 2 minutes, hourly here, and then the 15-minute can try and rifle up here to this resistance level. That's where I'd like to short. But we're going to have to keep an eye on the scoreboard as well here to the right. You guys know over here, you have to keep an eye on the price of ultra bonds, the Russell. We got silver here, so keep an eye on all this. Fortunately, I only have one DOM open at a time. Right now, I've got the Russell open, but we can see if I need to switch it. But right now, my Russell's open. Suppose I could have more open, but to be honest, I need more screens now with all the streaming stuff going on. All good things in due time. All right, we've got, I'll let you guys know when it's 30 seconds to bond auction, so you get latency. 28, 29, 30. So that was 30 seconds until the hour. Five. Auction. So there's the auction. Let's see what happens. Hopefully it can just juice the Russell up here. Give us a short up in here somewhere. It'd be fantastic. So right now, I'm not doing much. Let's go ahead and look at the ultra bond. These bond auctions are hit and miss. Sometimes nothing happens. Just all depends on the auction, right? It's like, but lately they've been volatile. And I'm not sure, you know, I got to look into how the auction works. I mean, usually it gets going right at the start of the auction, but like, do people put in their orders and just then all of a sudden, like the orders start triggering at the auction, it moves the market? Does it take a few seconds? I'm kind of interested in looking into that. Steven, maybe you can check into that with your MBA. That'd be awesome. Look into I know how the bond auction works, you know, generally speaking, why it moves the treasury market, but I'd be curious how the actual mechanics of the auction work. Not that we have to know to make money, but why not know it? It's interesting. All right, so we've got the Russell over on the scoreboard. We're waiting for 1960, you know, 3-4 up here. It would be a beautiful situation. Are we going to get it? Are we going to get it? We'll see. Looking at the ultra bonds. So far, not a lot of volatility. Oh, there you can see a little bit of move. Now we're getting a little bit of, there you go. Look, see? Look at that. Go back to the Rust. They're all popping at once. I knew this would happen. Keeping my eyes on the ultras. We're at 129 almost. You can see the bond auction did not let us down. See if the Russell can keep going. Look, I want it to go higher on the Russell. Go back to the ultra bond. This is beautiful. This could just get a nice little pop up in here. All right, the Russ. The Russ is the one I'm, you know, most likely to take a short on if we get up here. Again, I'm looking right at that 64 level. Let's see if gold and silver are reacting to the auction. There's gold, no. Silver, no. The ultra bond, let's look. I mean, I don't even want to look at the 10-year right now. I don't have time to flip back and forth. But on the ultras, I mean, it would be a gift to spike up above that high, 129.12. Yeah, that's that same level I wanted last time. So right up there. Let's keep our eye on the scoreboard for 129.12 for the ultra bonds while we wait for the Russ. Looking at basically right up in here, 63. See what happens. You got to always prepare yourself mentally. We could get caught in a reversal. Happens. But I've got to short it. I've got too much reason, too many reasons to short it. It's a good risk reward profile. If I lose on this trade, I'll lose like, you know, $300 or $400 or something. If I win on this trade, you know, depending what happens, how you manage it, I mean, it's potentially it could run lower the rest of the day, right? You just don't know. ES is back to 47.95. Watching carefully. I'm looking for 60, basically 63. Keeping my eye on the S&P, ultra bonds. Still waiting. Getting close. Kind of 63.5, maybe. Let's see. Right up there. 63.3. Where I'm interested. Ultra bonds are at 129.3. All right, I'm short one contract of the Russell. I got a horrible fill at 59.9, but that's fine. If it goes higher, I'm going to short a little more. That's the first contract. I've got an order to short the second one at 63. Ultra bonds are at 129.4. Now, if this is going to be a V reversal that we're going to get caught in, then we're going to know it. But for now, I like this trade. We planned it out. We've got good reasons. We'll see what happens. We've got about 5 minutes left until this 15-minute bar closes. Really volatile. It's funny. I hit the market sell order. Price was at like 60.5, and it just right at that moment jumped down. I got filled at 59.9. So funny. That's fine. That's trading. So again, the second order is resting up there at 63. So if that gets filled, that put an average of about 61.5, maybe 61.4. Should be a good average, I think. ES is at 47.95, so I'd like to see that kind of holding below 48. Ultra bonds are at 129.4. That's nice. I want to see ultra bonds holding below 129.12. Got about 4 minutes until this closes. If it hits my second order up there, that'd be awesome. If it doesn't, then I'll probably just short the second one at market on close of this 15-minute. We'll see. And we're going to know quickly if we're wrong, because if we're wrong, the 15-minute is going to keep trending to the upside here, and I'm going to have to take a loss. If the trade is correct, then there should be a lot of resistance here. We'll find out. I don't have a stop in now, but I'll let you know. My second order still hasn't gotten filled. I'm very hungry. So it's like I wanted to go eat dinner. Oh, but I just had to be here. Doing a bit of stretching. My legs are super tight from the gym. Bonds at 129.4. ES 97. Still haven't gotten filled on my second contract. We've got about 2 minutes left until this 15-minute closes. Oh, just waiting. Rating 62. Trying to get short the second one at 63 even. We've got about 1 minute and 10 seconds. Ultra bonds are at 129.3. That's good. ES is 47.98. So we got to keep an eye on that. Not filled on the second yet. 45 seconds to go. Yeah, I'm just throwing on 2 positions up here, even. I'll explain after what I did and why I did it. Trying to focus. About 20 seconds left. Lowering my order here. All right, I'm short 2 now. Tell you my average in a second. I just hit the market. So I'm short 2 contracts from 1960.9. We're going to find out quickly because this is the resistance level now. My stop mentally is, 66, more or less. And I'll answer your question in just a second, Steven. I'm just keeping an eye on ES is 47.99. The ultras are at 129.3. I mean, that's good. I mean, this is the level where I want to see some resistance here. I'm down 190 at the moment, 200. So we'll see if I'm going to be the one that gets squeezed. This is kind of my cutoff point right around this area mentally. I don't want to see it pushing up and through this level because you see this is where all my resistance is at. Okay, so now we're kind of getting to the point where I'm going to have to keep a very close eye on this. I'm still in, but I'm going to need to see some selling come in here soon. Let's see. We are squeezing. Still in for now. But not thrilled about what I'm seeing. I'd like to see some selling come in. Just keeping an eye on it. I mean, bonds aren't buying this move to the upside. The ultra is sitting at 129. Doesn't mean this can't go higher and give me a nice loss. It could. Right now it's not looking great, but the ultras are for now at 129. Doesn't mean that can't change, but just keeping an eye on it. Looking like it might want to squeeze higher. I can't bail on it yet, but we'll see. It's if this level doesn't hold, we could see a pretty good squeeze back up to the value area high. But I still had my reasons for why I had to get short this area, so hopefully some longs will get trapped and some heavy selling will come in and will drop. A little bit of selling came in there. It's trying to knock it back down. We got down close to my entry. There's some selling. So we'll see what happens. I'm just monitoring this right now. I'm in from an average of basically 61. It's 60.9. You know, kind of just below where that last 15-minute bar closed. And now the way I have to trade this is, you know, really I want to see. It's being a little stubborn, but we saw some selling come in. Ultra bonds are still at 129.2, so not too bad. ES is below 4,800. We've got a lot of resistance here. So, I mean, it's the Russell can be stubborn. I mean, the question is it going to squeeze higher? I don't have that answer, obviously, but I like where I took this trade. I'm good with it. But what I want to see now is, I mean, if this thing, basically, if we go through those highs we already put in and start creeping through those highs, I'd probably have to cut it with like a $400 loss. And that'd be okay. But if it drops and I see some selling pressure and we end up closing, you know, down underneath, I'm looking for a close down below 1960, which we're going to need to close here in about 8 minutes. So I'd like to see this resistance exert some pressure on price and get a close back down. But at least now we kind of have an idea of our stop. It's kind of, I don't have one in yet, but it's just above, you know, mentally those highs that we put in, because we could see now that's where, for the time being, that's where, you know, the sellers actually came in. We'll see if this trade works. You know, I'm looking to, you know, hopefully hold it back down to the daily value area low, at least, which would be 46. No, depending, it's developing. So yeah, Stephen, I was just in this particular trade, I was just layering in. So I threw on the first contract, and I did that because I knew I was going to throw on a second one and get an average. I was aggressive on this entry, and the reason is because of everything that we've been talking about all day. So that's why I was aggressive on the entry. Normally I'll wait for the 15-minute bar to close, but you see I jumped the gun and went in a little early there, and paid the price a little bit. I think if I had waited to the close and just been a little more patient, I probably could have got short up around my original level, which was 63, which would be, I'd much rather be short 2 contracts from 63 than from 61. That would change my risk profile, but you can't be perfect. And right now, we just got to give this thing a chance to hopefully drop. So does that answer your question? Yeah, okay, cool. I mean, I'd like to see some selling come in here. It's fun doing it publicly. It is different. I will tell you guys when you do it live, and but I knew I was getting into this, and it's a fun step to try and take toward development, being able to trade, in front of people. So we'll see. It's I mean, it's 126. This thing's gonna have to, if it doesn't close lower than where it is now, I'm probably gonna have to cut it, because the 15-minute just, I'm shorting this, counting on this close being down around 1960, and if I don't get that, I have to respect that the 15-minute is not, reacting the way I want it to react. So I hope it does react the way I want it to react, because I'd like to stay short, but it's going to have to drop. This is how I manage my risk. Like if I'm using the 15-minute, then I'll just let the 15-minute chart tell me, is it behaving the way it should if there's resistance here? And if there's a lot of resistance here, this thing should be preparing to roll over. We should see, some selling come in. We're seeing a little bit come in, but not, I'd like to see some more. Kind of a critical level here. Like to see it break to the downside if possible. Just keeping an eye on some things. Got about a minute and a half left until this bar closes. So S&P's getting back above 48, trying. The S&P could fail at 48 and the Russell could drop. That would be nice. Got about a minute to go till this closes. Yeah, thanks, Steven. Yeah, that was at least temporarily, that was pretty close. We'll see if it holds. But that was the level, you know, that's how I matched it all up. Hey, you've got the MBA. You can start keeping statistics. That'd be great. All right, we've got 30 seconds left. I really wanted to close down around 60. Ten seconds. It's right at my entry. Still short for now. But I'm looking for something very specific. I'm going to go ahead and just cut that. I took a $70 loss, and I'll explain why in a moment. Basically a break even, but and it might still drop. I'm just keeping it probably will drop now that I cut it, but the fact that, you know, the S&P is at 4,800, right? Ultra bonds are easing off, which is nice, but with this close here, sure, we close back down on the low, which I like, but I think there's a chance, you know, we could push back up into this resistance level. So if we do, I'd like to get a better entry on this. I don't like how offsides I was on my entry. And I suppose what I could do, I'm going to reopen one. So I'm short one from 60.9. So basically, I'm short one. I took the one off because I still feel really good about this level overall, but I would have liked to see a stronger close to the downside on that 15-minute bar right there. I still think we're going to drop, so that's why I wanted to, you know, reopen and put that, you know, that one contract on. But I want to leave myself the option to throw on that second contract if we were to push higher, and I can always re-add the second if we start to drop. I'm short one from 60.9. I lost 70 on those first two. Now we'll just see what happens. Yeah, it was a good call on the number up there so far. Pretty much nailed that to the wall. And just some of the you know, like when I take that short right there, I like the kind of trade, you know, you know how picky I am, right? Well, I like it when, you know, I get in right there and then the sellers come in and just hammer it, right? So I still think this is going to roll over, but the fact that it's just a little bit slower up here, I'll just throw on one. If it goes higher, you know, just managing the risk. I'm always about risk management first. So let's see now. It'd be nice if we get a snap to the downside. I'm only short one, but fine. Ultra bonds are, yeah, ultra bonds are looking good. See, the reason, I'll just explain in a moment. The reason I took off a contract there, you know, just took that small loss on those two first and then reopened, was because I had to think about it. You know, with this 15-minute close here, yeah, we closed in the low. That was nice. But, you know, we still held the true average here on close. And when it does that, you know, sometimes it wants to push back up and test up here in 1966. So I just didn't, I was weighing the risk in real time and I didn't feel like being, you know, off. Like if I'm short from 61 and I'm short two contracts and we push up to 66, I don't really feel like being off sides by 5 points on two contracts, you know, based on this close right here, right? So, but then that's why I closed those two positions down around break even at minus 70. But then as I was looking at it, I thought, you know, I should still be short one. So that's why I reopened it and price was still, you know, right where I had closed. So that's why I reopened that one. And now even if this drops and we're only in on the one, I can add, it doesn't really matter. I want to see here, you know, this is a key support level now at 59. So I want to see the selling come in. Does that make sense? That's kind of where we're at. ES is back at 47.99, so I'd like to see ES fail at 48. I'd like to see Ultra Bonds stay below 129, or certainly 129.11. So the Ultra Bonds are looking good right now. They're at 128.28. We're short the Russell. I'm just going to leave that for now. Let's just quickly check in on some other things. Yeah, exactly. It hasn't broken to the downside. It's just kind of sitting there, so I'm just kind of aware of that. The Russell should be weaker. I mean, gold's continuing to head lower. That's encouraging. Silver's trying to head lower. That's encouraging. Copper's not doing much. Platinum's not doing much. I mean, crude is heading lower, which is, you know, good for our risk-off position. Like, I mean, aside from the ES, I like what I'm seeing. I'm taking a quick look at the ES. Yeah, see, ES is just being stubborn here, looking like it wants to try and push higher. So I'm going to be careful with this one. You know, because especially we're in the afternoon now, right? So these stocks, 1:30 p.m. Eastern, I mean, sometimes these can, like, I could see NASDAQ, they could rip up to the value area high, and the real short could be coming on at, you know, 2 p.m. instead. NASDAQ certainly looks like it wants to push higher. I'm going to close that. So I'm down, I'm down $35 plus some commissions. I'm flat right now, but basically break even, 35 bucks. This is how I trade. This is how I manage risk. You know, if the trade doesn't start working for me pretty darn immediately, I have no problem cutting it. Like if it was to drop right now and go without me, I'm okay with it. I don't like what I'm seeing here. It's getting late as well. You know, I don't typically trade this late. But you see how ES, this is what I noticed, and this is, I'm glad I checked it. And we'll see what happens, but you see how the ES here, I've been noticing, and as Steven, you pointed out, I said, yeah, it's kind of stuck at this 4,800 level. And you see here, that trend line right there on ES, that's key. And that's broken, which, you know, we're trying to push higher, right? And we still might drop, but I don't want to see that when I'm short the Russell. And then here on the NASDAQ, what you can see as well is you see the NASDAQ is, you know, also rate sensitive like the Russell. And look at the NASDAQ. I mean, not only did it break that trend line there, it's really, I mean, is the NASDAQ going for the value area high up here at 16,960? It, you know, it looks to me like that's what the NASDAQ is doing. It looks to me like that's what the Russell, the S&P is doing. So therefore, even though I like that level, and you can see there was initial reaction off that level on the Russell, and even though the Russell hasn't broken that resistance level, and we'll see, it might end up holding, but you know, the safer play to me is just to wait and see what happens with ES and NQ, because if ES starts to rip above 4,800, which it looks like it could, you know, that could drag the Russell up here to the Russell value area high, which is 1972. You know, so that's just kind of how I manage that. Hope that makes sense. And looking at ultra bonds, I mean, look at the bond market's just been sitting here the whole day after CPI. They're not really getting any directional clues from the bond market. Gold, you know, we just, it's been that drop there, you're not really, it's kind of interesting price action this week. And again, I think that comes down to all the cross flows we're seeing, you know, across everything. So silver is still looking pretty darn bearish. Russell's starting to drop a little bit now. It's trying, but it's, I don't regret closing that trade. That's, I manage the risk the way I manage it, and that's that. Platinum, crude. Let's check back ES. Getting very hungry, and I know that, you know, because I don't usually trade this long. You know, there's usually much better trades during New York. And this particular New York, there just wasn't really anything that I liked. So, but when I get hungry, that's usually you can make bad decisions when your blood sugar starts to drop and you're starving, which I am. So, but I'm down 35 bucks plus some commission. You guys saw it here, so I'm gonna have to put that in the daily report. This guy, he sucks. He lost 35 bucks. He's got no Bugatti, no Rolex. Oh, I gotta have a little bit of fun. Hope you guys are having fun. Are you guys putting on any trades? You doing anything, Steven? There's a ton of resistance up here still. I think the Russell is gonna fail. I just don't like what I'm seeing here on ES and NQ. It just doesn't, I wouldn't be comfy in that Russell trade. And when you're comfy, you just get out. I'd say overall, I mean, I'm probably going to call up shop soon because I'm hungry and I got to eat and get ready for tomorrow. But I want to say overall, I think I'm very happy with the day. Patiently waited, didn't take any stupid trades, identified a key level, executed at that key level, gave it a chance, and just closed the trade for very logical reasons, regardless of how it turns out. But this is tough. Look at that. This is the NASDAQ. This is the daily chart. You see this outside bar? You know, those are tough days to trade. Very, very. That's a market, you know, searching for balance. That's difficult, right? So I don't think overall an easy day to trade at all. Certainly not the way I like to trade, which is, you know, conservatively, patiently waiting. So there's the NASDAQ. If we look at the bonds, I mean, the bond market today on the back of that CPI, huge move. And the daily also has an outside day. So I do think the overall picture is bearish. I'm going to be curious to see where we close. And I'm excited to trade it tomorrow. I'm hoping there's some good opportunities, end the week on a good note. Otherwise, very slow week. Gold and silver just kind of dropped without really giving us any opportunities to get short. I mean, and you'll see, you know, you do this day after day after day, many days. If I'm waiting to get short silver or whatever else, you know, you'll see it'll pop, you short, it drops. Like those are the ones. These are tough when it's just kind of grinding down like this. It's you know, not an easy market to trade. So that's fine. That's silver. Platinum, we didn't have anything today. Crude, I think we did great by not getting sucked into any of this. You know, happy about that. Again, look at this big reversal day on crude here. There's the daily. I mean, just look at crude this week, you guys. I mean, this is a mess. So when I look back at this week as a whole so far, it's not over. We still got tomorrow. But basically, to be break even on the week, well, technically I'm down $35. Well, maybe even like $45 or some commissions. But to be break even on the week with what I'm seeing in terms of, you know, these charts, I'm happy with that so far. We'll see. The week's not over. You know, the euro's making a nice recovery temporarily here, you see, against the dollar. So similar move here with bonds. The dollar got stronger here against the euro, and now we're kind of rounding and heading back up, and bonds are also doing the same. And it looks like ES and NQ want to push higher. So I still think our bearish outlook is very, very solid. I'm really excited to see where these close. I'm excited to trade them tomorrow. I'm going to live stream tomorrow, of course. And I want to, you know, I want to see, here's the Russell. I want to see where this thing ends up. I do think it's going to roll over. I mean, there's so much resistance here, but, you know, if I see something I don't like across the intermarket correlations, I pull the plug. And right now with the euro getting stronger against the dollar, ultra bonds, you know, for the moment stable. ES and NQ look like they want to try and push. It's loading ES here. This is going to be the make or break for ES right here at 48, because that 15-minute is just trending up. This is going to be the area where this is now either going to head down and they'll all follow, or it's going to drag everything up. And I really don't know. I can't tell what's going to happen. So I'm good being flat. So you guys, I'm going to leave that with you. I'm getting really hungry. I'm going to go have a good dinner, and I will, you know, what I'm going to do, I don't have time to, you know, do highlight videos every day. So what we'll do is at the end of each week, you know, we'll put, I'll do like individual, I'll do a summary video of the trades we took and how the track record is unfolding live in real time, because we're going to keep a live real-time track record. And, you know, when I have time, I'll update those. Or maybe tomorrow morning, for example, if I have 5 minutes, I'll do a quick recap of this day and upload it and, you know, see what we lost with commissions and whatever. And we'll just keep it going day by day. So if that sounds good to you guys, that's the way I want to do it for now. And I'm going to go eat some dinner. I'm going to have some good food. This could drop. And if it does, so be it. It's getting a bit late for me. So take care, you guys. Have a good rest of the day. And thanks for joining me. I enjoyed being here. Challenging day, but I think we did well. All right. Take care. Bye. Sounds good. Thanks, Steven. See ya. Bye.